Okay, see this. But these are the 50 top questions, mighty 50 questions, and these questions based on my judgment over the past exams I have given, covering the overall syllabus. In the 50 questions vandu or standard, okay, but it does not mean these 50 questions alone is sufficient, but you should be thorough with these 50 questions minimum. Okay, say this. Question number 1, page number 241. Sundar is HRD head of Infosys for the year ending March 31st, 2021. CTC, CTC means what? Cost to company of Sundar as per employment agreement is as follows. Salary 2 lakh per month, residential accommodation 6 lakhs, conveyance facility 25,000, cost to company 33 lakhs. Ayya, this is GST. Okay, salary, conveyance, etc. Don't think income tax and apply income tax provisions. Okay, this is GST. On January 1, 2021, Infosys gifts a new car to Sundar worth 12 lakhs. Gift of the car is not covered by CTC as well as employment agreement. Means that gift they have not given in the employment agreement. Okay, and even not part of CTC. Means separately they gave it as a gift. Appo idu perquisite illa. Gift. Ide car vandu if they have included in the employment agreement, illa, include in the employment agreement, then what it will be? Who more than 50,000 idella income tax yaar ketta? So I am asking you, is it perquisite or not? Yes, perquisite. It is perquisite. If it is perquisite, it comes under salary. Salary means not a supply, no GST. Got it? Understood? So that's why they gave it clearly that car is not covered by the CTC as well as employment agreement. If the car is covered by CTC or employment agreement, then it is treated as a perquisite, and perquisite forms part of salary. Salary is excluded from supply. Why salary is excluded from supply? Course, furtherance, business, like that you write. Clearly tell yaar. Enga kuduthirukanga? Section 7, subsection 2, read with schedule 3. What is 7 subsection 2? Exclusion from supply. Whenever you are writing 7 subsection 2, at least 7 remember pa. Okay. 7 subsection 1 the inclusions, 7 subsection 2 is exclusions. 7 subsection 2 read with schedule 3 of CGST Act. Okay. There are few activities which are excluded from supply. And excluded from supply in eludadinga. Write it as neither supply of goods nor supply of services. That is a correct phrase you need to write. Okay. What is neither supply of goods nor supply of services? Services by employee to employer in the course of employment is neither supply of goods nor supply of services. Got it? That's right. Because it is excluded from supply and it will not be chargeable to GST. Next pa. Sundar owns a commercial flat. He has given it on rent to Infosys. Monthly rent being 3 lakhs. Discuss whether GST is applicable. Determine the amount of GST liability. Assume that GST rate is 28% for car and 18% for others. First, when you are commenting upon GST applicability, what is the first aspect we need to check? Is it supply or not a supply? Okay va? Ippume exam la there won't be transactions which you know. There will be new transactions. Correct? If same question is repeated, then almost everyone will be CA. Yes, correct. So, but they will not repeat. They will give always new type of transactions. That too thanks to AI. Now it is furthermore easy to create the transactions. Correct. What you should see? who is the supplier, who is the recipient, what is the transaction, is it supply or not. Okay, what is the first amount? Salary. For that salary, who is supplier, who is recipient? Employee is supplier. Who is paying money? Who is paying money? The one who pay money is the recipient. Okay, so who is the recipient? Employer. Who is the supplier? Employee. Means Sundar is the supplier. Got it? Sundar is the supplier and his employer Infosys is the recipient. Okay, va? And is it covered under supply or excluded from supply? First check exclusion from supply. Is it excluded from supply anywhere? Yes, where? Just now you told. Services by employee to employer in the course of employment is neither supply of goods nor supply of service. Consequently, this 24 lakhs is supply or not a supply? Not a supply. So GST payable shall not arise. But taxable, exempted, RCM, FCM, all these things you don't see. Just write not a supply and GST not payable. Okay. So therefore no GST on this. Clear? Because I have asked, what is the treatment of salary received? Taxability of salary received. Supply of employment service by Sundar to Infosys are out of the scope of supply. 7 subsection to Red Bit Schedule 3. Thus it will not attract any GST liability. Got it? Next. But salary can be in cash or in kind. Correct? Perquisites and all we are adding now. So Sundar has received his remuneration or salary in cash as well as in kind or facility. None of these will attract GST in the hands of the employee. Not only salary, even residential accommodation which he received and even conveyance facility what he received. None of this means entire 33 lakhs no GST. Why? All these are part and parcel of salary. Allowances you will add to salary. Any perks you get you add to the salary due to that reason. Is it clear? Means not only 24 lakhs, even 6 lakhs and 3 lakhs. So entire 33 lakhs is not a supply. Understood? Next. Next one. Salary completed. What is the next one that they are asking? Rent received on account of renting of commercial flat by Sundar to Infosys. In case of renting of commercial flat, who is the supplier? Sundar. Who is the recipient? Infosys. What is the activity? Renting of commercial flat. Is it excluded from supply anywhere? No. So what are the activities which are excluded from supply? Spiraled. List of activities which are excluded from supply is spiraled. Yes, for sovereign functions. What are sovereign functions? Panchayat, municipality, then liquor license. There are 3 activities. There are 3 activities, sovereign functions, panchayat activities, municipality activities, including liquor license granted by state government. It is in page number 8. Next, P, post. What post? Government post, constitutional post, nominated post. I, insurance services jointly supplied, that is co-insurance services, provided lead insurer pay GST on the gross premium. Then R, reinsurance commission. So reinsurer getting, that is insurer getting commission from reinsurance, provided the reinsurer pay GST on the gross premium. We have that question also, we will discuss that. Then actionable claim other than specified actionable claim. What are the specified actionable claims? HC block, that is only covered under supply, others are excluded from supply. What is HC block? H for horse racing, C for casino, B for betting, G for L for lottery, O for online money gaming, and G for gambling. Then L, legal fees. Legal fee collected by court or tribunal. Then another L, land sale, including sale of immobile property. Who is selling the immobile property? Anyone? Anyone? Land illa immobile property. What is that? Building. Land always excluded. Building is also excluded, provided entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Full money they should get after completion certificate. Okay. Then E, employee to employer in the course of employment. That is our current discussion. Then death related. D for death related. What is that? Funeral, burial, crematorium, mortuary, including transportation of deceased. Now, what is the activity which I asked you? Whether renting of property, commercial property, anywhere in this spiraled? No. So now check inclusions. Exclusion it is not there. So I check the inclusion. What is the first thing that you need to see? 7.1a. Any activity for a consideration in the course or furtherance of business. What is the activity? Renting of commercial flat. For consideration? Yes. In the course or furtherance of business? Yes. Yes. Why? Because he is renting. That's an activity, continuing activity. And therefore, it will come under commerce. Business la trade, manufacture, commerce. So, renting is a service sector. So, commerce, renting, transportation, warehouse, banking, insurance, all these are commerce. So, in business definition, trade, commerce, manufacture, everything is there. So, renting is in the course or furtherance of business. Supplier, not a supplier. Supply, 7.1a. First adu. Second. Is it anywhere in the exemption? For commercial property, any exemption is there? Yes. What exemption? Is 90 days, huh? No. So, not exempted means taxable. Are you understanding? I told you only one exemption for commercial property. What is that? Accommodation for a minimum period of 90 days subject to maximum 20,000 rupees per month per person. Correct? So, therefore, it will be covered under exemption? No. So, it will be taxable. Okay. And commercial property wherever taxable. What is the taxability? Who will pay GST? They did not ask. In the question they did not ask. But I am asking you, who will pay GST? If supplier is unregistered and recipient is registered and not opting for composition scheme, then it is RCM. Otherwise, it will be FCM. But that data is not asked in the question. If it is asked in the question, then they should have given the data also. Okay, Vapa? So, see this. Taxability of rent received. Transaction of renting of service by Sundar to Infosys falls within the scope of supply, 7.1a. And thus it will attract GST liability. So, here the rate of GST is given as 18% for others. So, therefore, GST at the rate of 18% is payable. But they are not asking who is payable. They are asking GST applicability. If they are asking who is payable, then apply that RCM conditions and check. Okay, va? Next, third, residential accommodation conveyance facility. Already we discussed. What is the treatment of that? Same, that is also part and parcel of employment. Say this. Taxability of residential accommodation conveyance facility. It will not attract any GST liability. Why? Because it is part of employment contract. Part of employment contract. So, it will come under salary, that is services by employee to employer in the course of employment. How you know it is part of employment contract? Because it is given as CTC, cost to company, means it will be included in the employment contract. Then last, gift of car by Infosys to Sundar. Who is supplier, who is recipient? Infosys is the supplier. A car given as gift. Sundar giving it to Infosys. Then who gives it to whom? Infosys gift car to Sundar. So, Infosys is the supplier. and Sundar is the recipient. Is it service by employee to employer? No, it is not that. When it will become service by employee to employer? If the car is in the employment contract. Okay, va. If car வந்து employment contract குள்ள include பண்ணிருந்தா, then it will be coming under services by employee to employer. But it is not that. So which means separately it is given. So gift given by employer to employee. For gift, do we have any provision? Yes, what is that? If gift is given by employer to employee and the value of gift does not exceed 50,000 per annum per employee, then it is not a supply. So it is where we need to check this. We need to check this under employee to employer or employer to employee. Employer to employee. I gave two charts related to this. Employer-employee transaction, page number 10. Page number 10 in revised book. GST implications on employer-employee relationship. First we need to see supply by employee to employer. Employee to employer. Employee to employer. Okay, va? Only services, no goods. In the course of employment, it is excluded from supply. That is that salary. First point, salary we saw na. In the course of employment, by employee to employer, it is excluded from supply. Not in the course of employment. If it is not in the course of employment, then we need to check for 7(1)(a). That also we saw. Commercial flat given by Sundar to Infosys. Is it in the course of employment or not in the course of employment? Not in the course of employment. So it will become, is it in the course or furtherance of business? Yes, for consideration, that is 7(1)(a). We applied. Next. Suppose if it is without consideration or not in the course or furtherance of business, not a supply. Appo ye rent வந்து supply 7(1)(a) because it is in the for a consideration in the course or furtherance of business. That's why we have written that rent as rent received by Sundar as supply under 7(1)(a). Next, supply by employer to employee. Employer to employee. What is employer giving to employee? Verum kara, conveyance facility, accommodation facility, correct? But accommodation facility, conveyance facility, free or he is collecting something, Infosys collecting anything from Sundar? Check the question pa. எங்காவது questionல Infosys collected some money for the conveyance facility or accommodation facility like that mentioned? No, means for consideration or without consideration? Without consideration. But is it covered under salary offer document or not? Yes. So it will become perquisite. So that's why it is not a supply, because it will come under employee to employer in the course of employment. Okay. Suppose on the conveyance facility ko, accommodation facility ko, if they collect some money, then for that conveyance facility or accommodation facility, some nominal amount they collected. Who collected? Employer collected. Like that, if it is given, Infosys collected some amount from the Sundar, like that if they have given, then what it would be? That will become supply under 7(1)(a) for consideration. Okay. Next, now we are giving gift. What is the difference between gift and perquisite? Not mentioned in the offer document. For that car, did they mention? No. So therefore it is a gift. Okay. For gift of car by employer to employee, what is it we need to check? See the value of the gift. If it does not exceed 50,000 per annum per employee, not a supply. If the value of gift exceed 50,000 per annum per employee, then entirely it will become supply under 7(1)(c). Correct? Now check the value of the car. More than. So therefore entirely it will become supply 7(1)(c) and GST will be applicable. Purida? That question is literally application of these two charts. Okay. And So gift of car, though Infosys has not charged anything from Sundar, they have not charged, but still it will fall under the scope of supply. Where? 71C read with schedule 1. What is 71C? List of activities which are treated as supply even though without consideration. D, R, I, P. D for disposal of business asset on which IT is away. Related party transaction including transaction between distinct person. Import of services from whom? Related person or another establishment located outside India. Principal agent transactions. Okay. So therefore, this 71C read with schedule 1. Further, the value of the car being in excess of 50,000, such gift will attract GST. What is the rate given for car? 28%. So the 28% will be taken on the full value of the car. Understood? So this is one question related to that employee to employer, employer to employee. Okay. Like this, for every question we will refer to the concept in the revised book and we will discuss. At least this concept you should be thorough with. Okay, va? Whichever concept we are discussing like that, you know, you put a tick or star, etc. That is very, very important areas. Okay. So the second question is related to the concept of reinsurance and co-insurance. Look into the co-insurance and reinsurance concept that is excluded from supply. We have few activities which are excluded from supply, that is spiraled. In that exclusion from supply, we have 2 points. One is co-insurance services. I for co-insurance services, where the lead insurer will pay GST on the gross premium. And in case of reinsurance, the reinsurance commission is excluded from supply if the reinsurer pays GST on the gross premium. What is it about? Look into the next page, page number 9 I have given. There are 3 insurance companies, ICICI Lombard, Oriental Insurance and Bajaj Allianz. These 3 insurance companies together provides co-insurance services to Globus Limited, for which Globus Limited will pay premium, but premium they are not dividing and paying to all the 3 insurance companies. Out of these 3 insurance companies, with one insurance company they are giving. So Globus Limited has given 10 lakhs to the lead insurer, and the lead insurer is ICICI Lombard Insurance. Now what lead insurer is doing? In turn, sharing the 2 lakhs and 3 lakhs with Oriental Insurance Company and Bajaj Allianz Insurance Company. These are the facts of the case. Now, what does the provision says? If lead insurer pay GST on gross premium, who is the lead insurer here? ICICI Lombard. If they pay GST on the gross premium, what is the gross premium? 10 lakhs. Then out of the 10 lakhs on which tax is already paid, 2 lakhs and 3 lakhs is received by Oriental Insurance and Bajaj Allianz. What is the treatment of that? That is excluded from supply. Understood? So if the lead insurer pay GST on gross premium, the share of premium received by the other 2 insurers are excluded from supply. Sorry. Suppose if the lead insurer is not paying GST on gross premium, then if the lead insurer is not paying, how much they retained? How much they retained? 10 lakh, 3 and 2 gone. What is the money that they retained? Fine. So if they pay GST on 5 lakhs, then what? Then 2 lakhs and 3 lakhs received by Bajaj Allianz and Oriental Insurance will be covered under supply. Simple logic, Dampa. If the lead insurer pay GST on entire premium, already GST has been paid. So again 2 lakhs, 3 lakhs, why they need to pay GST? They don't have to pay GST. Suppose if the lead insurer is paying GST only on 5 lakhs, on remaining 5 lakhs no GST na, that this Oriental Insurance and Bajaj Allianz will pay GST. That is the logic behind this. Is it clear? Then in case of co-insurance service, if lead insurer pay GST on total premium such premium shared with co-insurer is not a supply. If ICICI Lombard paid GST on rupees 10 lakhs, then the premium collected by Oriental and Bajaj Allianz is not chargeable to GST. However, if ICICI Lombard paid GST on 5 lakhs, that is premium retained, then the premium collected by Oriental and Bajaj Allianz is chargeable to GST. Okay. So now, second point, reinsurance commission if reinsurer paid GST on gross premium. We will see for that. See the next illustration. ACO Insurance and Ergo Insurance and Adani Industries. There are three parties. Ergo Insurance provides insurance service to Adani for which they get 5 lakhs. That is covered under supply. We don't have any issue. This transaction is not what we are discussing. Now, Ergo Insurance gives reinsurance, that is already they gave insurance service. Insurance of insurance contract is known as reinsurance. Means if anything happens to Adani Industries, Ergo has to pay money. So they mitigate that risk by taking reinsurance from another insurance company. So Ergo Insurance takes reinsurance from ACO for which they paid 2 lakhs. Again, this is covered under supply. We are not discussing about that. This ACO Insurance company gives a commission to Ergo because Ergo is bringing business to ACO. ACO Insurance, if they are getting 2 lakhs, it's only because of Ergo Insurance. So usually in insurance industry there is a commission model. So ACO Insurance gives commission to Ergo, that is 20,000, which means effectively how much Ergo will pay to ACO? 1,80,000. But if ACO pays GST on 2 lakhs, sir, how much they received, sir? 1,80,000. But if they pay GST on gross premium, what is the gross premium? 2 lakhs, then whatever 20,000 rupees that is earned by Ergo is earning na. How they are earning? Ayya, now on the 2 lakhs I am giving. You give me 20,000. Effectively 1,80,000. So instead I am giving you 1,80,000. Even then you paid GST on what? 2 lakhs. You are ACO. You paid GST on 2 lakhs. Now I am earning 20,000 commission na. Covered under supply or excluded from supply? Excluded from supply because already you paid the GST. Suppose if you pay GST on 1,80,000, then 20,000 earned by me will be covered under supply. Reinsurance commission retained by insurer for service provided to reinsurer is not a supply. If ACO Insurance pays GST on 2 lakhs, even though they got 1,80,000, then commission of 20 retained by Ergo is not chargeable to GST. However, if ACO Insurance company paid GST on 1,80,000, then commission of 20,000 retained by Ergo is chargeable to GST. Now, say this question is based on that. Question number 2. ABC Insurance Limited, a registered insurer in Maharashtra, is engaged in providing insurance services. During the current financial year, the company entered into the following transactions. So ABC Insurance Limited is the company and they are in Maharashtra. ABC Insurance Limited enters into a co-insurance arrangement with XYZ. So ABC is one insurance company, XYZ is another insurance company, and they both made a co-insurance where ABC Insurance is the lead insurer. Out of this co-insurance contract, who is the main insurer? ABC. The insured means to whom they are giving the insurance. The insured, Gyati Industries, pays a total premium of 50 lakhs. What is the total premium? 50 lakhs. To whom they will pay that 50 lakhs? ABC. And what ABC will do? Will they retain entire 50 lakhs? No, they have to give some money to XYZ. No, XYZ is also one of the insurer na. Sir, ABC and XYZ are two insurance companies, sir. Together they provide the insurance service to Gyati Industries. So Gyati Industries first paid 50 lakhs to ABC. Can the ABC retain entire 50 lakhs? No. They have to share some money with XYZ. How much money they are sharing? Which is apportioned by lead insurer ABC Limited between itself and XYZ in the ratio of up 60% of 50 lakhs, 30 lakhs will go to ABC, 20 lakhs will go to XYZ for the insurance service jointly supplied by them to Gyati Industries. Clear? Now, what happened? ABC Insurance Limited agrees to discharge the entire GST liability on the full amount of premium received from Gyati. How much they received? But how much is going to their pocket? But if they pay GST on 50 lakhs, they have agreed, correct? They have agreed to pay GST on 50 lakhs. Now, what is the treatment of 20 lakhs received by XYZ is the answer. Based on the provisions, whether the following activities amount to supply apportionment of co-insurance premium by ABC to XYZ for the insurance service jointly supplied. What is your answer? Covered under supplier, excluded from supplier, excluded from supply, because lead insurer pay GST on gross premium. How to present the answer? How to write the answer? We know the answer, but we need to present the answer. See, if you are losing marks, the first reason is because of the mistakes. Second reason is because of your presentation. So when you are doing the presentation, ensure that you are quoting the provision properly. Okay. So what is the provision that you need to quote as per section 7 subsection 2 read with schedule 3 of CGST Act. What? There you will stop. Thereafter, services provided by co-insurer is excluded from supply, not exempted, is excluded from supply, provided lead insurer pays GST on the gross premium. Clear? Services provided by co-insurer is excluded from supply, provided, condition, lead insurer pay GST on gross premium. That you will write. Next, in the present case, lead insurer ABC Insurance Limited received 50 lakhs and paid GST on that 50 lakhs. Okay. What is it? 50 lakhs gross premium, and 20 lakhs shared by ABC with XYZ is excluded from supply, as ABC paid GST on the gross premium. Got it? This is what you need to write. Same ditto, sir. No, not necessary ditto. You change the sentence, it's okay. Sentence formation is not the problem, but you should ensure that whatever is there, meaning is being conveyed. The meaning should be conveyed. Sentence formation, fine, but the meaning should be conveyed to the extent possible. Don't dilute the meaning. So what you should do is that when they are reading, you write once and you read what you have written. Then you will know the reality as to when you see what you have written. If you feel like spitting, then it is not correct. Correct? So konjam tuppra mari irukku illa maathano. So change it. So change the way you are writing. So that's how you should improve. You got it? If I tell you how to write, you will write that and you are by hearting it. Don't by heart. If you by heart for this question, answer okay. What about some other question? You got it? So that writing practice is required for you. Make a habit that you are writing at least some question on a daily basis without seeing the answer. Okay? Then next, second part. You understood the first part of the question? So see the way in which it is presented. By the RTP question pa. This is your RTP question. As per Para 9 of Schedule 3, para and all not required, Schedule 3, 7 subsection 2 read with Schedule 3. Activity of apportionment of co-insurance premium by lead insurer to the co-insurer for the insurance service jointly supplied by the lead insurer and co-insurer to the insured is neither supply of goods nor supply of services. That I asked you to simplify. What is that I told you? Services provided by co-insurer to the insured is excluded from supply, or is neither supply of goods nor supply of services. Provided, okay, provided when lead insurer has paid GST on the gross premium, correct? Has to pay GST on the full premium amount paid by the insured. So gross premium means what? Full amount paid by the insured. Okay. In the present case, Gyati Industries paid GST on 50 lakhs, correct? So therefore, the co-insurer XYZ, that is whatever money they received from Gyati Industries, ABC paid GST on full amount. So the co-insurer XYZ does not pay GST on its share of the premium separately. Got it? So provision and discussion or inference. Okay. If you have, that will be sufficient. Then B. So second part, a large industrial plant needs an insurance worth 500 crore. It approaches ABC Insurance Limited for the same. However, since ABC Insurance Limited is unable to underwrite the entire risk alone, it enters into a reinsurance agreement with a reinsurer. So industrial plant first, they paid premium how much? 500 crores. Okay, va? Always when you read the question, don't read fully. Stop 1 line, 2 lines. You read again and again what they are trying to convey. Don't jump. So because you need to understand the question first. So one industrial plant, they need insurance worth 500 crore. So they approached one insurance company. Who is that insurance company? ABC. But ABC is unable to underwrite the entire risk alone, as it enters into a reinsurance agreement with reinsurer PQR. Co-insurance ko reinsurance ko enna difference? What is the difference pa? Co-insurance is in the same level. Group of insurance companies provide the service, that is co-insurance. Reinsurance is first one insurance company will provide, then that insurance company will take reinsurance from another insurance company. Both cases they will not retain full premium. So the modus operandi will change. In the previous case, together all three companies they gave. But ICICI is not retaining full amount, they in turn share with others. Same way here also, first Ergo will provide, thereafter in turn they make a separate contract. Got it? Here it is only one contract, here it is two contracts. Understood the difference? But both cases they are not going to retain full. Here they received 10 lakhs, will they retain 10 lakhs? No. Here they received 5 lakhs, will they retain 5 lakhs? No, they in turn share. Got it? Now, so here ABC is going to share how much with the PQR? The insurer ABC pays a reinsurance premium of 20 lakhs to PQR. How much ABC received? 50 lakhs. Thereafter what they did? 20 lakhs they gave it to PQR. This allows ABC Insurance to manage its risk and financial exposure. While paying this amount to PQR Insurance, ABC Insurance deducted ceding commission of 1 lakh. How much they deducted their commission? The PQR 20 lakhs worth of business ABC is giving, then ABC should get a commission na. So how much is the commission? 1 lakh. They deducted 1 lakh which it charged for services it provides to PQR. PQR Insurance pay GST on the gross reinsurance premium including the ceding commission. So how much PQR received? 19. 20 minus 1, 19. But they are paying GST on See there, they are paying GST on gross including seeding commission, means 20 lakhs. They are paying GST on 20 lakhs. Now what is your answer? Whether ABC is required to pay GST on 1 lakh. They are getting a commission 1 lakh. No. Why? Because PQR paid GST on the gross premium. Okay. So how will you write it? As per section 7 subsection 2 read with schedule 3. Services provided by insurer to reinsurer against a commission is excluded from supply. Ayya, inga main insurer vandu reinsurer ku service kudukuran, for which only he is getting 1 lakh. Okay va? So insurer providing services to reinsurer against a commission is excluded from supply, provided the reinsurer pays GST on the gross premium received, that is before deducting the commission. Okay. In the present case, PQR is paying GST on 20 lakhs. PQR is paying GST on 20 lakhs. So the money received by ABC of rupees 1 lakh is excluded from supply. Got it? That is excluded from supply. That is what we need to write. Say this. As per para 10 of schedule 3, service by insurer, okay, to reinsurer, for which ceding commission or reinsurance commission is deducted from reinsurance premium paid by insurer to reinsurer, is neither supply of goods nor supply of services, subject to the condition that CGST, SGST and integrated tax is paid by the reinsurer on the gross premium payable by insurer to reinsurer inclusive of commission. Okay. So therefore, reinsurer is liable to pay GST on the gross insurance premium inclusive of ceding commission, and 1 lakh received by ABC is not covered under supply. Okay. So therefore, you just follow the way in which you need to present the answer, you will get it. Okay. Now see this question. Based on this question and principal agent transaction, this concept, question number 3 is there. You check that question number 3. Charm Limited, registered under GST in the state of Jharkhand, manufactures cosmetic products and appointed Mr. Handsome of Mumbai, who is registered under GST in the state of Maharashtra, as their Delcrader agent to sell their products. Being a Delcrader agent, he agrees to raise invoice in his own name. Who is raising invoice? Delcrader agent is raising invoice in his name. If agent raises invoice in their name, means the agent is acting on behalf of principal. Okay. And we have one point. If agent is acting on behalf of principal, when the principal is sending the goods to the agent, that will become supply under 7(1)(c). But now agent, I am raising invoice in my name. Now I am acting on behalf of principal. So principal, while sending the goods to me, that will become supply 7(1)(c) to sell their products. Being a DCA, he agrees to raise invoice in his own name and guarantees for the realization of payment from customers to Charm Limited. Okay. Charm Limited is principal, and this person Handsome is agent. Mr. Handsome is Delcrader agent. In order to realize the payment from customers on time, he extends short-term transaction based loan to them and discharge interest for the same. Means they will be recovering the interest. Apart from sale price, they will also get interest. Mr. Handsome provides you the following details of the transaction carried out during the month of March. Mr. Handsome is collecting, selling goods in the DCA capacity. It is intrastate 2,80,000. interest earned from above customer for short-term credit facility provided for timely payment of dues intrastate transaction 20,000. Commission bill raised on Charm Limited. They are getting commission also. First they are selling goods, then they are getting interest, plus they are also getting commission from Charm Limited principal for acting as a agent. So that is interstate in respect of DCA services. This outward supply. Next, inward supply. Interstate supply of goods received from Charm Limited. Since being a delivery agent, no consideration was paid and 2 lakhs. Second inward supply. Received training in marketing and distribution from Charm Limited as per DCA agreement free of cost. Company charges 75,000 for such training. So this 2 lakhs 75,000 is the value. Value determined under rules. When transaction value not applicable, we need to determine value under rules. There is no consideration. No consideration means transaction value not applicable, but it may become supply. It may become supply. Whenever it becomes supply, we need to take the value as per rules, and the value as per rules is 2 lakhs and 75,000. Now, applicable rate of GST, CGST 9%, SGST 9% and IGST 18%. All necessary conditions for availment of ITC fulfilled. You are required to compute gross GST liability and eligible ITC. Now, this question is visible to everyone? Super. Close your book. Close your book. Take your notebook. I need 3 computations. Computation 1, what is their gross liability? Computation 2, what is their input tax credit? Computation 3, what is their net GST payable? 3 statements I need. 3 statements. Listen everyone. Gross GST, ITC, net GST. Okay, va? And that too not in a single number. Separated. Particulars, CGST, SGST, IGST, because there is both intra and inter. Try. Exactly 10 minutes time for you. என்ன பண்ணணுமோ புரிஞ்சுதாப்பா? என்ன பண்ணணும்? Gross GST payable ஒரு statement, ITC ஒரு statement, then net GST payable. Okay வா? முடியுமா? Try. Everyone completed gross GST liability? How much? 27,000, 27,000, 5,400. Okay, proceed. So first statement number 1 is gross GST payable. In that gross GST payable, particular CGST, SGST, IGST. First transaction. Sale of goods in DCA capacity. Invoice they raised. Means they have to pay GST on that goods. So you have to mention that as the invoice is raised by del creditor agent, it is supply under 71A to the agent and GST payable. So what is the value? 2,80,000 and it is given as intrastate. So we need to take 2,80,000 into 9% and 9% in CGST SGST column. Second, interest earned from customers. Interest. So for that we need to write as per CBSE circular, as the invoice is raised by the del creditor agent, that interest is considered as interest on account of delay in receipt of consideration and included in the value. So main transaction taxable, interest also taxable. 20,000 at what rate? Rate applicable to main transaction. Sir, this intra or inter? Kuduklana sir? Intra. In a main transaction intra illiya. So this interest is also intra. Okay. So therefore 20,000 same way. 20,000 into 9%, 9%. 1,800, 1,800. Over. Then next, commission. Commission received will become supply under 71A. So because I am getting commission for doing the agent service, and that value will be 30,000 and it is given as interstate. So into 18%, 5,400. So you will get the first statement. Gross GST payable 27,000, 27,000 and 5,400, and the note you have to mention. First one is agent supply 71A, second one that CBIC circular for interest, third one commission is supply under 71A. Okay. Next, second statement. What is the second statement? Computation of ITC available. In that ITC available, listen carefully. Now del creditor agent is selling, correct? Outward supply we saw. Now what is the inward supply of del creditor agent? As they are agent acting on behalf of principal, when principal is sending the goods to the agent, for principal it is supply 71C even though without consideration. Principal agent transaction in DRIP, P is what? Principal agent transaction, where agent is acting on behalf of principal. So in this case, as agent is acting on behalf of principal, so therefore principal sending the goods to the agent will be supply under 71C, but no consideration. So transaction value not applicable, but the value given in the question is 2 lakhs, that should be taken. And on this, can they take ITC? Yes, they can take ITC. So why they can take ITC on this 2 lakh rupees? It is not blocked credit. In the codes are furtherance of business, so they can take ITC. For every ITC, same explanation. If ITC available, why available? Not in the blocked credit, and it is used in the codes or furtherance of business, therefore they can take ITC. Okay. So 2 lakhs into what? 18. Why? Interstate. So 2 lakh into 18 is 36,000. Then received training in marketing and distribution from Charm Limited as per DCA agreement. Is it also supply under 71C? Fourth point வந்து 71C. Principal goods அனுப்புறான், அது supply under 71C. அதே மாதிரி principal வந்து services கொடுக்குறாங்க without consideration. Is it supply under 71C? Why? 71C, principal agent transaction is only for goods. So principal agent transaction is only for goods, not for services. So you can see here section 71C DRIP, the principal agent transaction should be only for goods, not for services. Is it clear? Not for services, only for goods. So that's why here it is not a supply. As it is not a supply, there is no question of ITC. You got it? So therefore that is what we need to write. Note 4, note 5. 5 note, you see, principal agent transaction is only with respect to goods but not with respect to service. Therefore services provided by Charm Limited to Handsome without consideration is not a supply and consequently not chargeable to GST. Okay, understood? And net GST payable, what is the credit that we have? Only IGST credit. IGST credit should be first utilized for payment of IGST. How much IGST? 5,400. So 36,000 minus 5,400. How much? 30,600. That can be given equally for CGST, SGST. So net GST payable 11,700 and 11,700. Everyone got this? Yes? How many of you did not do or do it wrongly? Okay, you kept it under CGST, SGST only. Okay. Tangal? Okay. Anyone? What mistake you did? Okay, fine. So you consider it as supply and you took the ITC. Same. Okay. So principal agent transaction, that is a trap point. Principal agent transaction 71C is only with respect to goods, not with respect to services. Okay. Next. So this is related to the exemptions. Exemption for government services. Okay. Government services and other points we have, say this. X Limited is located in Ludhiana. Question number 4. X Limited is located in Ludhiana. It is GST registered with aggregate turnover 20 crores. It is in the business of manufacture of cast glass. It has received the following services from different persons during December 2021. Discuss the applicability of reverse charge to the above transactions. RCM pa. We are checking RCM. Now, don't see the answer in the next page, please. You answer. First case, service by Department of Post by way of express parcel post, value of service 40,000. FCM or RCM? Why? Government service to business entities RCM, no. This government service, this government service, government service, Department of Post and a private, Department of Post, Post is government only, providing service to X Limited. Okay, so you said taxable. I agree. Is there any exemption for Department of Post? Yes. What is the exemption for Department of Post? Postcard, inland letter, envelope less than 10 grams. 3 exemptions are there for Department of Post. Postcard, inland letter, envelope less than 10 grams. Other cases it will be taxable. It is not that. Correct? So therefore, express parcel post, speed post, idella taxable. Super. Now, government services to business entity is in Sir, CG, Go, Salads. Correct? Government service to business entities. Appi the government service to business entity dane. Why not RCM? Why not RCM? Because we have some cases where RCM is not applicable. So, coming back to this question, why it is not RCM? Because it is Department of Post. Department of Post, transportation of goods or passengers, railways, airport or port, and services by way of renting of immobile property to unregistered business entity will not be RCM. It will be always FCM. Okay. Second point. Transportation of goods, X Limited pays 1 lakh to Indian Railways. FCM or RCM? Yeah. Just now I said Indian Railways, always FCM. X Limited GST registered has taken a commercial property on rent from Punjab government for which company paid 2 lakhs. Renting of immobile property to unregistered business entity is FCM. Is unregistered business entity? No. So therefore it will be RCM. So first case FCM, second case FCM, third case RCM. Fourth case, X Limited has taken security services for factory complex from Mumbai government for which payment of 50,000 is made. Security services, is it there in that 5 points? Post, railways, transportation, airport or port, renting to unregistered business entity, is it in the 5? No. Upper government service to business entity will be RCM. Government service to business entity RCM pa. Exception 5 cases pa. Those 5 cases it will not be RCM, it will be FCM. Okay va? Is it covered under that 5 exception cases? No. Which means it will be RCM. Not security agency. This security agency la paakudadu. Government services la paakano. X Limited has taken security service from office. For office from task force security. Now don't see it under government service. See it under security agency service. For security agency service, what is the condition for RCM? Supplier should be. But see the supplier. Who is the supplier? Task Force Security Limited, body corporate. So therefore it will not be RCM. First condition itself not satisfied. First condition is supplier should be other than body corporate. but here supplier is body corporate. Is it clear? So that is what. See the answer once. First case RCM not applicable, second case RCM not applicable because it is not covered under RCM. Third case RCM is applicable, fourth case RCM is applicable, but fifth case not applicable because service provider, supplier of security service is body corporate. Understood? So see this question. The Resident Welfare Association, how much they are collecting? 8,500, which is more than 7,500. So entire 8,50,000 will be taxable. Electricity charges levied by State Electricity Board on the members of the Resident Welfare Association, the same was collected from members and remitted to the board. Actually, bill is in whose name? Members. Who paid? Association. Will it be included in the value or not included in the value? Levied by Electricity Board on the association in respect of electricity consumed for common use of lifts and lights in the common area. Bill was raised in the name of association. Association collected the said charges by apportioning them equally. On what basis? Actual basis. This is the crucial line. On actual basis. Then also will it be included or not included? Not included. Second point, bill is in the name of members. Association paid. Not at all included, whatever it may be. Third point, bill is in the name of association. Recovered it from the members, but on actual basis. That's why not included. If not, if that line actual basis is not given, then what you would have done? This 4 lakh we would have added to 8,50,000. Is it clear? This 4 lakh, if this line actual basis is not given, this 4 lakh we would have added to 8,50,000. Then proceeds from sale of entry tickets to a cultural program conducted by association in the park of Blue Heaven Housing Society. So whether we have any exemption for these entry tickets? No. There are few entry tickets which are exempted. So wildlife sanctuary, tiger reserve, zoo, national park, museum, protected monuments. It is not that. And it is not there in that 9 points also. Circus, award function, pageant, sporting event, dance performance, musical performance, concert, and then theatrical performance, and even planetarium. It's not there in that list. Due to that reason, these entry tickets will be taxable. This will be taxable. Proceeds from sale of space for advertisement in member directory. This is nowhere in the exemption list. Whatever is there in exemption is only exempted. Remaining cases it will be taxable. So sale of space for advertisement in member directory from members 1 lakh and non-members 2 lakhs. That is also taxable. We don't have any exemption. So what is the value of taxable service? So 8,50,000 plus 40,000 plus 3 lakhs. So that will be equal to 11,90,000, and you need to write the note that what is exempted, etc. and all. And circular also you need to give reference that association collect the charges on actual basis, electricity charges on actual basis. It will not be included in the value because they are deemed to be acting as a pure agent like that. Question number 6. This is related to settlement charges and gateway charges. Razor Online Private Limited, a company registered under GST in Maharashtra, is a payment aggregator and regulated by RBI. It facilitates digital payment for thousands of small merchants and e-commerce platforms. Razor Online receives customer payment through credit card, debit card and UPI, collects the funds in a escrow account and settle them to the merchants with RBI prescribed timeline. Means it is like a payment aggregator. So like Razor Pay, Phone Pay, they are also one of the payment aggregator. What they do is that they collect some charges, and at the same time they are also collecting payment gateway charges for providing the payment gateway services, and charges platform usage fee. Now see this, payment settlement, not payment gateway payment settlement for card transactions. Average transaction value 1,500 rupees per transaction. What is the answer for this fee collected? Taxable or exempted? Why exempted? Processing fees, transaction up to 2,000, card transaction, it will be exempted. Payment settlement, again settlement charges, UPI transactions. How much transaction amount? Up to 2,000 or beyond 2,000? Beyond 2,000, therefore it will be taxable. Up to 2,000 means you will write it as, not read as consideration or treated as subsidy, like that you will write. Okay. Then payment gateway charges. Should we check anything? No. Payment gateway charges, whatever the case may be, it will always be taxable. So therefore, how much is the value on which GST payable? 3 lakhs plus 3 lakh 60, 6 lakh 60 plus 2 lakh 40,000. So 6 lakh 60,000 plus 2 lakh 60,000, that will be 9 lakh 20,000. Correct? And 9 lakh 20,000 into 18%. 9 lakh 20,000 into 18%. So what is that? 1 lakh 65,600. This is the totaling error, but GST is correct only. 1 lakh 65,600, 9 lakh 20,000. And first you need to write the exemption. What is the exemption and what is the clarification, and based on that what is the value. Then next, look into question number 7. This is related to transportation services. For transportation services, we need to remember 3 charts. One is transportation of goods exemption, next transportation of passenger exemption, and GTA services. Coming back to this question, question number 7, determine the value of taxable service in respect of transportation services provided by Om Shri Transport Agency, a GTA. So they are basically a goods transport agency. Transportation of salt and food grains. Is salt and food grains given in the list of notified goods? Yes, therefore it is exempted. Consignment of books transport in single carriage. Is books given in the notified goods? No. So therefore it will be taxable. Color TV, taxable. And auto spares to A, an unregistered person. What is your answer? Unregistered individual. Mr. A means individual. If the recipient is individual, HUF, AJP, trust, and if they are unregistered and not having factory, it will be exempted. So therefore it will be exempted. Then transportation of military equipment. What is your answer? Is military equipment given in the notified goods? Yes, therefore it is exempted. Freight collected for transporting small consignment for person who paid 700 rupees for each consignment. Do we have any exemption for that? No. So therefore it is taxable. If you don't know something, it is taxable. Okay, va? Then transported goods of local authority who took registration only for deducting TDS. Third point, if they are registered only for deducting TDS, it will be exempted. So therefore what are the value of taxable supply? 10,000, 3,55,000 and 1,50,000. That is 5,15,000. They opted to pay GST under FCM. Irrelevant. Irrelevant. Whether they opted for FCM or RCM, for computing exemption it is irrelevant. Purida. But first exemption pa. After exemption only, who will pay GST? So this is a trap which they gave to confuse you. So first you need to check, is it exempted or taxable? Now say it is taxable. If it is taxable, then for GTA 2 options are there. Either they can pay or they can make recipient to pay. Is it clear? If they pay, they have 2 rates. What are the 2 rates for them? 18% with ITC, 5% without ITC. Means they cannot take. If I am GTA and I pay 5% under FCM, RCM lo ore rate, that is 5%. But GTA can opt for FCM na. If GTA opt for FCM, again 2 rates are there. 18% with ITC means what? You cannot take ITC if you receive service from me. No. GTA cannot take ITC on its inward supplies. What are the inward supplies of GTA? They will buy a truck or they will receive renting. They will receive any other services on which they cannot take ITC if it is 5%. If they pay 18%, they can take ITC. But you are my customer. I am GTA. I am charging you 18 or I am charging you 5%. Both you can take ITC. You don't have any problem. This with ITC or without ITC is only to the supplier. That is GTA, not to the recipient. Is it clear? So that is this. Next. Question number 8. Determine whether GST is payable in respect of each of the following independent services provided by the registered persons. Services to governmental authority. Services to government authority. Is there any exemption that we have? Yes. Services to government authority. Remember, there are some activities which are exempted. Services provided to government authority by way of slum improvement and upgradation. What is your answer? It's there in the list of 5 activities. Then fees of 20,000 charged from office staff for in-house personality development course conducted by Banarsidass College, providing education as a part of curriculum for obtaining qualification recognized by law. Is it service provided by educational institution or to educational institution? By. College is providing training to staff. So by. Okay. What is it we studied? Any service provided by educational institution to its students, faculty, staff. Here it is staff, therefore it will be exempted. First of all, is it educational institution? Yes. Category 2 educational institution. Education as a part of curriculum recognized by law. So that curriculum should be for obtaining a qualification recognized by law. So it's a category 2 education institution. So the service is exempted. Then next, bus fees of 2,000 per month collected from students by RPSD College, providing education as a part of curriculum for obtaining qualification recognized by law. Again, is it service by education institution or to education institution? By education institution. So therefore, it is collected from whom? Students. And any service, it need not be education service, bus fees also exempted. Any service provided by education institution to its students, faculty and staff will be exempted. Got it? What if it is to education institution? Transportation service to education institution, only category 1 is exempted, category 2 and 3 will be taxable. Okay. So this is service provided by education institution. Then next, housekeeping service provided by Buff Limited to Bloom Montessori School, a play school, for cleaning its playground and classroom for 30,000 per month. Is it service provided by educational institution or to educational institution? To educational institution means we need to check the second point. There are 2 exemptions first for education mainly. First one is by, the second one is to. In the 2, security and housekeeping within the premises. Is it security and housekeeping within the premises? Yes. Therefore, it will be exempted because it is for cleaning the playground and classrooms. Then, Grow Buds supply Gratitude Jot, an online educational journal. For supply of online educational journals, to which category institution is exempted? Category 2 only. But here it is to UKG class of Seeds Montessori School. So UKG means it is category 1. So it will be. So everything is exempted. That 5th point alone is not exempted. Therefore, supply of online journal to UKG class is not exempt from GST. Okay. So you need to write just the explanation under which point it will be covered. Next, question number 9. This is related to, so multiple exemptions. See the first point. Examine the taxability of supplies in the following independent cases in terms of relevant provisions of CGST Act. Brief reason should form part of your answer. Mr. Satya, a physiotherapist registered with recognized paramedics authority, provided service to Mr. Dayal for restoring mobility after his spine surgery and charged 10,000 rupees per month. What is your answer? Is it taxable or exempted? Exempted. Okay, super. If it is exempted, why is it exempted? Under which reason it is exempted? Services, healthcare services provided by clinical establishment or authorized medical practitioner or paramedics. Paramedics means those who assist the doctors, physiotherapist, nurse, lab technician. Their service is also exempted. Okay, va? Then second point. Measures Paustik Ahar provided service to Sisuraksha and Anganwadi by way of serving any food for 6,000 per month. Sisuraksha served food to students in Anganwadi under midday meal scheme. What is your answer? Is it service provided by education institution or to education institution? To education institution. For to education institution, what is exempted? Catering, transportation, catering, security and housekeeping. This is catering. Therefore, it will be exempted, fully exempted. Then 3. Fee charged by Passport Seva Kendra to Dada Export Limited for the issuance of passport to its employees to visit foreign countries for export business. There are certain exemptions. Fee charged by Passport Seva Kendra to Dada Exports Limited for issuance of passport to employees to visit foreign countries, exempted. Why? Fee for birth certificate, death certificate, driving license, visa, passport, there it will be covered. Now look into question number 10. So you need to answer this. Determine the taxability or otherwise of the following service provided by Indian Railways. First one. Why? Clockroom charges. Services provided by railways to individuals by way of clockroom charges is exempted. Next. Transportation of passengers in second class. Exempted. Only second class AC is taxable. Okay. And what is that you will write? Other than AC or first class is exempted. Then platform tickets sold to passengers. Same reason. First point. What is that? Platform ticket, clock room, waiting room. Renting of warehouse located in Bengaluru railway station to Paras traders registered in Chennai. For this, do we have any exemption? Idu vandu government dane. Railways is government only, no. Under railways we don't have exemption. Now other services, there also we don't have exemption. You know, the 13 point specific exemption, we don't have renting, and the first general exemption is not applicable in case of renting. So therefore it will be taxable. So first one is exempted, second one is exempted, third one is exempted, fourth one is taxable. Service of transportation of passenger in AC coach, taxable. Service of transportation of organic manure. See, organic manure, railways ko notified goods irka illiya? Yes, in that organic manure is there. See, the notified goods is applicable in case of railways, waterways, coastal waters and GTA. Therefore, it is exempted. Only two are taxable, 1,50,000 and 10 lakhs. 1,50,000 and 10 lakhs, 11,50,000, but they did not ask compute the value. Just they are asking us to determine the taxability or otherwise. So we need to comment on that, whether it is taxable or exempted. Next, say this. Bharuch Dahej Railway Company Limited, a special purpose vehicle, has been tasked with enhancing industrial connectivity in Gujarat. Okay, so many times when you see these companies and all, buy the shares of those companies. They are all created by railways for the purpose of funding, and using that funding they will be creating the infrastructure, and thereafter so some charges will be paid by the railways, that money will be given to the shareholders, investors. We are all investors, we will invest. Using that they will create the infrastructure, and throughout some 10 years, 15 years, money will be received, and usually it is a profitable project. All projects are profitable projects, there no loss, because whether Indian Railways is suffering loss or gain, they have to pay money to the infrastructure developer. You got it? So that's why these shares and all, usually it's like, you know, always premium shares only. There won't be like, it will not be usually sold, no intraday, nothing and all. These shares, lot of people will keep as a long-term investors. Okay, so this is like one company temporarily created. How the company will get money? They will sell shares, and from shares, from people, they will get the money. Using that they create the infrastructure. Okay, appo director railways ke nama panam kudukalame sir, correct, but railways, if you give money, how can they give ownership to you? Railways ownership and all you cannot take. Okay, already in Instagram lot of reels are coming that inside the railway station, sorry, inside train many things they are doing, and so that is they created one honeymoon setup and all inside platform, that ட்ரெயின். ஓகே, பார்க்கலையா? கூப்பே. ஸோ நான் அதெல்லாம் பார்க்கலப்பா, அந்த டெக்கரேஷன் பண்ண தான் பார்த்தேன். ஓகே, ஐயோ. தென் சாமி சார் தேஜஸ் அப்பப்போ வந்துடுறதுப்பா, நான் என்ன பண்றது, கண்ட்ரோல் பண்ண முடியல. Say this. So therefore they have created the company, and that company is called a special purpose vehicle, has been tasked with enhancing industrial connectivity in Gujarat by undertaking gauge conversion projects. During the month of December, the following transaction took place. Indian Railways used the converted broad gauge line for passenger and freight operations. BDRL charged Indian Railways 15 lakhs for the infrastructure use under the concession agreement. What is your answer? So services provided by BDRCL to Indian Railways for by way of giving infrastructure and collecting charges will be exempted. Correct? Second point. Indian Railways carried out maintenance services including task inspections and repair work for the converted line. The cost of these services was 6 lakhs. Exempted. Why? Maintenance services provided by Indian Railways to the infrastructure provider. Then BDRL leased commercial space at one of the railway station on the converted line to private logistic company. That is taxable. Ayya, SPV providing services to railways is only exempted, but here it is not to railways, it is to one private logistic company. That 8 lakhs will be taxable. The next, Indian Railways transported construction materials for BDRCL's ongoing infrastructure projects. The freight charges were 3 lakh rupees. Taxable. Why? Sir, we don't have any exemption for transporting the construction materials. Transporting the construction materials, where we have in the notified goods, construction material is not there now. Therefore, it will be taxable. Then, see this question number 12. State whether GST payable in the following cases. Provide explanation supporting your answer. Service provided by Government of India from a pollution consultant in Mumbai. Service pertain to management of pollution control in and around NCR. Consideration paid by Government of India is 12 lakh, out of which 3 lakh is reimbursed by Delhi government. So say this: services received by Government of India from a pollution consultant in Mumbai. Services provided to government. Correct? The government is not providing, government is receiving. Means we need to check it under services provided exemption. Services received by government means someone is providing it. What service? So pollution control. Therefore, is it given in the question that it is covered under Article 243 GRW of the Constitution? Given or not given? Not given means taxable. Taxable. Even though the pollution control may be the job of the government, but specifically what they should give, that it is covered under Article 243 GRW of the Constitution, like that it should be given, then only it is exempted. Not given, therefore it will be taxable. Then thereafter, Government of India recovered 3 lakh from Delhi government. What is your answer? First they paid 12 lakhs pa. In that 3 lakhs they received from Delhi government. Very good. Interdepartmental services, and that is exempted. We studied now specific exemption. Interdepartmental service. Read the answer once. As per section 11, read with notification 12 of 2017, pure service provided to government in relation to activities entrusted to government as per Article 243 GRW of the Constitution is exempted. In the present case, pollution consultancy is not falling under Constitution and the same is taxable. When Government of India 3 lakh received from Delhi government, the same is exempted under service provided by one department of government to another department of government, that is interdepartmental service. Purida. Then next second. Sir, majority of these questions are not past exam questions. These are all not tested in past exam. These are all probable areas. Okay. Then second, Kerala Industrial Development Corporation gives an industrial plot of land to X Limited on lease for a period of 85 years. Related to lease of land, do we have any exemptions? Yes, 2 exemptions are there for lease of land. Second point, and tell me whether it is exempted or taxable. Kerala Industrial Development Corporation, SIDCO, correct? Gives an industrial land, satisfied industrial land on lease for 85 years, long term lease. One time salami means upfront amount. Upfront amount 30 lakhs, taxable or exempted? Exempted. Annual lease rental 5 lakh, taxable. Okay, so that is this. So 30 lakhs is exempted, however annual lease rental 5 lakhs is taxable. And here remember the supplier can be either SIDCO, State Government Industrial Development Corporation, or entity in which government has invested greater than or equals to 20%. Write down. Second point over. Third one, Skill Bridge Private Limited signs a MOU with National Skill Development Corporation to act as an approved training partner. Related to this, we have one exemption in education services. So that is NSDC, National Skill Development Corporation, page number 49. National Skill Development Corporation, NSDC, or National Council for Vocational Education and Training. Below them, what they do is that they are the bodies which will regulate the skill courses in India. If there is any awarding body below them, awarding body approved by them, awarding body, what they do? They give the certificate. Assessment agency, so they will conduct the exam. Training body who prepare the curriculum. Training partner who will, training partner, what training partner will do? Will teach. Okay, so awarding body, assessment agency, training body or training partner, if they conduct any course, that money collected by them will be exempted. But they should be approved. They should be approved by whom? NSDC. NSDC or NCVET. Now read this. Skill Bridge Private Limited signs a MOU with National Skill Development Corporation to act as approved training partner. Training partner is there in the list. Yes, it's there in the list. Under Pradhana Mantri Kaushal Vikas Yojana, a scheme implemented by NSDC. It conducts training on retail sales associate skills aligned to NSQF level 4 and receive 50 lakh from NSDC for this purpose. However, they are not training body accredited. See, whether they are a training body or training partner, that will be exempted. Is it clear? Then next, Sure Life Insurance Limited, a registered general insurance company, contributes 50 lakhs towards motor vehicle insurance fund maintained by Government of India under section 164B of the Motor Vehicle Act. Related to this, also we have one exemption, Motor Vehicle Accident Fund. Under insurance services it is there. So page number 41, there are some group insurance funds: Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces and Motor Vehicle Accident Fund. So usually insurance companies will contribute some money towards the Motor Vehicle Accident Fund. From that Motor Vehicle Accident Fund, if any person dies out of accidents or if any person gets injury because of accident, government will release the compensation. You understood? Usually you would have seen that one accident, government will announce 10 lakhs as compensation. From where? Whose father's money they will bring? Okay, so they will be paying out of Motor Vehicle Accident Fund. From where the fund got created? Insurance company will pay. Why will insurance company pay? They are collecting insurance from us, called as motor vehicle insurance. In that some portion called as third party premium, they will contribute towards this fund. Our money only, they are giving it to us. You understood or not? Government is not something which will spend out of their pocket. It is for the people, of the people, by the people. Our money only they are giving to us, but in their photo. Got it? Under the name of CM's photo. Got it? Next. Now also same. No big change. Okay. No difference. That same. It is like same DMK, now TVK. I don't see any difference. Okay. Matram we made, we achieved. Okay. Then next. So I really don't understand why government will think that we did something great, because it is our money only. It will go from us to insurance company. Insurance company will pay it to the motor vehicle accident fund. Now the money collected in the motor vehicle accident fund is taxable or exempted. That is exempted. So that is this. See this. Sure Life Insurance Limited, a registered general insurance company, contributes 50 lakhs towards motor vehicle insurance fund maintained by Government of India. That will be exempted. That 50 lakhs is exempted. Contribution collected under motor vehicle insurance fund from insurance companies out of premium collected towards third party insurance is specifically covered under the exemption. Then next one, we have one very important point that you need to keep in mind, that section 9 subsection 5. Section 9(5), there are total 5 services through e-commerce operator. Liability to pay GST is on e-commerce operator. What are those 5 services? I for instant local delivery, H for housekeeping services, A for accommodation services, T for transportation of passengers in any motor vehicle, E for eating food in restaurant services. Okay. In these 5 cases, first 3 cases, supplier should be unregistered, then only it is covered under 9(5). Next, that is IHA, and T and E, transportation and eating food in restaurant, supplier may or may not be registered, but still it is covered under 9(5). 9(5) is not called as reverse charge. 9(5) is liability to pay GST on e-commerce operator. But how should they pay 9(5) liability? Using credit ledger, cash ledger, both credit and cash ledger. Only cash ledger. They cannot use the credit ledger for payment. But will they have ITC? Yes. Example, you take Swiggy, Zomato, etc. Do they have inward supplies? What are the inward supplies of Swiggy, Zomato? No, they are not buying food. They are not buying food. They are just doing the delivery of the food from the restaurant. So what is the inward supply? They are not buying food. Advertisement, very good. Next, T-shirts, correct. That bags. Next, app development, app maintenance, correct. All these are inward supplies. On which can they take ITC? Yes, but they cannot use the ITC for payment of GST under 9(5). Then do they have any other liability? Yes. What is the other liability? They supply food pa. For supply of food they should pay GST, correct. So that GST they have to pay by cash. Up in the ITC appdiye irukum illaya, that ITC will be there. What they can do with that ITC? They will have some other liability. That's what I am asking. What is that some other liability? They do delivery and collect delivery charges, correct, and they get commission for doing this, correct. So that is promotion, commission not for supplying food. Already they paid GST on that. Food already GST paid. Extra charges I am asking for. Did you order anything in Swiggy, Zomato? Platform fee like that is there. Rain charges like that they are collecting, correct. Handling charges like that they are collecting. So all these extra charges they have to pay GST. Even in Instamart they do delivery for which they collect some charges. On that they pay GST? No. For that GST ITC can be used. because that is their regular GST liability. But under 9(5), whatever liability they pay, they have to pay using only cash ledger. This question is related to that. Say this. Urban Stay Private Limited is an e-commerce operator facilitating short-term accommodation service through its platform, a notified service under section 9(5) of the CGST Act. In the month of April, it had the following transactions. So basically they are providing accommodation services. E-commerce operator is providing accommodation services. Booking charges for homestay provided by unregistered person through the platform. There is a hotel which is unregistered providing the accommodation service through this platform. Who will pay GST? E-commerce operator, because for accommodation service, if the supplier is not registered, it's covered under 9(5). So this is covered under 9(5) liability under section 9(5). Then platform usage fee and advertising space, on all these things they will pay normal liability, correct? So first case they will pay GST under section 9(5). Whereas in the next two cases they will pay GST normally, regular liability. Now they have some inward supplies, Google Ads and marketing services. Can they take ITC? Anywhere in the blocked credit used in the course or furtherance of business, so they can take ITC. Office rent, no blocked credit, rent is not blocked credit, they can take ITC. Laptop, they can take ITC. Food and beverages is blocked ITC. Food and beverages is blocked ITC. Can they take ITC? No. But inward supply, outward supply, same category, inward part of outward, then they can take. But we don't have any information relating to that. Under exceptional cases they can take, but we don't have the information of exception. So ITC not available. Cloud server subscription, yes, they can take ITC. We don't have any block credit. Now total 1 lakh, 70, 1 lakh 20, 60. 1 lakh plus 70 plus 1 lakh 20 plus 60 into 18%. How much? 50, 60? 63,000 is the ITC pa. 63,000 is the ITC. Now what is the liability they have? GST liability 9(5). 1 lakh 20,000. This liability 3 lakhs into 18%. 3 lakhs into 18%, 54,000. So together these two, 54,000. Now can we use 63 for payment of 54? Yes. So 63,000 minus 54,000 we can pay. Okay. Still we have 9,000. Can that 9,000 we use for 1 lakh 20? No. That we have to pay only using cash ledger. Means 9,000 will be carried forward. See here. First ITC 63. 9(5) liability 1 lakh 20 in cash only. And other liability, so total 54. They can pay 54 using ITC, but this 1 lakh 20 they have to pay only cash ledger, and balance ITC to be carried forward is 9,000 rupees. Clear? Question number 14. Please look into screen, don't see in your book because you are going to answer this. Okay. Question number 14. Compute the value of supply. From the following information, determine the value of taxable supply as per the provisions of section 15. We have the data, subsidy and all is there, and you need to try the answer. Can you do the rough work? It's okay. First you finish this. Thereafter we have 3 points. I'll show you, but based on this you see what you need to do. Note not required, but at least the template you write. Particulars, amount, first you start with transaction value like that, okay. Done? Sir, price excluding subsidy, including subsidy, nothing given, sir. So, assumption. What is assumption? The given price is after considering subsidy. Accordingly, do the treatment. Yes. What is the answer you got? 15 lakh? $36 lakhs, sir. 15 lakhs இருக்கு 36 lakhs சொல்றான்னு நினைச்சேன். உங்களுக்கு அப்படிதானே கேட்டுச்சு. So 30 lakhs, 13 lakhs, 62,500. Okay, why we are not taking it on exclusive basis? Because in the question it is clearly given as including GST. Whenever you have a question inclusive of GST, make all the adjustments. Finally, you will get one number now. From that you exclude GST. I know what is a mistake that you would have done. From 15 lakhs itself, you would have excluded 12%. Everyone did that mistake? So what you would have done? 15 lakhs into 12 by 112, you computed and you deducted in the beginning itself. Correct? That is the trap. So you should not do that. You should, because when you take 15 lakhs inclusive of GST, up 15,000 inclusive of GST dane, 25 also inclusive of GST dane. You understood? That's why make all the adjustments. Finally, you will get one number, and on that we need to compute GST inclusive. Is that clear? So taxes, GST alone, you leave it now. Later we will see. So first value of mission, 15 lakhs will be taken as the transaction value. Taxes other than GST, charge it separately by supplier as per provision, to be included or to be excluded. To be included. You have to write like that. As per section 15 subsection 2. Subclause not required. At least subsection 2. As per 15 subsection 2, taxes other than GST to be included. In the given price, already included. So amount column dash. No need to add anything. Next, weightment and loading charges. As per 15 subsection 2, incidental expenses or other expenses before delivery of goods. Weightment when will you do? After delivery you will go and do weight. Before delivery. Loading when will you do? Before delivery. So therefore it is before delivery and it should be including the value. In the given price already included. So amount column nil. Then consultancy charges in relation to pre-installation planning, means which stage? Before delivery of goods, before manufacture itself, to be included. Testing charges, inspection charges, all these are before delivery of goods. Correct? Sir, incidental versus other expenses என்னால் distinguish பண்ண முடியல sir. Don't worry. All expenses you treat as other and you check before at the time of delivery, you will get the correct answer. ஒரே ஒரு expenditure தான் after delivery it will become incidental, that is installation. But all other expenses you just check before at the time of delivery, that is okay, except installation point. So all these expenses before delivery of goods, therefore it is to be included, and in the given price it is already included, so further inclusion shall not arise. Then other information, subsidy received from central government for setting up factory in backward region, directly linked to price or not directly linked to the price? Not directly linked to the price, therefore you ignore it for valuation. Is it clear? Don't consider it as valuation, means ignore it. You don't have to consider that at all. So it is like subsidy provided by central government, state government. So here it is given as not includable. So because that is not directly linked to the price. So somewhere you write down not directly linked to price. Sir, suppose if it is directly linked to the price, sir, even then it will not be included. Yeah. Sir, because it is from central government, sir. As per the provision, it is to be excluded. In the given price, it is already excluded. See, that's what I am telling. If it is, there is no information. Suppose if this line, for setting up a factory in backward region, like that, it is not given, pa. Idilla, pa. What will you do? This line is not there. Subsidy received from central government, full stop. It is to be excluded, and the given price is after considering subsidy, which means already excluded. So don't add again, ignore it. Okay, va? Because of this, what changed? Same answer. Only thing, the reason will be different. What is the reason? Not directly linked to price. Okay, so the value of supply shall include directly linked to price, excluding subsidy provided by central government and state government, only directly linked to the price. But here it is directly linked to the price and not directly linked to the price, not directly linked to the price. So hence it is to be ignored, hence not includable, and that is what we need to take. Next, subsidy received from third party for timely supply of machine to the recipient. Is it directly linked to the price? Yes. For outward supply, as you are selling the machine on time, that's why you are receiving it. Now in this case, is it from CGST or others? Others. As per provision, it is to be included. In the given price, it is not included, because after considering subsidy is the assumption we have taken. So we need to add. While arriving at this 15 lakhs, already 50,000 would have been reduced, pa. 50,000 would have been reduced, but as per provision we need to add. But in the given price it is reduced, so we need to add back. Is it clear? So 50,000 we are adding. Next, trade discount actually allowed shown separately in invoice. Is it a pre-supply discount or a post-supply discount? Pre-supply discount. Trade discount is a pre-supply discount. It's allowed as deduction. And in the given price, nowhere it is given that the price is after a discount like that. So therefore, we need to reduce it now. So that is 24,000. We got 15,26,000. This is inclusive of GST. Now finally, you need to take out GST. 15,26,000 into 12 by 112. Then you will get the value of taxable supply. Is it clear? And what is the important assumption that we have taken? Assumption. The assumption is that the given price is assumed to be, write down there, the given price is assumed to be net of subsidy. Net of subsidy means after considering subsidy, that is original price minus subsidy is the given price. Clear? Dobriyal Technocrats Limited, registered in Gurgaon, Haryana, is engaged in manufacturing heavy steel machinery. It enters into agreement with Minesharp Associates, registered in Delhi, for imparting motivational training to the top management of Dobriyal Technocrats in a 5-day residential motivational training program at an agreed consideration of 20 lakhs. First, what is the first transaction? Training, service, correct? Who is doing training? Minesharp. To whom they are doing? Dobriyal Technocrats. So it's a service. Section 10, section 12, 12 service for training and performance appraisal. What is the price of supply? We need to check B2B because it is in TOT. Training and performance appraisal, organizing an event, transportation of goods or passengers. So we need to check B2B, B2C. Is it B2B or B2C? B2B, because Dobriyal Technocrats registered in Haryana. So what will be taken as a place of supply for this 20 lakhs? Location of a recipient, that is Haryana, will be taken. And what is the nature of supply? Supplier is in Delhi and place of supply is Haryana. Therefore, it is interstate supply. If you don't want to write it like a paragraph, you at least write it like points. First point number 1, first service provided by Minesharp Associates to Dobriel Technocrats. Point number 1, location of supplier, that is, so Mindcraft Associates in Delhi. Location of recipient, Dobriel Technocrats Limited in Haryana. Nature of service, training and performance appraisal. Place of supply, location of recipient as the service is to a registered person. Next line, nature of supply, interstate supply. IGST payable equals to 20 lakhs into rate. Not given, they are not asking us to compute the IGST, just the place of supply. Enough, over, answer. You don't have to do computation. Okay, Papa? Sir, paragraph if you are writing, so you may make some mistakes or you may not write it properly. You write like points also. Like this only we need to write, nowhere it is given. If you have written those points, it is enough. Okay. Next, second transaction. Minesharp Associates books the conference hall along with rooms of Hotel Chum Chum Nimrana, registered in Rajasthan, for the training program for a lump sum consideration of 12 lakhs. What about this? Service in relation to immovable property. Service only, na? Service in relation to immovable property. What should be taken as the place of supply? Location of immovable property. If the property is outside India, location of recipient. But location of property, what is the location of property? Rajasthan. So now, supplier, location of supplier, Rajasthan. Hotel in Rajasthan. Hotel is the supplier. Location of recipient, Minesharp Associates, Delhi. Next, place of nature of service, service in relation to immovable property. Sir, I have a doubt, sir. Won't it come under organizing an event, sir? No, organizing an event is different because they book the conference hall with the rooms. They are not receiving services of event organizer, event management service, just they will book the hall. So that is renting only, means service in relation to immovable property. So place of supply, location of property, that is Rajasthan. Nature of supply, intra-state. In a supplier also Rajasthan, place of supply also Rajasthan. So it is intra-state supply. Okay, Papa? So that is what we need to write. Here I gave it like paragraphs. You can write it point wise also. You will still be awarded with marks. In this regard, one very, very important point you keep in mind. இப்போ இங்க ஒரு question add பண்ணலாம். Can Minesharp Associates take ITC on hotel booking? Can Minesharp Associates avail ITC on booking of the conference hall in the hotel? Yes. Why? So therefore they can take ITC. Correct? Any change in answer? Why? Very good. Keep it up, sir. Good. So CGST, SGST paid in another state cannot be taken as ITC if you are not registered in that state. Minesharp engappa register irukku? Delhi la. And hotel engappa irukku? Rajasthan. Place of supply engappa? Rajasthan. When hotel also Rajasthan, place of supply also Rajasthan, what is the type of GST? CGST and Rajasthan SGST. Okay, va? But Delhi le eppadi credit edukka mudiyum? They cannot take credit. Sir, CGST edukka mudiyada sir? No, not even CGST. CGST, SGST paid in another state cannot be taken as ITC. You just write down that point. Note. Minesharp cannot avail ITC Mindsharp cannot avail ITC with respect to CGST and SGST paid to hotel in Rajasthan. Suppose if Mindsharp is registered in Rajasthan, then they can take ITC. But where is it given that Mindsharp is in Rajasthan? It's clearly given that Mindsharp is registered in Delhi. Suppose if they say Mindsharp is registered in Delhi and Rajasthan, then definitely they can take ITC. Got it? So CGST, SGST paid to hotel in Rajasthan. So this point they will twist in 10 marks question. Where there involves a computation of net GST payable, they will tell. Everything appears like ITC available. Ana inga twist irukku. Innor twist na sollava? E-invoice twist. They will tell that it is reflected in 2B. Supplier filed GSTR1, but supplier did not give e-invoice. Poor. Recipient cannot take ITC. Even if it is coming in 2B, recipient cannot take ITC. Because if supplier has to give e-invoice, but instead gave a normal invoice, recipient cannot take ITC. Got it? Next. Another question you see. Question number 16. Determine the place of supply in respect of the following independent cases. Brief reason should form part of your answer. Mr. U from Mount Abu, Rajasthan, an unregistered person, ordered one laptop as a gift for his father from e-commerce site Zilu, registered in Mumbai, Maharashtra, to be delivered at his parent house located in Ahmedabad. Bill to ship to or same person different address? Same person different address. So therefore it will be that circular. What should be taken as the place of supply? Delivery address. What is the delivery address? Gujarat. Ahmedabad, Gujarat. Even though he is from Rajasthan, but the place of supply will be delivery address, that is Ahmedabad, Gujarat. Is it clear? In case of supply of goods to a unregistered person through e-commerce platform, I told you. Supply of goods to an unregistered person through e-commerce platform, where supply involves movement of goods, location of recipient, unregistered, illana ending point eduthirupom. Adu eppudu delivery da. Ending point is anyhow delivery of goods, but location of recipient, because B2B, supply involves movement of goods, B2B is ending point. But it is not B2B, it is B2C. So for B2C, location of recipient in the records of supplier, but in the location of recipient in the records of supplier, two addresses are there which should be taken. That's where the circular says you take delivery address. Got it? If it is a bill to ship to transaction, then billing address, but this is not a bill to ship to transaction. How you know, sir? To be delivered at his parents' house, nowhere it is given to some other person. That is, if U is ordering for V, if U is ordering for V, some other person, then it is okay. Just delivery address only changed, but they did not give some other person. Got it? Even if it is some other person, you take the assumption. E-commerce transaction and pathale, you take the assumption that as per the circular, delivery address should be taken as the place of supply. Don't break your head, okay? Second, Mr. Oman, a tourist from Australia, visited India in the month of September. He got repaired his camera during his visit to Udaipur, Rajasthan by Mr. R, who also visited Udaipur at the same time. Okay, R also going to Udaipur. Oman also going to Udaipur. Udaipur, they both met together for repairing the camera. Got it? Next, Mr. R is registered in Delhi. So Delhi in the Udaipur adella he will go wherever he want, he will go. But he is from Delhi, he is in Udaipur now. Mr. Oman provided address of his friend who resides at Mumbai, Maharashtra, to be mentioned in the bill issued by R for repairing the camera. Now, repairing camera anywhere in this specific provision? We discussed now. Immobile property service, organizing an event, entry ticket, transportation of goods, transportation of passengers, service on board conveyance and telecommunication services and advertisement services like that. Nowhere it is. Correct? So general provisions. And the specific list you should remember. Immobile property service, food, training and performance appraisal. Correct? Like that specific. It's not covered under specific means general provision. Sir, theriyadu sir. General provisions. Okay. You understood? General provision, what will be taken? B2B, location of recipient. Is B2B? No, sir. B2C. Where is it given? Woman is registered, not registered. Correct? So B2C. B2C, what should be taken? Location of recipient in the records of supplier. Check. What is the location of recipient in the records of supplier? So because he gave his address of his friend Mumbai, Maharashtra, that will be taken. Whichever address that is there in supplier records, that should be taken. Got it? That is, while filling application form, are you giving Aadhaar address or what? You put some address, random address you will put, random mobile number you will put. So where are you giving genuine details and all to us? Correct? So whatever address you tell, that only I will be taking as the location of recipient in the records of supplier. Next. Question number 17. Briefly examine the place of the supply in the following independent cases. Miss Shanti, unregistered resident of Gujarat, went to meet her parents at the native place Patna, Bihar, and buys a medical insurance policy for her parents from an insurance company. M&T Insurers of Patna, registered in Bihar. The location of recipient of service in the records of M&T Insurers is Patna. Now, insurance service, any specific provision? No. So, general provision. B to B or B to C? B to C. So, location of recipient in the records of supplier. What is the location of recipient in the records of supplier? Patna. That's it. That will be the place of supply. Next, B. Lakhan Singh Transports Private Limited, GTA. Appa service? Transportation of goods. For transportation of goods, do we have B2B, B2C? Yes. TOT. T for transportation of goods or passengers. We have to check B2B, B2C. So GTA, registered in Noida, Uttar Pradesh, is hired by Ms. Ram Trade Links, registered supplier in New Delhi, to transport its consignment of goods from its warehouse in Delhi to the house of a buyer located in Roorkee, Uttar Pradesh. Wow. Is the transportation of goods. B2B. How you know? Because they are providing services to Ram Trade Links, registered in New Delhi. So what should be taken as the place of supply? New Delhi. New Delhi. Location of recipient, New Delhi. Sorry. This B2C irunda. Even then Delhi. Even then Delhi. Why? Starting point of the goods. From where it started? Delhi. So that will be taken as the place of supply. Next. C. Mr. Karan, Mumbai, takes a post-paid mobile connection in Mumbai from the service provider Freesia Limited and gives his residence address at Mumbai as the address for billing with the said company. For post-paid, always billing address. Okay. So what is the billing address? Mumbai. That will be taken as the place of supply. If you have a specific provision for that. Clear pa? Next. Question number 18. Mr. Mutswamy, an electronics dealer registered in Bengaluru, Karnataka, hired Messrs. Parivahan Logistics, an unregistered GTA, to deliver his goods at the place of business of customer in Jaipur, Rajasthan. Messrs. Parivahan Logistics charged 60,000 for the transportation of goods, which was paid by Mutswamy on 4th January through account pay check. The delivery was also made on the same day. Messrs. Parivahan Logistics did not raise the invoice for this service since it was unregistered. Sir, is it a place of supply question or what? அது நமக்கு தெரியாது. Facts படிக்கும்போது எப்போவுமே we will not know what we need to do. Got it? That's why when you are reading the facts of the case, you don't have to worry too much. But requirement only when you read, you will know the reality what you should do. இப்போ இந்த கொஸ்டின் படிக்கும்போது அது பிளேஸ் ஆஃப் சப்ளையா இல்லை டைம் ஆஃப் சப்ளையா இன்வாய்ஸா ஆர்சிஎம்மா வி டோன்ட் நோ எனிதிங். correct? So see the requirement, that is the key. What is the requirement? You are required to determine. So adanal eppovume padikumbodhu when you have a paragraph and followed by the requirement, first requirement padinga. Okay, what is the requirement here? Who is the person liable to issue tax invoice? Then time limit for issuance of invoice. Apparama vandu time of supply for the transportation service provided by GTA, assuming the tax invoice is issued on the last day on which it should have been issued. Okay va? Sorry. Inga vandu question related to who is liable to give invoice, what is the time limit for invoice, and time of supply. Place of supply patti we don't have to bother, correct? And we have to see, is it FCM or RCM, because depending upon that who will give invoice will change. Generally who should give invoice to whom? Supplier to recipient, but only in one case recipient will give invoice to supplier. Self invoice I told you, what is that? Supplier is unregistered and the supply is covered under RCM. Check whether this transaction is covered under RCM. GTA service by default RCM, correct? But if GTA opts to pay GST under FCM, then only it is FCM. Inga opting mudiyuma mudiyada? Yeah. So by default which option? Are you getting this? So this is service covered under RCM. Is supplier unregistered? Yes. So who will give invoice to whom? The recipient has to give self invoice to the supplier. Who is the recipient in this question? That Mutswami. He need to give invoice to the supplier, self invoice. Over our first question answer, what is it you will write for the first question? Tax invoice anale section 31. Tax invoice means section 31. Okay. So as per section 31 of CGST Act, if supplier is unregistered and supply is covered under RCM, then recipient shall issue self invoice to the supplier. In the present case, Mutswami shall issue invoice to Parivahan Logistics. Okay. Second, time limit for issuance of invoice. What is the time limit for issuance of self invoice? 30 days from the date of receipt of goods or services. Okay. So then you need to write second point, as per CGST rules. Now usually time limits ellame vandu rules la irukum. Section la illana rules, illana section eludra sir, super, right, as per section 31 or right as per rule, CGST rules. Sir, exact rule number I don't know, that's why I am telling as per CGST rules. Okay. And here it is actually rule 48, but it's okay, if you don't know also no issue. As per CGST rules, invoice, that is self invoice, to be issued by recipient to supplier within 30 days from the date of receipt of goods or services. In the present case, Mutswami received the services on 4th of January, and invoice to be issued by 3rd of February, because January is 31 days. So 3rd of February. Over a second. Now third, time of supply. Time of supply for service under RCM. Ennappa provision? Yesterday I discussed. Two provisions are there. First one is invoice given by supplier to recipient, invoice given by recipient to supplier. 31st anna 61st. Ayya, goods ku 31st, services ku 61st. Okay. So supplier if gives invoice, date on which payment is made to supplier, or 61st day from the date of invoice by supplier. That is not applicable here, because who is giving invoice? The recipient is giving invoice. So what is the time of supply? Date on which payment is made to supplier. Any information we have? Yes, 4th January. 4th January is the date of payment. B, date of invoice to supplier. When are they giving invoice? 3rd February. Eppadi sir? See the last line, they are telling they have issued invoice on the last day on which they should have issued. What is the last day they should have issued? 3rd February. So 3rd February they gave the invoice. So 4th January or 3rd February, whichever is earlier, will be 4th January. That is the time of supply. Understood? This is your RTP question. This one RTP question. Then next one you see. This is related to input tax credits, warranty, replacement of goods during warranty. I'll just give you a simple explanation, don't get complicated, simple. I am replacing the parts or goods during warranty. Can I take ITC on the goods purchased for replacement during warranty? Example, I am having a electrical shop. You purchased one bulb from me and you took it to home. It is covered under warranty. After 1 week the bulb is not working, but it has a warranty. Usually LED bulbs and all, when you buy they will write the date and give, correct? So therefore the date I have written, in 1 week itself it is not working. What will you do? You will bring it back and I will give another bulb to you. You understood? Another light I will be giving to you, another tube light I will be giving to you. So now that another one I am buying now. Sir, first one you returned, sir. Second one I am giving to you, but the second one I am buying now. Can I take ITC? Yes. Because I already paid GST for the first one. So therefore I can avail the ITC. Not at all a problem. Even though I am giving it for free, I can take ITC. Ipa, as it is given for free, will it come under 7(1)(c)? Disposal of business asset on which ITC avail. Is this tube light my business asset? Yes. On which ITC avail? Yes. Is it sold for consideration or without consideration? Without consideration. Will it be applicable? Will 7(1)(c) be applicable in this case? No. No need to pay GST. Even though I enjoy the ITC, no need to pay GST. Purida illiyappa? 2 point pa. First, I can take ITC on goods purchased for replacement during warranty period. Okay va? I can take ITC on goods purchased for replacement during warranty period. Okay va? Second, for replacement, when I am giving the goods, even though I enjoy the ITC, it is not a supply under 7(1)(c). So GST is not payable. Okay. Now, not necessary that I should do the replacement. I mean, I am the manufacturer. You are my dealer. You may also do the replacement, but I will buy and send it to you. Okay va? First case la, I am only the shopkeeper, I am only buying, I am only giving. Okay. Now little bit change. I am manufacturer. You are my dealer. And now you do the replacement. So when you do the replacement, I have to provide that product to you na. Ipa na vaanguva. Ana na replace panla. Can I take ITC? Yes. And I am giving it for free to you to replace. So whether I need to pay GST? No, it is not a supply. So this will be under the cover of a delivery challan. Can you take ITC? First of all, you did not pay. First of all, you did not buy it, you got it freely. Then where is the ITC for you? You understood? Now apply this. Samsung Electronics sells a smartphone to a customer with a 1-year manufacturer's warranty. During the warranty period, the customer experiences a defect and visits an authorized distributor. So we have dealer and manufacturer. Okay va? Distributor is the dealer who replaces the defective smartphone with a new one. Manufacturer engo irpa, and nama manufacturer kitta po matom. We will go to the service center, and when we give the smartphone in the service center, what they will do? They will replace. So they will replace with a new one from their own stock, and manufacturer later replenishes the distributor stock. Replenishes means refills the distributor stock without charging any additional amount. Additionally, at the time of purchase, the customer buys an extended 2-year warranty from a third-party service provider. This we will see later. This is extra charges. Okay. First, up to this, determine the GST liability for Samsung on the replacement of defective smartphone under manufacturer warranty. Manufacturer replenishes to the dealer, na? Manufacturer replenishes to the dealer. Is it supply or not a supply? Not a supply. Why not a supply? Because it is covered under warranty. Manufacturer வந்து டீலருக்கு மொபைல் அனுப்புறான் சார், அது வந்து சேலா? ஏன்? Why it is not sale? Because dealer is not selling it, dealer is going to replace it under warranty period. So manufacturer is not required to pay any GST, and manufacturer should reverse any ITC. Why? They can enjoy the ITC even though they are giving it for free to the dealer. You understood? So GST liability for Samsung on replacement of defective smartphone. The replacement of defective smartphone falls under the manufacturer warranty, which was part of original supply of goods. Since GST has already been paid at the time of initial sale of the smartphone, no additional GST is applicable when Samsung replaces the defective smartphone. Got it? The replacement is considered part of original transaction, and Samsung is not required to charge GST or reverse the ITC on this replacement. Okay, va? Then second, explain the GST implication for Samsung when it replenishes the distributor stock with a new smartphone. That is also not a supply. Distributor free kudukumbodhu not a supply. Manufacturer and the distributor oda stock refill பண்ணும்போது not a supply. So when Samsung replenishes the distributor stock with a new smartphone to compensate for the replacement made by the distributor, the replacement is done via a delivery challan. When delivery challan? When there is no supply but there is a movement of goods, the document name is delivery challan. The replacement made by distributor, the replenishment is done via delivery challan without any monetary consideration. Since there is no consideration, it does not constitute taxable supply. And whether they are required to reverse any ITC? No. Third, so now what happened here? Additionally, at the time of purchase, the customer buy a extended 2-year warranty. Usually நம்ம electronics additional warranty purchase பண்ணுவோம் இல்லையா? Yes or no? Buy that pa, because nowadays and all in smartphone, after 1 year green lines are coming. Correct? Came, but did you take it to the service center? You have 3-year warranty. Very good. Good. See, 3-year warranty means initially 1 year you would have paid some extra. Company already gave 3-year warranty. Oh, Samsung, okay, then okay. OnePlus and all 1-year warranty only. No, adippa. Because this green line issue came, their product sales and all came down. Now they are giving lifetime warranty. Now initially where it was lifetime warranty, I faced that issue. That's why I am telling you. So 1-year warranty, and at that time itself, that shopkeeper said, "Sir, pay 5,000 rupees extra, sir. We will give you extended warranty, sir." Said, why to pay 5,000? 5,000 is big money. Why we need to pay like that? I did not pay. After exactly 1 year, 1 month, so 2 lines came. Okay. So in the phone, and I took them. Sir, warranty over like that, he said. So what should I do then? Use, sir. Till the time you are using, use, sir, like that. Then it's gone. So additional warranty we pay for getting this protection. And so thereafter, every phone, every TV, any washing machine, refrigerator, I will first pay additional warranty charges. We cannot mess with this electronics and all. And this additional warranty, when can we pay? Either at the time of purchase or within a prescribed time. They will tell 1 week, illa 30 days. For Apple phones and all, 30 days time is there. When you buy Apple phone, within 30 days, you can pay extra for Apple Care Plus. And you can pay money so that you will get the protection. Okay. So this mobile, we can drop also, nothing will happen. Protection is there. If anything happens, this is the third time I got a replacement. Okay. So new mobile, every time something will happen, screen will be broken, I will do bowling. Okay. So mobile will be broken, left, right, center, nurikiduvén. Adukapurama edutunu poi I will give, they will give a new mobile. This is third iPhone 15 Pro Max. Got it? And still warranty is there till November. I will let you know. Okay. So you can, so this andhairiyam, okay. And therefore, in this case, I pay extra. You know how much I paid extra? 14,500 rupees I paid extra. Pa. When I paid at the time of purchase of mobile, so after that also I can pay. If I pay at the time of purchase of mobile, the GST rate applicable to mobile will be taken as the GST rate for this extra warranty. If I buy separately, then it will be individual supply. You know when this will be useful? Car 40%. When you should take additional warranty for car? After. So that it will be 18%. If you pay additional warranty at the time of purchase of car, even an additional warranty also you need to pay 40%. Is it clear? It will be deemed like a composite supply and principal supply will be taken. Suppose at the same time, if we buy warranty from some other dealer, I am buying in Purvika Mobiles, but I took warranty from Apple App Store, then separate supply. See, at the same time, from the same supplier, then only composite supply we will take the principal supply rate. Otherwise, it will be individual supply. You read this. Additionally, at the time of purchase, the customer buys an extended 2-year warranty from a third party service provider warranty plus third party, not from the same supplier, which begins after manufacturer 1-year warranty. So what is the treatment of these additional charges? Treated as separate supply and taxable at the rate of 18%. Discuss GST treatment for extended warranty by warranty plus. So this is treated as separate supply of service, GST charged on the value of extended warranty as a service. Then analyze how the GST liability will change if the extended warranty was purchased from Samsung directly at the time of original purchase. Then composite supply, and it will be treated as the rate applicable to principal supply. What is the principal supply here? Smartphone. The rate applicable to smartphone will be applicable on this additional warranty charges. Okay. This question number 20. Question number 20. Messrs. Autoglide Motors Limited, an authorized dealer of motor vehicle, purchases automobiles from manufacturers and sells them to customers. As per dealership norms, the company is required to maintain demo vehicles at its showroom for test drive and promotional activities. During January 2025, Autoglide Motor purchased 10 sedans from XYZ Automobiles Limited for 50 lakhs for exclusive use as demo vehicle for test drive and customer demonstrations. Now, what they did? They purchased the demo vehicles. Usually, car dealer will buy a demo car to give it for test drive. Can they take ITC on the motor vehicle? Is there any blocked credit for motor vehicle? Yes. Motor vehicles used for transportation of persons. What is the meaning of motor vehicle used for transportation of persons means? Motor vehicle with seat. Okay, wow. Motor vehicle with the seat for the people to sit. That is called as motor vehicle for transportation of persons. Okay. Means 2-wheelers, 4-wheelers, bus, etc. Not lorry, truck. Okay. Divide into 2. Capacity exceeds 13. Not a blocked ITC. ITC always available. And while computing 13, including driver seat, excluding driver seat, including driver seat. Capacity does not exceed 13, blocked ITC. Anna 3 exceptions are there. What are they? Number 1, further supply. Further supply means what? Buying and selling or buying and renting. Okay va? Further supply enna pa? Buying and selling or buying and renting. Do we have people who buy and rent the motor vehicles? Yes, yes. So a number of people are there, travel operators, not Ola, Uber like that, normal travel operators. So very near to this one Bala Tours, like that one company is there. They have around 100 cars. 100 cars they are having. They will give it on rent. You understood? Now when they are giving it on rent, they will buy, no? Can they take ITC? Yes. Appa sir, nanu motor vehicle vaangi ITC eduthuren sir, so that I can enjoy the benefit. Na edukalama sir? Na. No. Why? Business da. Business. Class edukkuradhu business da. Correct. So it should be in the further supply, either sale or renting. Now solra students ku rent kudukuren solra, then I have to change from whiteboard to yellow board. Got it? So it's not that easy. So I cannot say that I am doing renting. If I am doing renting, I cannot run whiteboard. I have to convert into yellow board. I should take a license accordingly. Got it? So easily department can identify. So in that case, I can take ITC. Renting or selling. Second exception. Transportation of passengers like Ola, Uber, etc. Number 3, driving school. In these 3 exceptional cases, I can take ITC. Now tell me whether the dealer who buy the demo car for test drive can take ITC. Where? Further supply. Enga further supply? Na test drive thane kudukra. Test drive car vikkalama? Eppa? When? After some years. But this test drive car now I am not selling. It will be sold in future. In future when a new model is launched. Correct? Even though it is not immediately sold, but because of this I can sell the other cars. So we have a CBIC circular which says that it will fall under further supply and we can enjoy the ITC on the demo cars. So can Auto Glide Motors take ITC on the demo cars purchased? Yes, that is the first question. Whether Messrs Auto Glide Motors can avail ITC on purchase of demo vehicles and compute the ITC available. So first you need to write, as per CBIC circular, ITC is available on demo vehicles. Sir, exam la enakku CBIC circular illa section idu edume theriyadu sir, enna sir pandrathu? Leave it. Leave it. You know that all blocked credits will be section 17 subsection 5. You give that reference. புரியுதா சார்? இது சர்க்குலரா இல்லையா எனக்கு தெரியாது சார். பிரச்சனை இல்லை. பிளாக்டு கிரெடிட் தானே இது. பிளாக்டு கிரெடிட்டுக்கு செக்ஷன் தெரியுமா? தட் அது கூட தெரியாது சார். சரி, ஆஸ் பர் த ப்ரொவிஷன்ஸ் ஆஃப் சிஜிஎஸ்டி ஆக்ட் அது கூட தெரியாது சார். ஒரு ஷேர் ஆட்டோ பிடிச்சி மெரினா பீச்சில் போயிட்டு குச்சி செத்துடுங்க. ஓகே, அது கூட தெரியலன்னா வாட் கேன் வி டூ? So at least CGST Act you should be knowing, okay, as per the provisions of CGST Act, and put an effort. At least minimum to minimum certain important section numbers. 9(3) வந்து RCM, section 7 வந்து supply, section 8 composite supply except supply, 17(5) blocked credit. Like this minimum to minimum certain section numbers you should remember pa. And that's why in revised book at the end I gave. So ஒரே ஒரு பேஜ்ல மட்டும் தான் செக்ஷன் நம்பர்ஸ் இருக்கு. அந்த செக்ஷன் நம்பர்ஸ் ஆவது படிங்க. Got it? Is it there? At the end I gave. அது இல்ல, அது டைம் லிமிட்ஸ். செக்ஷன் சம்மரின்னு கொடுத்துருப்பார். 183 183ல கொடுத்துருப்பார் என்னென்ன செக்ஷன்ஸ் அன்னிட்டு. ஓகே, அட்லீஸ்ட் those section numbers you read pa and remember. Okay, so 17, so 17(5) தெரியாது சார். 17, it's okay, because 17 only apportionment of credit and block credit, that also you can quote. Okay, so as per CBIC circular, ITC is available on demo vehicles since they are eventually sold, classifying them as used for further supply. ITC is not blocked in such cases. So can they take ITC? Yes. And out of the 10 cars, what they are doing? All 10 they are using it for trial, or are they using anything for any other purpose? Read the paragraph and tell me. Additionally, one of the demo vehicle was also used for transporting company employees. Can they take ITC? No. Why, sir? Transportation of passengers and the point keel eduk mudiyada, sir. Employees are passengers, huh? No, that's why they cannot take ITC. Is it clear? See, the benefit is given if they are doing trial run. Out of 10, 9 is used in trial run, test drives. And remaining one, they are not using for test drive. What they are doing? Transporting employees. But that's not covered under the exception. So therefore, ITC not available on that one. But 9 they can take. So therefore, in the present case, Autoglide Motors can avail ITC on 9 demo cars purchased for being used in test drives and cannot avail ITC on 1 demo car used for employee transportation. Okay. And what they do is that, please check, one important point we missed. What is the price at which they purchased? 50 lakhs including GST. And see there, they have capitalized at what value for depreciation? 50 lakhs. While computing depreciation, they are adding even GST component. Can we take ITC? No. Even though they can take ITC on 9 cars, but they capitalize the value of cars including GST component, so ITC is not available. Got it? But this reason you need to write, then only you will get marks. First you need to tell that demo car is used in further supply, so ITC can be availed on 9 cars. However, as they are capitalized including the GST component, so ITC not available, like that. Then next, second, compute GST payable on sale of such demo vehicle. ITC availed or not availed? Hey, just now you said ITC availed or not availed? Not availed. And when they are selling, whether 18.6 is applicable or not applicable, there is one section 18.6. What does it say? You sell capital goods on which ITC is availed. What will be the GST payable? A, ITC availed minus 5% for every quarter or part thereof. Ingadu varadu. Yeah. ITC not availed. So naturally B. What is B? GST on sale value. Whichever is higher. Here there is no ITC availed. So what will be the GST payable? GST on sale value. Check whether they are selling the demo car. After 1 year of use, Autoglide sold 5 demo vehicles which is used for test drive for 15 lakhs. So therefore, 15 lakhs exclusive of GST. How much GST they need to pay? 15 lakhs into 28% is the GST payable on sale of demo vehicles. GST payable on transaction value 15 lakhs into 28%, 4,20,000. Now see the third part. Compute GST payable on sale of such demo vehicles if depreciation is computed on purchase price excluding GST. If depreciation is on purchase price excluding GST, can they take ITC? Yes, because they computed depreciation not on the tax component, so they can take ITC. How much is the ITC availed on 5 motor vehicles? 10 வந்து 50 lakhs pa. 10 வந்து 50 lakhs. And how many vehicles they are selling now? 5. So for 5 vehicles how much? 25 lakhs. GST into 28 by 128. Purida pa. Sir, 50 lakhs you purchased pa. In the 50 lakhs வந்து 10 vehicles க்கு. அப்ப எவ்வளவு vehicles நம்ம சேல் பண்றோம்? 5. அப்ப 5 vehicles how much? 25 lakhs. In the 25 lakhs GST component என்ன? Into 28 divided by 128. How much? 5,46,875. Usually tax paper la, when you are not getting round number and all, you will think that answer is wrong. Okay, அப்படி இல்ல கிடையாது. So round number may not be there. Sometimes fraction also will come. Sometime round number will come, but the answer is wrong. Sometime fraction will come, but the answer is correct. Okay. So don't think I am not getting a round number means answer wrong like that. No. So it can be 5,46,875 minus 5% for every quarter or paragraph. Here 18.6 is applicable now because they are availing ITC. So ITC availed minus 5% into number of quarters. How many quarters they used? 1 year means 4 quarters. What if they use for 1 year, 1 month? 5 quarters, because we need to count it as quarters or part thereof. So therefore 4 quarters into 5%, 20%. So we need to reduce. So 5,46,875 minus 20%, 4,37,500, or GST on sale value, that is what already we computed, 4,20,000, whichever is higher. Which is higher? 4,37,500. This is the GST payable. Got it? Like that one question is there now. That one. Then look into question number 23. Mr. Divas, a registered person in Agra, Uttar Pradesh, purchased a car for 12,50,000 on 15th October. On 31st October, the car met with an accident resulting in minor damage. Due to urgency, he got his car repaired in the local garage of nearby market instead of garage authorized by his insurance company. That is Suraksha Insurance Company, through which the car was insured. The total cost of the repair was 54,000 excluding GST. On the instructions of Mr. Divas, the invoice for the entire amount was raised by garage in the name of insurance company. But insurance company approved claim of only 40,000. Out of 54,000, how much they paid? 40,000 after the survey and reimbursed the same along with GST 18% to Mr. Divas. In light of the above facts, you are required to answer the following questions. Whether Suraksha Insurance Company is eligible to avail ITC on the basis of invoice raised by garage. Can they take ITC? Yes. So, generally, insurance company can avail ITC with respect to the repair expenditure, and even if the insurance company is directly making the payment to the garage, or if they reimburse it to the insured, they can avail ITC, but invoice should be in the name of insurance company. In this case, invoice in the name of Suraksha Insurance Company, so they can take ITC. However, the ITC is restricted to the amount that is reimbursed. Therefore, ITC eligible equals to 40,000 into 18%, 7,200. So 7,200 only they can take ITC. Is it clear? But lot of data is given here, but you don't have to write this much. You can simplify and write. This is your RTP question. Okay. They gave lot of data, but you can simplify and write. Would your answer be different if garage has issued two different invoices, one for 40,000 plus GST to Suraksha and another for 14,000 to Mr. Divas? So the answer will remain same. Insurance company can take ITC on 40,000. Divas may avail ITC if the motor vehicle purchased is eligible for ITC. Like that you write. Don't write shall avail or shall not avail. May avail if the motor vehicle purchased is eligible for ITC. In case garage issued the invoice in the name of Divas, would Suraksha Insurance Company be eligible to avail ITC? No. No. Because invoice in the name of insured, the insurance company cannot take ITC. Sir, here 40,000 plus GST fully they can take, or in that 40 again proportionate they will take. 40 they will take. Because 40 they reimburse now, they can take. And here can Divas take ITC? Last case, may. If the motor vehicle purchased is eligible for ITC. So that is the answer for this. So look into question number 21. Up to question number 20 already we discussed in last class. So question number 21 you please take. This is related to, the purchase data will be given. Based on purchase data, you need to arrive at the sales and then compute the GST payable. This is also one style which usually ICAI follows. They will give all purchase information. From purchase information, whichever cases ITC is available, you should not take it into the cost, because what is the entry for purchase? Purchase account debit, ITC account debit to bank or to supplier, which means if ITC is available, it should not be added to the cost. So therefore, you will take the cost data and add the profit, and once you add the profit, you will be getting the sale price. On that sale price, we need to compute GST payable, that is our gross liability. And from the purchase data itself, you know how much is the ITC. So from gross liability, if you set off the ITC, you will get the net liability. So see this question. Purchased raw material A from a local dealer rupees 86,100 inclusive of GST at 5%. Can we take ITC on the raw material? Yes. Do we have any restriction that raw material you should not take ITC like that? No. So we can definitely take ITC on the raw material purchase because it is not in the block credit. It is used in the course or furtherance of business. Moreover, it is not used in exempted supplies. Suppose if the raw material is used for making exempted supplies, then we cannot take ITC. So, but here ITC can be taken. So, tell me how much should be added in the purchase, whether entire 86,100 should be added in the purchase or how much should be added? 82,000. Why 82,000? Take out the GST component. How to take out the GST component? This is inclusive of 5% GST. If I want excluding GST, what should I do? Into 100 divided by 105. Into 100 divided by 105. So do the calculation. 86,100 into 100 divided by 105. What is that? 82,000. So 82,000 will be taken, and this 4,100 we can take ITC, correct? This 4,100 we can take as ITC. Then second, raw material. Raw material B from local dealer 1,12,000 inclusive of GST at 12%. So now again, can we take ITC? Yes. Means how much should be added to the cost? 1,12,000 into 100 by 112. That is 1 lakh will be added to the cost. Then how much ITC is available in this case? 12,000 ITC is available. Then purchased capital goods from within the state to be used in manufacture of all the taxable goods 1,96,000 inclusive of GST at 12%. Depreciation at 15% to be charged for these goods manufactured. Now listen carefully. Capital goods also, can we take ITC? Yes. And they have taken the ITC on capital goods. How much is the ITC on capital goods? See, only if it is blocked credit we cannot take, but we don't have any information. So naturally ITC is available. So 1,96,000 into 12 by 112. How much? 1,96,000 into 12 by 112. 12 divided by 112. So if you need value, into 100 by 112. If you need GST, into 12 divided by 112. How much? 21,000. ITC 21,000. Then what is the cost? What is the value of the asset? 1,96,000 minus 21,000. What is the difference amount? 1,75,000. But that 1,75,000 will you take into the cost? Will you take it in the cost of production? Entire 1,75,000 will you take in the cost of production? No. Capital goods, how much should be taken into the cost of production? Only depreciation, because raw material we will take fully into the cost. So you know the basics of things na. P&L poduvampa capital goods purchased. Enga poduvampa? Balance sheet. And then what is there in P&L for that balance sheet item? Depreciation, correct? So how much should be taken into the cost? Depreciation. What is the depreciation? 15%. So 1,75,000 into 15%. So 15% is the depreciation for that period. Okay. So into 15%, how much? 26,250. Understood? Then next, other direct and indirect expenses. How much? 55,460. Is it given as inclusive of GST? No, which means excluding GST, fully you take it in the cost, and there is no ITC here. And earned 5% profit margin on cost. During the period, only 70% of the production is sold within the state and applicable GST is 12%. So what is your cost of production? What is your cost of production? 82,000 raw material A, 1 lakh raw material B, and depreciation 26,250, other expenses, we got cost of production. But whether entire production is sold, how much is sold? 70%. So therefore 2,63,710 into 70%. What is the cost of goods sold? 1,84,597. On the top of that, we need to add the depreciation. Okay, we need to add depreciation. Sorry, we need to add the profit margin. What is the profit margin? 5% on cost or 5% on sales? On cost. So directly you take. Suppose if it is given as 5% on sales, what you will do? Then you will convert into on cost. If 5% is on sales, on cost will be 5 by 95. Correct? Sales 100 pa, 100 la 5 rupees profit. Appa cost one 95. So 5 by 95 like that you will take. Is it clear? So therefore, profit margin 5% of cost, 1,84,597, add 5%, you will get the sales. Understood? So regular cost basis, we arrived at the sale price. Sometimes the sale value may be arrived using that inclusions, exclusions in valuation. So section 15.2 we saw the inclusions. Using that also we will ascertain the sale value. But somehow we will ascertain the sale value. Now what is the question? Calculate the amount of GST payable after utilizing the ITC, assuming no opening balance of ITC. So they are asking net GST payable. What is the sale value? 1,93,827 into what is the rate of GST? 12%. So 12%. So CGST, SGST. CGST will be 12%, SGST will be total 12 means 6% CGST, 6% SGST. So what is the sale price? 1,93,827 into 6% and 6%. That is 11,360, 11,360. This is your gross liability. 630. That is your gross liability. Now what is your ITC? Do the total of ITC. Take your calculator. 4,100. Hey Thambi, என்ன பண்ற? இங்கதான் இருக்கியா? Take your calculator. So 4,100 plus 12,000 plus 21,000. அப்படியே பார்த்த உடனே வந்துடுமா? You have to do no. சிம்பிள் கால்குலேஷன் தான். அவ்வளோ கிழிக்கிறதா இருந்தா நம்ம வந்து கிழிச்சிருக்கணும் இல்லை, பார்த்து சொல்ல அப்படியே பார்த்து சொல்ல. சிம்பிள் தானே, சிம்பிள் கால்குலேஷன். ஆட்டிடியூடுக்கு ஒன்றும் குறைச்சல் இல்லை. 4,100, 12,000 and 21,000. What is the total? Simple calculation. He is telling answer. என்னப்பா அது ஆன்சரு? So that is the ITC. In that we have CGST, SGST. Simple calculation. What is the half of that? Without using calculator, tell me. தெரியாதுல்ல, சும்மா திருப்பி பேசக்கூடாது. Okay. So we have half of that CGST and half of that SGST. So therefore you need to reduce. So what is the net GST payable? 0. Because how much credit you got? 10,000. Lapa 4,100 plus 12,000 plus 21,000. What is the total? 37,100. 37,100 divided by 2. 8,000. So we have excess ITC. So which means net GST payable will be 0. And there is some excess ITC to be carried forward. But remember, whenever we have excess ITC, we need to check one rule 86B. What is it, rule 86B? That is, if the taxable turnover in a month exceeds 50 lakhs, we have to pay 1% of our liability through cash ledger. that will not be specifically given in the question. So we need to check for that information. But when you need to check that information, if you have ITC balance more than your liability or equal to liability, which and all situations your net GST payable is going to become 0 or like more ITC, in that case you check for this. And what is the first condition that you need to check? Your taxable turnover in a month should be more than, here we don't have that much of turnover, hardly 1,93,827. So rule 86B not applicable. Okay, but this point keep as a checklist in your mind. So whenever you are doing the net GST payable, and if the taxable turnover in a month exceeds 50 lakhs, you need to check for that 1%. Okay, so what is that 1%? We have to do suppose if rule 86B is applicable, what we should do? 11,630 into 1%, you should have kept under the net GST payable. Up remaining amount only you can set off from the input tax credit. Okay, so that is this. But here rule 86B not applicable, so full ITC we can use. So what is the credit that will be carried forward? What is the credit that is carried forward? 6,920, 6,920. Again, this will not be it will not be asked in question. What is the ITC to be carried forward? But you have to write that as a line. That is one of the point you need to mention in the answer. Is that clear? Next. Rudra Limited. So you understood this question now? This is just a template. Not necessarily the same question will come. They can modify that also. But this style is like they will ask us to arrive at the sale price first, and after arriving at the sale price, they will ask us to compute the net GST payable. But from purchase data, be careful. We should know that what is the ITC that is available. Suppose if any ITC not available, if there is a blocked credit, what you would have done? For example, this instead of capital goods purchase, motor car purchase, like that it is there. Then it's a blocked credit. So we should not take ITC. Am I right? Then what we should do? Don't take ITC. Then entire amount into 15%, we need to compute depreciation. Clear? That is entire 1,96,000 into 15%, we need to take as depreciation. Clear? No need to exclude the ITC, because when ITC not available, that will be added to the cost. When it is added to the cost, then depreciation also will increase. Okay. Next. This is related to the concept of section 41 read with rule 37A. So this is interesting question. Rudra Limited raised invoice for services of rupees 1 lakh excluding GST at 18% on 15/9/2023. So what is the date of invoice? 15/9/2023, and reported the same in the GSTR1 of September, because September they made sale na. So that's why in GSTR1 of September 2023 they added this invoice and filed it on 11th October. What is the due date of GSTR1? 11th of next month. So 11th October they have filed GSTR1. Abhi Limited, who is recipient of such service. So Rudra Limited is the supplier. Abhi Limited is recipient. So availed ITC in 3B of September on 18th October. So usually they have to file 3B when? 20th, but they filed on 18th October. It's okay, they can file before also. And utilize the same in 3B of November. Means what? The balance would have been reduced or fallen in the November month below that ITC. What is the ITC? 1 lakh into 18%, 18,000. Actually, we should do the computation, but in question itself it is given as to which month it is utilized. So November month it is utilized, and November month 3B when it is filed 20th December. Now my question is, what is the date of utilization? 20th December. First, which month they have utilized? November. November month, when are they filing 3B? 20th December. What is the due date of 3B? 20th December. Whichever is earlier is 20th December. Suppose for November month they filed 3B on 18th December. Then what will be the date of utilization? 18th December. Suppose for November month they filed 3B on 24th December. Then what is the date of utilization? 20th December. Due date of 3B or actual date of 3B, whichever is earlier. Okay. So here 20th December they utilized. Rudra Limited has not filed 3B with respect to September 2023 and Abhi Limited reversed the ITC in 3B of December 2024. Which month invoiced by the September? September what? 2023. Then financial year 23-24. For financial year 23-24, by when they should have filed 3B? 30th September 2024. That is the maximum time by which they should have filed. Otherwise, recipient should reverse the ITC. Correct? So, whether they filed 3B by September 2024? No. So, recipient has reversed the ITC. By when they should reverse the ITC? 30th November 2024. But when are they reversing? So, will there be interest? You got it. If they are reversing by 30th November, if Abhi Limited is reversing by 30th November 2024, no interest. Because they have not reversed by 30th November and they reversed on December, that to December 3B when they filed 17 January. So, till 17 January there will be interest. Sir, interest starts after 30th November or interest is from the date of utilization? Date of utilization, back date. If you reverse the 3B by 30th November, no interest. Otherwise, interest will come. But wherever interest is applicable, it starts from where? From the date of utilization till the date of reversal. So, that is 17 January. Compute interest payable by Abhi Limited and consequences with respect to ITC if Rudra Limited filed 3B of September on 18th February 2025. By when they should have filed? Supplier. 30th September 2024. But when they filed? 18th February 2025. Okay. Again, whenever they file 3B, can we re-avail the ITC? Yes. Interest? No, that's gone. Interest is gone. We cannot re-avail that as ITC. So, first, we need to write the section. Rule, try, if not also at least section 41. And the rule is rule 37A, at least section 41 you remember. As Rudra Limited, who is Rudra Limited? Supplier. Not filed 3B of September 2023 because invoice date is September 2023. Of September 2023 by 30th September 2024, ITC availed by Abhi Limited needs to be reversed. By when it should be reversed? By 30th September 2024. It should be reversed. Correct? So, supplier not filed 3B, okay, then ITC availed by Abhi Limited not reversed by 30th November, they shall pay interest. Correct? Supplier has to file 3B by September. If supplier not filed 3B by September, then recipient should reverse the ITC with respect to the invoice for which supplier not filed 3B by September. By when? By 30th November. So, here otherwise they need to pay interest as follows. What is the interest on 18,000? 18,000. How much ITC availed? 1 lakh into 18%, 18,000. And what is the date of utilization? 2012-2023. Because they utilized in November, filed on 20th December. So, 2012-2023. And till the date of reversal. What is the date of reversal? 17 January 2025. So, count the number of days. 20th December 2023 to 20th December 2024. 366 days. Because February 2026 will come. So 366 days. Till December 366. In December, what is the remaining days? 11 days in December. Then January, 17 days. So total how many days? 394 days. So for this 394 days, we need to compute interest on 18,000. But who will pay this interest? Supplier or recipient? Recipient. So Abhi Limited has to pay interest 3,488. Understood up to this? This is only half of the question. Now, again supplier filed GSTR 3B by 18th February. So which is after September, they have filed the 3B. Now what recipient should do? Abhi Limited should do? Reavail the ITC in GSTR 3B of February. February they will file GSTR 3B na, in that they can reavail the ITC. That is second paragraph. When Rudra Limited filed 3B of September, on 18th February, ITC reversed by Abhi Limited can be reavailed in 3B of February filed on 20th of March. Even though the time limit for availing ITC is expired. Because there is a time limit for availment of ITC. 30th November of succeeding financial year, date of filing and return, whichever is earlier. But that time limit, even if expires, they can still reavail the ITC. In case of reavailment of ITC reversed earlier. However, interest of 3,488 cannot be availed. Again, still we have one more part to be answered in this. This is not the completion of the answer. Discuss whether any interest is payable by Rudra Limited. Rudra Limited, when they should have filed 3B? Regular for the transaction which happened in September 2023. What is the regular time limit to file 3B? 20th of October. Correct? 20th October 2023. They should have filed 3B. And they should have paid tax. But when are they filing 3B? 18 February 2025. They filed 3B later. Up tax also they would have paid late na. So number of days for which we need to compute interest. October 2023 to October 2024, 366 days. Correct? Then in October there will be 11 days. November 30 days. December 31 days. January 31 days. February 18 days. Understood? Again I am repeating. 20th October 2023 to 20th October 2024, 366 days. Thereafter plus 11 days in October. So with that October over. Then November 30, December 31, January 31 and February 18. So what is the number of days? For 487 days, we need to compute interest. Who? Supplier. On what? 18,000. Why? Because they did not file 3B on time, means they would not have paid the tax on time. You got it? So what is the interest payable by Rudra Limited? 18,000 into 18% into 487 divided by 366. Because in numerator, February you have taken 29 days. So denominator 366. So total 4311. That is the interest payable. Got it? So here interest is payable by supplier also, recipient also. Okay. Next, question number 23 we already discussed. Question number 24. This question number 24, Muscat Motors Private Limited. Question number 24. Muscat Motors Private Limited, hereinafter referred to as MMPL, a dealer of motor vehicles registered in Udaipur, Rajasthan, has given an ex-works contract to Messrs. Ganesh Traders, registered in Ahmedabad, Gujarat, for manufacturing 10 units of pickup vans. Messrs. Ganesh Traders manufactured the vans and handed them over to transporter on behalf of MMPL on 29th April, and delivery on its part is complete at the factory gate in Ahmedabad. when Muscat Motors delivered, Muscat Motors is asking the trader to deliver the cars. Ganesh Traders manufacture the vans and hand over them to the transporter on behalf of MMPL on 29th April. So which means on 29th April itself this MMPL has received the goods. And further, it raised invoice for all 10 pickup vans on the same day. MMPL has recorded the invoice in its books on same day, and price of the vans was 10 lakhs excluding GST 18%, 28%. However, the vans were physically received by MMPL at its showroom in Udaipur, Rajasthan on 2nd May. Now tell me, for which month they can take ITC? MMPL can take ITC, April month or May month? Even though they received the goods in May month, but they can take ITC only in April month itself, because there is a deemed delivery. There is a deemed delivery of goods to a third person on the instructions of the registered person. So they can take ITC. Then after the payment, 2 vans got damaged completely in a fire in the showroom in the first week of May. And therefore they were written off in the books in the month of receipt by MMPL. April month they will take ITC on 10 vans, and May month it got destroyed, so they will reverse the ITC, because if the purchased goods are destroyed you cannot enjoy the ITC, right? So you need to reverse the ITC on these 2 vans. And in which month MMPL is eligible to avail ITC on purchase of vans, and how much ITC is available in respect of some such vans? First you need to write the provision. So what is that provision? A person, as per section 16, all the conditions for availment of ITC is given in section 16. A person can avail ITC if such inward supplies are received, actually received, that is that goods or service are actually received. However, if the goods are or services are delivered to a third person on the instructions or directions of such registered person, such registered person can avail the ITC as and when the goods or service are received by the third person. So in this case, goods are handed over by original equipment manufacturer to the transporter, so therefore they can take ITC in the month of April itself. And how much ITC? Total how many vans? 10 vans. How much is the price per van? 10 lakhs. So 10 lakhs into 10 into 28%. So that is 28 lakhs they can avail the ITC. Thereafter in May month they should reverse the ITC. Why? Because the purchased goods are lost, destroyed, stolen, it is blocked ITC as per 17.5. So therefore they should reverse the ITC. How much? Same 10 lakhs into 2 into 28%, 5.6 lakhs they need to reverse the ITC. Understood? Next, this is related to time limit for availment of ITC. Akarsha Traders, again this is an RTP question only. Akarsha Traders, a registered supplier under GST in Uttar Pradesh, had their GST registration cancelled retrospectively with effect from 1st September of current financial year. The cancellation order was passed on 15 September of the current financial year. At the time of cancellation, the supplier had not availed ITC on certain eligible invoices issued in February and March of the preceding financial year for inward supplies of taxable goods on which ITC is otherwise available. But carefully listen, the registration cancelled with effect from 1st September of the current financial year, and the cancellation order was passed on 15 September. And at the time of cancellation, they have not availed ITC for invoices of February and March of preceding year. So preceding year February, March invoices, they have not taken ITC. What is the time limit? 30th November of this year. Last year February, March means previous year. For that time limit is what? 30th November of this year. But cancellation happened when? Before 30th November, after 30th November? Before 30th November, the cancellation has happened. So condition fulfilled. Yes. Subsequently, on filing an application for revocation, the cancellation of registration was revoked by the proper officer on 15 December of the current financial year. The firm wishes to file its 3B return for the month of September on 21st December of the current financial year and wishes to claim ITC on the said invoice of February and March in this return. Possible? Yes. First condition satisfied. As the regular time limit not expired as on the date of cancellation of registration, ITC can be availed in terms of section 16(6). The time limit for availment of ITC is regular time limit. What is the regular time limit? 30th November of the current year, over that crossed current year, or 30 days from revocation order. What is the revocation order? 15th December, 15 December, 30 days, 14th January, correct? Whichever is later, what is later? 14th of January. So 14th January is the time limit by which they can take ITC. But they want to take ITC when? 21st December, happily they can take. It is within the time they can avail the ITC. Is it clear? So you need to write accordingly. Section 16 subsection 6. When is it applicable? And what is the time limit? So regular time limit or 30 days from revocation order, whichever is later. In the present case, Akarsha Traders is entitled to avail ITC because as on the date of cancellation of registration, the time limit for availing ITC is not expired. So therefore, the time limit is so and so date, and they want to avail ITC for the return of September furnished in 21st December, which is within 14 January. So they can take ITC. Got it? So these are the questions related to input tax credit. And look into question number 26. This is related to composition scheme. Composition scheme, it's a simple topic only. So you can understand there will be two types of questions. One is eligibility question, another is computation of liability question. Eligibility means they will give data and ask you whether they can opt for composition scheme. That is eligibility question. Another question is that they will be asking us, if they are eligible, compute the GST liability. Okay. So this question you check and tell me, is it a eligibility question or computation of liability? Computation of liability, because in the first paragraph itself it is given, it requires you to determine its composition tax liability and total tax liability. Start. Suraj Limited, a manufacturing concern of Rajasthan, having aggregate turnover of 100 lakhs in the financial year 1920, has opted for composition scheme, furnishes you for the financial information, following information for financial year 2021. Here they are asking manufacturing concern. Also one more question is there, also determine composition tax liability if he is a trader. So manufacturer means 1% of taxable turnover, trader is 1% of total turnover, trader is 1% of taxable turnover. Now see the turnover details for the current year 2021. Intra-state supply of goods X chargeable at 5%. Show taxable turnover. So take that. Intra-state supply of goods which are chargeable to nil rates. Take that. For manufacturer take that. Exempted also you take. Intra-state supply of goods by chargeable to 18, yes. Intra-state supply of service chargeable with 5% GST, yes. Interest on fixed deposit, no. Interest on loans, advances, deposits should not be taken anywhere in the turnover under composition scheme chapter. For determining the aggregate turnover eligibility or current year for payment of tax under composition scheme, nowhere interest should be taken. Just ignore the interest on loans, advances, deposits. Is it clear? Next. Inward supply on which they need to pay GST under RCM, that inward supply, for turnover only we need to multiply 1%, but on inward supply we need to pay regular rate even though you are under composition scheme, because composition scheme says subject to 9394, which means if I am under composition scheme, on my outward supplies I will pay tax under composition scheme, but on my inward supplies if I have to pay GST under RCM, that should be the regular rate of GST. So on this 5 lakhs they will pay the regular rate of GST, that is 5%. So don't take 5 lakhs now. So please add this 30 plus 18, 48 plus 30 plus 6 plus 8, total 84 lakhs. 84 lakhs into 1%, that is 84,000, 42,000 CGST, 42,000 SGST. This is composition tax liability. Okay, va? Then after that, what is the RCM liability? 5 lakhs into 5%, that is 25,000. So 12,500 CGST, 12,500 SGST, that is their RCM liability. Say this. So manufacturer 84 lakhs into 1%, 84,000 plus RCM liability 25,000, and total tax liability is 1,09,000. In that 1,09,000 CGST, SGST half. If they are a trader, now come back to this question. If they are a trader, what should be taken? Only taxable turnover, that is 30 and 6. So 30, 30, 60 plus 6 lakhs, 66 lakhs. 66 lakhs into 1%, 66,000 plus RCM no change, 25,000. So total 91,000. And here one important point also you need to check. They are under which composition scheme? 10-1 or 10-2A? Definitely 10-1, because 10-2A, the turnover during previous year should not exceed 50 lakhs. Here it is 100 lakhs, means definitely they are under 10-1. In 10-1, those who are manufacturing or trading or supplying food can be under composition scheme, but if you look into the question, there is some services. So point number 4, intrastate supply of services. How can they be into composition scheme? See, we have a proviso which says, even though you are a manufacturer or you are a trader or supplier of food service provider, up to 10% of turnover during the previous year or 5 lakhs, whichever is higher, can be provided. What was the turnover during previous year? 100 lakhs. 100 lakhs into 10%, 10 lakhs or 5 lakhs, whichever is higher, that is 10 lakhs. Current year you see what is the services? 6 lakhs, so within the limit, no problem. What if it crosses 10 lakhs? From that date onwards, composition scheme is not possible. Means you need to pay tax under normal scheme. Got it? Next. Sir, for this services also, we need to pay 1%. Yes, for the service also we need to pay 1%. That's why we have taken that into 1%. Now, that 1% of what? Taxable or exempted or total? Services irukilliya, and the 10% of turnover or 5 lakhs, whichever is higher, and the services rate 1% of taxable turnover, 1% of total turnover, taxable turnover, 1% of taxable turnover. Manufacturer irundhalum sari, trader irundhalum sari, 1% of taxable turnover, because for these services the applicable rate is the rate applicable to the trader. What is the rate applicable to the trader? 1% of taxable turnover. Answer this question. Question number 27. Question number 27 is also related to composition scheme, but it is little comprehensive. All the points are covered in this. X is engaged in intrastate supply of goods and services in Chennai. His turnover for the financial year 22-23 and 23-24 is given below. So financial year 22-23, 23-24, and they gave some data. This data we will see later. up to March 31st, 2023, that is financial year 22-23, X is a registered person who has not opted for composition scheme. Means they are going for composition scheme only from 23-24. He wants to opt for composition scheme with effect from April 1st, 2023. Is it possible? That is the first question. So first question is whether they are eligible for composition scheme during the current year 23-24. If yes, find out the tax liability of X for the financial year 23-24. So if they are opting current year, what is their liability under composition scheme, and they are not making interstate supplies? Why they gave that line? Because if they make interstate supplies, they are not eligible for composition scheme. He does not supply through e-commerce operator. Why that line is given? If they make supply of services through e-commerce operator, they are disqualified from composition scheme. Supply of services, okay. Now, first question, whether they can opt for composition scheme during current year. For that we need to check previous year aggregate turnover. What is the meaning of aggregate turnover for deciding the eligibility for composition scheme? Total 5 plus 3 minus. What is the 5 plus? Taxable supply, exempted supply, non-taxable supply. Exempted supply itself nil rated is there. Non-taxable supply, zero rated supply, pre-registration turnover. Zero rated means export is applied to SEZ. 5 plus. What are the 5 plus? Taxable, exempted, non-taxable, zero rated, pre-registration. Pre-registration means before getting registered they will have some turnover, that. And 3 minus. What are the 3 minus? Inward supply under RCM, taxes, interest on loans, advances, deposits. Okay. Now see that supply of goods, stationery items or books. So whether we will take it. So total 15, 10. Why? Exempt also we will include. Supply of services by way of extending deposits, loans or advance where consideration is interest or discount. No, don't take. Supply of other services not being restaurant services. Will we take? Yes, that will be taken total. So total is how much? Total 87. No sir, 42 you take out. 30 plus 15, 45. So current year, can they opt for composition scheme? Yes. Which composition scheme? 10-1 10-2A va. 10 இப்ப 10-1 இருந்தா சர்வீசஸ் ப்ரொவைட் பண்ண முடியாது. கரெக்டா? ப்ரொவைட் பண்ணாலும் லிமிட் இஸ் தேர் 10% of services. Now see current year they are providing services 20 lakhs and exempted 10 lakhs, total 30. How can they provide services 30 lakhs and all? Previous year turnover evlo 45. 45 10% enna 4.5. 4.5 or 5, whichever is higher is what? 5. Appa current year they can provide only 5 lakhs if they are under 10-1. So what is the correct section for composition scheme? 10-2A. For 10-2A what is the limit? 50 lakhs. 45 lakhs does not exceed 50 lakhs. So current year they can opt for composition scheme 10-2A. Is it clear? Second question. They have opted for composition scheme current year. Current year under 10-2A, what is the GST payable? 6% of total turnover. But again here interest will not be taken into account. Okay. So see there, what and all will be taken in total turnover? Taxable, exempted, taxable and exempted, non-taxable. Here also you take 5. Taxable will be taken, exempted will be taken. Non-taxable should not be there. Why non-taxable should not be there? If they have non-taxable supplies, they are disqualified from composition scheme. Where we have, yes, 9 RCM. There are few cases they cannot opt for composition scheme. If they make non-taxable supplies, they should not be into composition scheme, correct? So therefore current year taxable, exempted, non-taxable will not be taken, means they should not have, and then zero rated also they should not have, because zero rated is interstate supplies, they should not have, and pre-registration turnover also will not be there, because now only they are getting registered. And interest don't take. Other services, yes, you take. So what is their turnover? 47. Sir, you said services 1% of taxable turnover. Adhenga 10.1 la. Now we are in 10.2a. 10.2a la 6% of total turnover. What is the total turnover? 47 lakhs. In that 47 lakhs, 6%. How much? 2,82,000. Understood? So that is what we need to answer here. First you need to answer about 10.2a. When a person can opt for composition scheme under 10.2a, and thereafter what is their aggregate turnover, and it does not exceed 50 lakhs, so they can opt for composition scheme 10.2a. Under 10.2a they need to pay GST, 3% CGST, 3% SGST on total turnover. So 2,82,000 is the GST payable. Can the GST be recovered from recipient? No. GST under composition scheme they have to pay out of their pocket, and they cannot recover from the recipient. Also, a person under composition scheme, can they take ITC on their inward supplies? No. And what is the document that will be given by a person under composition scheme? Bill of supply. Good. Instead of tax invoice, they need to give bill of supply. So these are the two possible questions usually in composition scheme. One is eligibility, another one will be computation. Okay. So one question we saw on 10.1, another question we saw on 10.2a. Now we are moving on to registration. In registration, comment on the liability to get registered under GST law in the given independent situations for financial year. Your answer should also include relevant provisions of the law, notifications or circulars. First, Miss Ridhima is exclusively engaged in export of ready-made garments from the state of Rajasthan. Export of ready-made garments, and her export turnover during the year is 1.7 lakhs. Apart from export turnover, she has earned interest on fixed deposit 2 lakhs, sorry, the 17 lakhs. Okay. Now tell me, what is your answer? Required to get registered or not required to get registered? Why? Interstate. Exporter of goods is interstate. Export is interstate. So a person who is making interstate, in that I creations, first line is that only. Interstate supplier of goods, not services, interstate supplier of goods. So taxable goods other than handicrafts. So therefore they are compulsorily required to get registered, even though the turnover does not exceed 20 lakhs or 40 lakhs, correct? So here, as they are exclusively engaged in supply of goods, the turnover limit is 40 lakhs. But even then, because Rajasthan 20 lakhs, 40 lakhs only, and that too only goods, but even then compulsorily required to get registered. So what is it you will write? As per section 24, only 3 sections I have to remember. 22 when are they liable to get registered? 23 exemption from registration. 24 compulsory registration. Okay. So what is your answer as per section 24? A person making interstate supply of goods is compulsorily required to get registered. Export of ready-made garments is interstate supplies and they have to register. Got it? Compulsorily they have to register. Second one, Ajanta Enterprises is exclusively engaged in trading of exempted goods under GST in the state of Haryana, and has not taken the GST registration. During the year, its turnover from exempt supplies 47 lakhs, and Ajanta Enterprises also sold old generator for 1.25 lakh during the year. What is your answer? Engaged in exempted goods. Exempted goods, so they have not taken registration. Correct? Section 23, if you are making only exempted supplies, you are not required to get registered. During that year, its turnover from exempt supply 47 lakhs, and they also sold a old generator for 1.25 lakhs during the year, but that is not exempted now. Where is it given old generator is exempted? Not given. So which means taxable. So even though majority exempted, but one taxable they have made. Correct? Will they get the exemption from registration? No. If they are exclusively engaged in exempted supplies, then only they are exempted from registration. Exclusively engaged in exempted supplies. But here they are not exclusively engaged in exempted supplies. So they need to register if their turnover exceeds 40 lakhs. Yeah, 40 lakhs. Haryana, only goods. So 40 lakhs. It crossed 40 lakhs. Yes. So they have to register. So the applicable limit is 40 lakhs. And here it is 48.25 lakhs. So they are liable to get registered. Then any person engaged exclusively is only not liable for registration. Then third, Mr. P has presence in 2 states. One in Haryana, another in Rajasthan. So he is doing business in 2 states. Whether those 2 states in MMTN, use stamp? No. He is registered in the state of Rajasthan even without crossing the threshold limit. He registered. Where? Rajasthan. Voluntarily he got registered. His turnover during the year in Rajasthan is 32 lakhs and Haryana is 5 lakhs. So 32 plus 5, 37 lakhs. Applicable limit 40. None of the state is in MMTN, use stamp, and they are exclusively engaged in supply of goods. So the limit will be 40 lakhs. But what is their turnover? 37 lakhs. Whether they are liable to get registered? No, they are not liable to get registered. But they got registered. Correct? They are not liable to get registered, but got registered. Okay, where? Rajasthan. Ipa adunala Haryana register pananuma? No. See, if a person is liable to get registered, then he need to register in every state from where he is making taxable supplies. Puridappa. Sir, first liability to registration irukanum, sir. Appoda vandi ella state liyu register pananum. Got it? But voluntarily when you choose to register, no compulsion that if you are registering in one state, you have to register in other state also. You got it? So since registration in GST is PAN based, once a supplier is liable to register, he has to obtain registration in each state in which he operates under the same permanent account number. Thus, P is liable to get registered in Haryana also, provided he is not engaged exclusively in making exempt supply from Haryana. Okay, va? If they are liable to get registered. However, a person who is voluntarily registered in one state needs to obtain registration in another state from where he make taxable supply only if aggregate turnover exceed the applicable limit for registration. In that case, P is not liable to obtain registration from Haryana since the aggregate turnover does not exceed the threshold limit for registration. Are you getting this? Then 4. Yes, yes. So he got registered in Rajasthan. Now we need to see the overall turnover. Overall turnover when it crosses 40, that date he need to register in Haryana. Okay. 4. Mr. John is engaged in business of buying and selling of shares on his own account. from the secondary market, and income from his income from this activity is assessed as business income under the Income Tax Act 1961. Correct dane? Buying and selling of shares. Capital gain la varuma, business income la varuma. PGBP ya capital gains ah? இல்ல இங்க நான் கேட்கல, ஜெனரலா கேட்கிறேன். PGBP ya capital gains ah? நான் இந்த क्वेश्चन கேட்கலப்பா, ஒரு ஜெனரல் நாலேஜ் அவுட் ஆஃப் தி பாக்ஸ் கேட்கிறேன்ப்பா. PGBP ya capital gains ah? If he is a regular trader, buying and selling stock, then PGBP. Intraday இல்ல F&O இந்த மாதிரி ட்ரேட் பண்ணா அது வந்து PGBP. Suppose if he is a long term investor or a investor, so invest பண்ணிட்டு அதுக்கு அப்புறமா அவங்க சேல் பண்ணுவாங்க, எப்ப வேணுமோ அப்ப சேல் பண்ணிப்பாங்க, then capital gains. ஓகேவா? இங்க வந்து அவங்களோட பிசினஸே buying and selling of shares. Okay, so whether this particular person has any supply under GST? No. Why? Because securities are neither goods nor services. During the year, his total sales turnover from shares was 90 lakhs. Is he required to register? Not required to register. 90 crores irundalum no need to register, because securities are neither goods nor services. இதே இவன் வந்து புரோக்கரா இருந்தா, ஸ்டாக் புரோக்கரா இருந்தா, brokerage வரும். That brokerage will be supply of services, then he need to register if his aggregate turnover exceed 20 lakhs. புரியுதா? So here the answer is they are not required to get registered because the shares are neither goods nor services. Okay, so selling of shares is not supply, therefore not liable to get registered. Then 5, Baba Private Limited engaged in cultivation of land in Tamil Nadu. Baba Private Limited, not an agriculturist. I told you this point. So agriculturist can be individual or HUF only. Even if others are doing agriculturist, they will not be called as agriculturist under the exemption. So Baba Private Limited engaged in cultivation of land in Tamil Nadu, and they sold agricultural produce out of cultivation of land to the extent of 75 lakhs. They employed hired labor to cultivate and harvest various crops, whatever it may be. They will not get exemption from registration. And what is their turnover? 75 lakhs. Tamil Nadu limit is 40 lakhs. So should they register? Yes. Agriculturist means only an individual or HUF, but not others. So as per 23, an agriculturist is exempted from registration, but such exemption is not applicable as the cultivator is other than individual or HUF, and their turnover cross 40 lakhs, so they are required to get registered. But agricultural produce is exempted na sir? Which idiot told you? Who said agricultural produce is exempted? Rubber தெரியுமா? ரப்பர் அது வந்து agricultural produce, பிளான்ட்ல இருந்து வரும். exempted-ஆ? இல்ல, taxable. tobacco leaf தெரியுமா? கஞ்சா தெரியுமா? இது எல்லாமே வந்து not exempted, அதெல்லாம் agricultural produce தான். Got it? So we cannot say that everything agricultural produce is exempted. If that be the case, tea, coffee, then lot of things like pepper, cashew nuts, these are all agricultural produce. Up exempted? No. So only few essential agricultural produce they gave as exempted. We don't have anything. What we have is that service in relation to agriculture. If someone is doing agriculture, or if there is agricultural produce, if you do service, your service is exempted, not that agricultural produce is exempted. Is it clear? So where in question it is given that the agricultural produce is exempted, it is not given, which means I need to register when aggregate turnover exceed 40 lakhs. Good question, no? So lot of points, all 22, 23, 24 and special points, everything is covered in this question. Then next, this is related to this CTP, NRTP, like that one provision is there. This is untapped area, usually repeatedly 22, 23, 24 only they will be asking questions. But in case if they want to go out and ask, they can make a question on special cases, that is section 27. Now look into this question 29. Mr. Allen, a non-resident person, wishes to provide taxable supply of goods in India with effect from 1/7/2024. He has no fixed place of business or residence in India. He import goods worth rupees 20 lakhs, basic customs duty 10%, social welfare surcharge 10%, IGST 18%. His expected outward supply in India is 40 lakhs excluding GST 12%, and inward supply in India is 25 lakhs excluding GST 18%. He seeks your advice in the following aspect relating to GST. When shall he apply for registration? So usually CTP and NRTP, they should make application for registration at least 5 days before commencement of business. All others, they should make application for registration within 30 days from the date they are liable to register. But CTP, NRTP not like that. They have to apply for registration at least 5 days before commencement of business. So in the present case, when are they commencing business? 1/7. So 5 days before 1/7 means 25/6. So by 25/6/2024, they need to make application. Then second, is permanent account number mandatory for his registration? No, because non-resident may not have a permanent account number. Not shall not have, may not have. Why? If non-resident is having Indian income, he has to pay tax, income tax. So non-resident will not pay income tax on foreign income, but non-resident will pay income tax on Indian income. Income accruing or arising or deemed to accrue or arise from India, they have to pay income tax. For that purpose, they may get a permanent account number. What if they don't have Indian income? Then they don't have to pay income tax, so permanent account number may not be there. For that reason, if they don't have permanent account number, using their passport number, they can get registered, and that is what you need to write. PAN is mandatory for registration. However, in case of NRTP, registration is granted based on passport or any identification number in case of person other than individual. But that should be signed, that application should be signed by an authorized signatory having valid permanent account number. Means in India they should have a authorized signatory. They should appoint one person and they will sign using their permanent account number. Then third, what is the period of validity of registration certificate granted to him? Up to 90 days. Will he be able to extend the validity? It can be extended for a further period not exceeding 90 days. Can he avail ITC on inward supplies? Being a non-resident taxable person as per section 17 subsection 5, they cannot avail ITC on inward supplies except with respect to import of goods. How much ITC is available in the given case? How much they are importing? 20 lakhs. In that 20 lakhs, what is the IGST? 18%. So therefore, 3,60,000 they will be able to take ITC. Correct? Sure? Sure? Sure or not sure? Why? It's not correct, pa. 15(2)(a). Taxes, duties and cess by whatever name called other than GST should be included while computing the GST. How you missed that point? Correct? அப்ப GST calculate பண்ணும்போது customs duty add பண்ணுமா, social welfare surcharge add பண்ணுமா, இதெல்லாம் other than GST தானே. இப்ப GST is final. Okay, add and tell me. 20 lakhs, customs duty 10% on 20 lakhs. So 2 lakhs, you can see here, assessable value 20 lakhs, basic customs duty 2 lakhs, social welfare surcharge is 10% of customs duty, that is 20,000. Okay, that basic customs duty into 10%, that is 20,000. But total enna 22,20,000. Surcharge வந்து எப்பவுமே tax மேல இருக்கும்பா. Okay, so surcharge is on tax. So your customs duty 10% on a surcharge is on tax, that is 10%. Okay, so therefore total how much? 3,99,600 on that 18%. What is that on that 18%? Sorry. Oh, total eva. Okay, 22,20,000 into 18%. That is 3,99,600 is the ITC. Okay. Next. So you understood the trap. What is that? While computing GST, we will compute it only on value. But 15(2)(a), first point, all taxes other than GST should be included in the value. Then last point you see. Compute the advance tax payable by him at the time of making application for registration. What is the advance tax? Estimated net liability, not gross liability, net liability. What is the estimated turnover? 40 lakhs. What is the rate of GST? 12%. 40 lakhs into 12%. 4,80,000 minus ITC already they have. Estimated ITC 3,99,600. So what is the estimated net GST payable? 80,400. Understood? So this is on registration. If they want to ask, it's untapped area, they can make a question like this. Not tested in exam. Not at all tested in exam. This is not tested in exam so far, but they can make a question like this. Okay. Question number 30. Discuss whether e-invoice or dynamic QR code in invoice is applicable in the following cases. A government department is registered under GST. Its aggregate turnover in the preceding financial year is 22 crores. They are making outward supplies to registered as well as unregistered persons. What is your answer? Sir, first of all, government department turnover during previous year exceed 25 crores, which means e-invoice should be applicable, but they are covered under biggest. Don't write biggest in exam. They are covered under the exempted categories. That is, what is that exempted category? Government department or local authority. Therefore, e-invoice is not applicable. First you need to write, even though their aggregate turnover during the previous year exceeds 5 crores, but they are not required to give e-invoice. Why? As they are covered under the exempted category of persons who are not required to give e-invoice. Got it? Next. Why B2C dynamic QR code not applicable? They make B2B pa, B2B ki invoice illa pa. Got it? Fine. But why B2C dynamic QR code is not applicable? Because what is their turnover? 22. For dynamic QR code, what should be the turnover? 500 crores. So what is the reason that you will write? As their aggregate turnover does not exceed 500 crores during any previous year, dynamic QR code is not applicable for B2C supplies. Is it clear? Answer I have given already. E-invoice not required. Dynamic QR code also not required. The reason already I have mentioned. That reason if you write, that is sufficient. Okay. Next, second part. Dream World Private Limited is registered under GST in the state of Haryana. During the preceding financial year, its annual aggregate turnover was 12 crores. Preceding year, how much turnover? 12 crores. Means it exceeds 5 crores. In the month of April, it supplies goods worth rupees 12 lakh to Nightmare Limited, a registered person in SEZ. E-invoice applicable or not applicable? Applicable. Supply by SEZ unit only, e-invoice not applicable. Okay, va? Supply by SEZ unit. Either supply by SEZ unit or to SEZ unit. To SEZ unit, e-invoice is applicable. Moreover, they are registered. B2B turnover during previous year exceed 5 crores. So e-invoice is applicable. And dynamic QR code is not applicable. Why? Because it is not a B2B. Sorry, it's not a B2C. It is B2B supply. So dynamic QR code is applicable only for B to C supply. So dynamic QR code is not applicable in case of B to B supplies. That is the reason. Understood? Third point. Bali Limited is registered under GST in Maharashtra and is situated in SEZ, having an aggregate turnover of 600 crores during previous year. They made supplies to Adarsh Private Limited, an unregistered person. B to C, B to C. So therefore B to C, first E invoice is not applicable. Why E invoice not applicable? Because it is supplied by SEZ. See, whether it is B to B or B to B or B to C, E invoice not applicable if the supply is by SEZ. And the reason what you write is important. If you write it is a B to C, that's why E invoice not applicable. The reason is wrong. The answer is wrong. Why? Sorry. If you are writing for B to C, E invoice not applicable. If it becomes B to B, then applicable. That's what you mean to say. Even if it is B to B not applicable, na. Appa correct reason enna? Because it is supplied by SEZ. That's why E invoice is not applicable. You think that you wrote correct answer, but you may not get marks because the reason is wrong. You understood? Both cases E invoice not applicable. Now what reason you are writing, depending upon that the marks will be. Then next, why dynamic QR code is not applicable here? Applicable or not applicable? Applicable, sir. Definitely applicable. What is a turnover? Means more than 500 crores. For SEZ unit, is there any relaxation in dynamic QR code? No. So supply by SEZ not covered under exceptions, and aggregate turnover during previous year exceed 500 crores. Therefore, dynamic QR code is applicable. Next, Harnam & Co. dealing in interior decoration products made supply to various persons located outside India. Means what is it? Sale from India to outside India. What is it? Export. Export. In case of export, whether E invoice is applicable? Yes. No, not applicable. Clearly we have seen that in case of zero rated supply, E invoice is applicable. So that is export supply to SEZ. E invoice is applicable, zero rated supplies. Okay. So therefore whether E invoice is applicable in this case? Yes. E invoice always applicable in case of export of goods or services, but dynamic QR code is not applicable. Why dynamic QR code not applicable? Because the recipient is outside India. Understood? Then see this, question number 31. Happy Limited, located at Alwar, Rajasthan, exclusively manufactures and sells a product Shine and Shine, which is exempt from GST. Answer my question. If I am making only exempted goods, should I register in GST or exempted from registration? Exempted from registration. Who are exempted from registration? Who are all exempted from registration? If I am making exclusively exempt supplies, or if I am making exclusively non-taxable supplies, or if I am making exclusively supply covered under RCM, or if I am an agriculturist, 4 people are exempted from registration. Clear? So why Happy Limited is exempted from registration? Because they sell a product which is fully exempt from GST. Happy Limited sells Shine and Shine only within Rajasthan. If they make interstate supplies, then that too if it is taxable they need to register, otherwise they are not required to register. Is it clear? Yeah, interstate supplies if they make, only interstate supply of taxable goods they are compulsorily required to get registered. The turnover of Happy Limited in the previous year was 60 lakhs. Happy Limited purchased additional machinery, capital goods for manufacturing Shine and Shine on 1st April 2021. The invoice for supply of machinery was also issued on 1st April 2021. The purchase price of the machinery was 25 lakhs excluding GST. What they did, What they did? They purchased the machinery. How much is the value of the machinery? 25 lakhs excluding GST, 12%. On which date they purchased? 1st April 2021. But so far they are what? Making only exempted supplies. On 1st December 2021, the exemption available on the product Shine and Shine was withdrawn by the central government, and CGST, SGST 18% was imposed thereon. The turnover of Happy Limited on 30th September 2021 was 45 lakhs. Examine the issue and provide the answers. Supporting explanatory note for each answer. Question number 1. Whether Happy Limited have to register under CGST Act 2017. First part. Year 2000, that is previous year, correct? 2020-21, what was their turnover? 60 lakhs. Are they required to get registered or not required to get registered? Last year. Not required to get registered. Why not required to get registered? Because they are making only exempted supplies. So as per section 23, they are exempted from registration, not required to register. Is it okay? Clear? Now next. 2021-22, from April 1 till 30th, when it became taxable, 1st December up till 30th November, they are making exempted supplies, correct? Thereafter, they started making taxable supplies. What was the turnover in this period? Already by September itself, 45 lakhs. But definitely by November, it will be more than 45 lakhs only. Correct, Appa? By September itself, 45 lakhs. Then definitely it will be greater than 45 lakhs. Now, where are they doing business? Which state they are doing business? Rajasthan. For Rajasthan, is Rajasthan in MMTN? Manipur, Mizoram, Tripura, Nagaland? No. Is Rajasthan in U stamp? Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya, Puducherry? No. Other states. Are they selling only goods? Yes. Exclusively manufactures and sells the product Shine and Shine. Means they are making only goods. If they are making only goods, then what will be your answer? 40 lakhs is the applicable limit. The applicable limit is 40 lakhs. The applicable limit is 40 lakhs. Is it clear, Pa? Now tell me whether they are liable to register or not liable to register with effect from 1/12. With effect from 1/12, what happened? Exemption became taxable. So are they liable to register from 1/12? Yes. They are liable to register from 1/12 because their turnover already crossed 40 lakhs. Applicable limit is 40. Their turnover already crossed 40. So with effect from 1st December, they need to register. So that is the answer for the first question. So what is it you will write for the first question? 2 sections you need to remember. Actually 3 sections. 22, 23, 24. 22 is what? When a person is liable to get registered. 23, exemption from registration. 24, compulsory registration. First you will write a person as per section 23. A person who is making exclusively exempted supplies is exempted from registration. In the present case, for the previous year 2020-21, as they are making only exempted supplies, they are exempted from registration. However, as per section 22, if a person is making both taxable supplies and exempted supplies, they have to register as and when aggregate turnover exceed threshold limit. In the present case, the applicable threshold limit is 40 lakhs and they started making taxable supply from 1st December. Therefore, they are liable to get registered from 1st December. Like that you should write. Understood? Then, second part. So, whether they are liable to get registered? Yes. Now, second part. Can Happy Limited take ITC on the machinery purchased? If yes, what is the amount of ITC that can be availed? How much ITC they can take? Capital goods, they purchased a machinery. Can they take ITC? There are two sections for this. 18.1a and 18.1d. 18.1a and 18.1d. First, you need to answer that they are liable to get registered. When? So, on 1/12/2021, they are liable to get registered because that is the date on which their aggregate turnover exceeds threshold limit of 40 lakhs. That we discussed. Next, 18.1a is applicable because they are liable to get registered and now only they are getting registered. Thus, a non-registered person cannot take ITC on capital goods. So, 18.1d not applicable to them. Okay. So, they can take only when they are already registered. Happy Limited is not registered at the time when its exempted supply became taxable. Thus, company cannot take proportionate ITC on capital goods. Okay. So, this question is a trap. We will think that 18.1d is applicable, but actually it is 18.1a. This will be possible to be tested for 5 marks. 2.5 marks for registration, 2.5 marks for the ITC, section 18, reversal. Saripa, same question. What if they voluntarily registered in the last year itself? 18.1d will be applicable. Then how much ITC they can take on this capital goods? Tell me. How much ITC they can take on capital goods if they are already registered? Calculate panni solna. Provision, I can also tell you. Calculate and tell. 2 lakh? Every 2 lakh 55? 3 lakh is the GST, that is ITC. Okay, 3 lakhs. How 3 lakhs? 25 lakhs into 12%. So, ITC availed. What is the ITC availed? 25 lakhs into 12%. 3 lakhs minus how many quarters? When is it purchased? 1st April. What is the date of conversion? 1st December. So, which means you need to count till 30th November. From 1st December it is taking. So, closing stock is before that date. Up to that, how many quarters? April, May, June, July, August, September, October, November. So, December, even though it is not there, but part thereof. So, which means how many quarters? 3 quarters into 5%. That is 3 lakhs into 15%. How much? 45,000. So, remaining 2 lakh 55,000 will be the ITC availed. This is not the answer for this question. If the question gets modified and if they say that they are already registered, then section 18.1d will be applicable. When 18.1d is applicable, we need to go by this way. This is the ITC availed. Got it? Next. Another question. Question number 32. This is related to credit note application. So, whenever credit note is given, what will happen? And I connected this with the exemption related to construction services. For construction services, there is one exemption. What is that? If I am selling a flat, including the value of the land, then full value GST not payable. GST will be payable only on 2/3. 1/3 will be exempted towards land. For example, 75 lakhs is the value of the flat. We don't have to pay GST on 75 lakhs. I have to pay GST only on 50 lakhs. How? 75 lakhs is full value of the flat including the land below. Okay. Minus 1/3. What is 1/3 of 75 lakhs? 25 lakhs I need to reduce. So, what is the balance? 50 lakhs. On that I need to pay GST. This is a question related to that. See this. DLH Limited, a real estate developer company, is located in Chennai On August 1st, it enters into an agreement with Mr. Z to transfer 1000 square feet of commercial flat in a building under construction in Madurai. As per the agreement, the possession of the flat will be handed over in March 2024. Agreed consideration is 90 lakh plus GST 18%. Tax invoice issued by DLH gives the following data. So what they did, 90 lakhs minus 1/3. Exemption is there now, 1/3 exemption. So minus 1/3, that is 30 lakhs. Balance 60 lakhs is the taxable value, and taxable value add GST. So 5 lakh 40, 5 lakh 40. How much money the recipient has to pay? 60 lakh plus 10 lakh 40, 90 lakh plus 10 lakh 40. Again I am repeating, in the 90 lakhs customer kudukanuma kudukudadappa. Ana GST is computed on, got it, purida. Customer has to pay 90 lakhs, but we compute GST only on 60 lakhs because 1/3 is exempted. So therefore 90 plus 10 lakh 80. So 90 plus 10 lakh 80, 1 crore 80,000 is what we need to get from the customer. Is it clear? Now what customer did? See above the table. Customer pays 70 lakhs by check at the time of signing the contract. So part consideration received before completion certificate, correct? Means will it be subject to GST? Yes. Suppose, same question, if entire consideration is received after completion certificate, then what will be your answer? Excluded from supply, there is no GST, because 7 subsection 2 says sale of land including sale of building, but for building entire consideration should have been received after obtaining completion certificate or first occupation, whichever is, got it? So what happened here? Possession is handed over on March 10, but Z is not satisfied with the quality of the stone and wood used by DLH. So naturally what Z will do? You are the builder, your customer is telling I am not happy with the house, so some amount he will negotiate. He cannot tell, no, take this house, demolish everything and give me land, like that will he say? Then where from we can do all those things? So definitely some negotiation will happen. Consequently, against the balance payment of 30 lakh 80, how 30 lakh 80? Total of how much per he should give? 1 crore 80. How much he already paid? So what is the balance that he need to pay? 30 lakh 80. Z pays 24 lakhs on March 20. So how much is due? 6 lakh 80. 30 lakh 80 minus 24 lakh, 6 lakh 80 is due, which is accepted by DLH as full and final payment. Discuss the treatment of balance 6 lakh 80,000. So what supplier should do for that 6 lakh 80? He should do something. Otherwise, he will end up paying GST on entire amount, correct? So he should do something. What is it he need to do? He need to give a credit note. Invoice value reduced the, what was the original invoice value? 1 crore 80,000. Now 6 lakh 80 they are receiving less. When 6 lakh 80 they are receiving less, then definitely they need to give a credit note for that, correct? Yes. And this recipient should reverse ITZ is not required. Okay, you told me that point. ITZ should be reversed by recipient, not required. Yana our customer. Customer kengadhar ITZ. There is no ITZ for a customer, sir, because he is an unregistered person. Only registered person will have ITZ. He is an unregistered person. Mr. Z is an individual. Suppose if Mr. Z is a registered person, then you write that point that they should reverse the ITZ. But supplier, can they give a credit note or not? Yes, they can definitely give a credit note. What is the time limit to give the credit note? What is the time limit to give the credit note? 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. In 5 places, this time limit is same. What are the 5 places? Time limit for availing the ITZ, time limit for issuing the credit note, time limit for rectification of GSTR 1, time limit for rectification of GSTR 8, time limit for rectification of GSTR 3B, 1, 3B, 8, 8 when the TCS return. So in all these cases the time limit is same. Okay. Now when invoice is prepared, see the question, when invoice is prepared, August 1st itself, correct? August 1st, 2023, that is August 1st, 2023. Now, when the person is telling I don't want, March 10, 2024, correct? A credit note has time limit or no time limit? Time limit is there. This is which financial year? Invoice 23-24. In 23-24 time limit is what? 30th November 2024 or date of filing annual return. Usually what is the date of filing annual return? 31st December 2024, whichever is earlier. Which is earlier? 30/11/2024 is the earlier date. Is it clear? By that time they can give the credit note, and right now we are in which month? March 2024 only credit note can be issued. But the problem is about the calculation. For what amount the credit note to be issued? 6,80,000 I know, but breakup I need. You understood what I am telling? 6,80,000 I will give credit note, but in credit note I have to mention how much is value, how much is GST. Got it? How to calculate that? How to calculate that? See, if the 6,40,000 or 6,80,000 is inclusive of GST, full inclusive of GST, the problem is 6,80,000 into 12/112, like that we can calculate. But the problem is, in that 6,80,000, some portion is exempted, some portion is taxable. On taxable only there will be 12%, correct or not? So what is that? What is that portion? Say this. Either you can calculate it by taking X, or you can calculate it by taking 100. Okay, say this. Let 100 be the total amount. Let 100 be the total amount. In that 100, what will be exempted? 1/3 means 33.33 is exempted. So remaining is what? 66.67 is taxable. On that 66.67, what is the GST? 9%, 9%. Calculate. Together calculate pannilama. Total. Adukapram we will do breakup. So total 18. 18 is how much? 66.67. 12. Sorry. 66.67 into 18%. That will be 12 rupees. Okay. So what is the total amount that the customer has to pay? See, again you are making mistake. Why 54, etc. and all? 100 he should pay. Yes or no? 100 he should pay plus 12 he need to pay. So 112. Got it? If in the 112 வந்து 6,80,000. Okay va? The 112 வந்து 6,80,000. அப்ப 100 எவ்வளோ? Cross multiplication. 100 is how much? 100 is how much? 100 into 6,80,000 divided by 112. How much? 6,07,143. You understood how you got 6,07,143? Yeah, this total number they have given in the question, but we need tax amount, but directly you cannot calculate. If not this question, what we would have done? 6,80,000 into 18/118, directly we would have got the answer. But why are we doing this much complexity? Because in that 6,80,000 there is a taxable portion and there is a exempted portion. we need to divide that for that purpose. So total 6,80,000, then what is 100? 6,07,143. In that 1/3 is exempted, correct? Take out 1/3. 2,02,318. Check pa 1/3 pa 1/3 and not 6,07,143 into 1/3. How much? 2,02,318. Then the remaining portion you will get 4,04,762. On that you compute CGST 9%, SGST 9%. You will get the tax component. 36,429. 36,429. Is it clear? Sir, how you got 6,07,143? Again I am repeating. Let 100 be the value. In that 100, 33.33 will be exempted. 66.67 will be taxable. On that 18% will be 12. So total from customer we will get this 100 rupees, this 12 rupees. So 112 rupees is what we will get. That 112 if it is 6,80,000, then 100 will be how much? 6,07,143. Is it correct? So 6,07,143 into 1/3 is how much? 2,02,381. In the 6,07,143, correct? Correct, Dane? Okay. Then this will be 2,02,381. But this will be minus this 6,07,143, 4,04,762. Okay. So typing mistake. 81 ku 180 like that you had mentioned. So 4,04,762. On that 4,04,762, so this brackets not required pa. So into 9%. What is into 9%? 36,428.58. So round off to 9. So 36,429. Understood? So that is the answer for this. This is application based question. Actually this is not tested in exam and all, CA exam. In CMA they asked this question. I took it from there. Okay, CMA Inter they asked this question. So I thought definitely there is a possibility they can ask like this. Next. Question number 33. This is related to e-way bill and is based on that blocking of e-way bill. Answer the following questions. What is blocking of e-way bill generation facility and in which situations it will be blocked? Blocking means they will not be able to generate the e-way bill for their outward supplies. So blocking means disabling a taxpayer from generating e-way bill when? If they are under composition scheme but not filed CMP 8 for 2 consecutive quarters, or they have not filed 3B and GSTR 1 for consecutive 2 months, or their registration is suspended. In all these cases, e-way bill with respect to outward supply is blocked, but e-way bill with respect to inward supplies not blocked, that can be generated. Whether recipient can generate e-way bill of blocked GSTN indicating them as supplier and vice versa, no. Sir, if my e-way bill is blocked for outward supply, for that outward supply neither me nor my recipient nor any transporter. Can transporter, e-commerce operator, courier agency generate e-way bill in respect of block GSTN? No, no one, not possible. Can e-way bill be generated for inward supplies of block GSTN? Yes. Can the block GSTN transport exempted goods? Yes. Sir, anyhow for exempted goods, e-way bill is not required. When exempted goods are transported, e-way bill is not required, so they can happily transport it. Clear? This is an area, blocking of e-way bill is an area not tested in exam. Maybe they can ask as a theory question or they can make a question like this. Then look into the next one. This is related to interest computation. Read the question carefully. Agni Limited filed GST return under section 39 for the month of January 2021 on 11th April 2021. Original due date for the said return was 20th February 2021. Details of the tax assessed as payable for the said month are given below. So what is the month for which they need to file 3B? Month, January month, correct? For the month of January they need to file. By when they should file? For means month, when means due date, okay. For the month of January by 20th February, but when they file 11th April means there is a delay in filing 3B, correct? When there is a delay in filing 3B, whether interest is payable or not payable, yes, on what? Gross liability, net liability, net liability. Net liability means what? Gross minus ITC plus RCM, that is called as net liability. If I filed my return on time, what I will be paying? Net liability. Why will I pay gross? Net only now I will pay. So when I file the return late also, the delay is on what? Net liability. So interest should be on net liability. So what is the net liability in this case? Calculate and tell me. One lakh 50,000. Sure. How did you calculate? 1,80,000 minus 70 plus 40. Sir, GST paid under RCM, you have to pay using only cash ledger. So ITC you cannot set off. But whatever GST you paid under RCM, you can take ITC, no? Up ITC vandu 70 plus 40, 110 dane. Again I am repeating, listen carefully. Sir, on my purchase, I have to pay GST under RCM. That's not cash leda pay pannu. But whatever I pay, I can take it as ITC. Appa the 40,000 ITC edukka mudiyum illaya? Then why are we not adding to 70,000? Because 70,000 includes 40,000. Because that 70,000 is ITC available for utilization, means this RCM is also included in the ITC available for utilization. Is it clear? So what you did is correct. Don't get confused. I will confuse you, but you be clear. Okay. So 40,000 rupees is already there in 70,000. So that's why 1,80,000 minus 70 plus 40, 1,50,000 is taken as the net liability. How many days delay pa? When they should have filed? 20th February. How many days delay in February? 8 days. Don't count 20th. Don't count 20th. That from date don't count. Due date. After due date you count. 8 days in February. March 31 days. April 11 days. So total how many days? 50 days. For 50 days we need to compute interest. 1,50,000 into 18% into 50 by 365. So we need to pay 3,699 under CGST and 3,699 under SGST, because what you have done is 1,50,000 under CGST, then parallelly amount should be taken under SGST. Is it clear? Now see the second part. What is it they are trying to convey? Assuming that the company has a ITC balance of 2,50,000 each under CGST, SGST for the said month, compute the interest payable if the entire tax due for the said month was paid through credit ledger to the extent possible as per the provisions of the Act. How much will be net liability? 0, no sir. RCM you have to pay by cash. You cannot use ITC for payment of GST under RCM, that has to be paid by cash. So 2,50,000 you can use for payment of 1,00,000 80. Even though still you have ITZ that can be carried forward, but that cannot be used for payment of RCM 40,000. That 40,000 we need to pay by cash. So 40,000 into 18% into 50 by 365. 986. That will be the interest payable. Is it clear? Then next. Question number 35. So this is related to annual return and final return. Who is required to file annual return? Registered person whose turnover exceeds 1 crore, 2 crore, 3 crore, 5 crore, 6 2 crores, 2 crores, 2 crores. If their turnover exceeds 2 crores, they have to file annual return. What is the form of the annual return? GSTR 9. GSTR 9. If their turnover exceeds 5 crores, they have to file GSTR 9 and 9C. 9C on the reconciliation statement. How much is your turnover as per accounts? How much is the turnover as per GST? Why there is a difference? How much is the ITC as per your books? How much is the ITC as per returns? Why there is a difference? This reconciliation we will do. Got it? So that also we need to submit in GSTR 9C. To whom? Turnover exceeds 5 crores. Turnover exceeds 2 crores, GSTR 9. That is annual return. What will annual return contain? Throughout the year, what is your turnover, what is your ITZ, those details will be there in GSTR 9. Final return like that one return is there, GSTR 10. Yaar file panno? GSTR 10. Very good. Cancellation of registration. Whenever your registration is getting cancelled, you have to file GSTR 10. By when? Time limit. 3 months from the date of cancellation. Whenever effective date of your cancellation, angindi 3 months. Illana? Order of cancellation 3 months. So what is the difference between date of cancellation, order of cancellation? Date of cancellation is the effective date from when your registration is cancelled. Order of cancellation is the date on which order has been served to you. Served to you. Got it? So whichever is later plus 3 months. Okay. In the question enna, sir, their registration is cancelled, sir. If final return as well as annual return file pannuma, illa only final return is sufficient. That is the question. See there. The aggregate turnover of Mr. Prithvi, a registered person for the financial year 2021 was 440 lakhs. The outward supply of Mr. Prithvi is exempted owing to a notification from central government, and Mr. Prithvi decided to cancel his registration during the financial year. He filed final return, but he has not filed the annual return under section 44 before the due date, as he is of the opinion that either final return or annual return is required to be filed, but not both. What is your answer? No. Are they making transactions during that year? Are they making transaction during that year? Illana eppadi 440 lakhs turnover varum. Correcta? 440 lakhs means definitely they need to file a annual return. And as their registration is getting cancelled, they should file a final return also, both annual return as well as final return. Annual return because turnover exceeds 2 crores. Sir, yes, sir, registration cancelled. There is a reason. They are making exempted supplies. See there. Their registration is exempted because of the notification. They started making exempted supplies. That's why the registration is cancelled. Discussed whether the contention of Prithvi is valid. No. Also discuss the provisions as to late fee, if any, for filing returns. What is the late fee for delay in filing annual return? Annual return. Turnover during previous year does not exceed 5 crores, 25 rupees per day. Turnover during the previous year exceed 5 but does not exceed 20 crores, 50 rupees per day. Turnover during previous year exceed 20 crores, 100 rupees per day. Limits na vechukongappa. Previous year turnover does not exceed 5 crores. How much? 25 rupees per day. Exceeds 5 but does not exceed 20. How much? 50. Double. And if it exceeds 20 crores, double. What is double to 50? 100. What is the maximum? First two cases, 0.02% of turnover. Last case, 0.25% of turnover. Does not exceed 5 crores, more than 5 but does not exceed 20. The percentage will be 0.02% of turnover. That is the maximum late fee. Suppose if it exceeds 20 crores, 0.25%. Sir, what is the page number, sir? 168. Check page number 168 in revised book. You can see the late fee. Page 168 in revised book. One table is there, late fee table is there. In that late fee table, you can see last GSTR 99C like that. Any cancellation of registration, you have to file final return. Either you voluntarily cancel or department has initiated cancellation. Any case, once your registration is cancelled, you have to file final return. Okay. That's where they gave 3 months. Revocation also time limit is what? 90 days, which can be extended for a further period of 180 days. So if you go for revocation, whether a final return is required? No, because you don't want your registration to be cancelled. So you can go for revocation. Got it? Suppose if you don't want revocation, then you have to file final return. See this, sir, we don't know the number of days, sir. How many number of days there is a delay, we don't know. But what is the turnover during previous year? Does not exceed 5 crores. So what is the maximum late fee? 0.02% of turnover. Correct? This 25 rupees per day. Now per day information we don't have number of days. Up maximum enna? 0.02%. What is 0.02% of 440 crores? Sorry, 440 lakhs. 440 lakhs into 440 lakhs into 0.02%, 8,800. So they need to pay 8,800 under CGST. But this is CGST late fee. An equal amount will be payable under SGST. Understood? Then say this. This is related to TDS. Manihar Enterprises, registered in Delhi, is engaged in supply of various goods and services exclusively to government departments, agencies, etc. and persons notified under section 51 of CGST Act. It has provided the information relating to the supplies made, their contract value and the payment due against each of them in the month of October. All these are supplies to notified recipients only. First case, supply of stationery to Fisheries Department of Kolkata, 2,60,000. What is the contract value? 2,60,000, inclusive of GST, exclusive of GST. But contract value should be computed as excluding GST. So what is the rate of GST given in the question? 9% CGST, 9% SGST and 18% IGST. Now take out 18%. So do the calculation. 2,60,000 into 100 by 118. 100 on the value 18 GST. So into 100 by 118. How much? Exceed 2,50,000 does not exceed 2,50,000. Does not exceed 2,50,000. So TDS is applicable or not applicable? Not applicable. Please don't see the payment. See the contract value for application of applicability of TDS. And a TDS applicable, then TDS will be computed on payment. You understood? Then second, supply of heavy machinery to PSU located in Uttarakhand. What's the value? 5,90,000. So you take out GST and check 5,90,000 into 100 by 118. More than 2,50,000. So is TDS applicable? Yes. And TDS is computed on what? 25,000. Not on 5,90,000. It will be computed on 25,000. Next question. Is the intra or intera? Now intra means 1% CGST, 1% SGST. The intera in the 2% IGST. See this question and tell me whether it is intra or inter. Where is supplier located? First line, Delhi. Generally for goods, what will be taken as a place of supply? Ending point. What is the ending point? Intra or inter? Inter. So TDS will be applicable. IGST. How much? 25,000 into 2%. That is 500. Huh? On the payment due only, the computation should be made. Payment due means how much they have decided to pay. Okay. Next. So because they will deduct this and remit the remaining amount. இப்போ 25,000 கொடுத்துட்டு திருப்பி 500 ரூபாய் கொடுங்க சார் TDS ன்னு சொல்லி வாங்க மாட்டாங்க. 25,000 I am deciding to pay. From this 25,000 I will deduct 500 and remaining 24,500 I will remit. That's how it works. Got it? Now if I pay 25,000, then again how can I deduct TDS? Okay, so here whatever money that they have decided to pay, that one. Next, supply of taxable goods to Delhi office of National Housing Bank, a society. So even to government society also TDS is applicable na? Government society. What is the value? Contract value? 6,49,000 into 100 by 118. More than 2,50,000. So is TDS applicable? Yes. And whether it is intra or inter, what is the location of supplier? Delhi. And what is this? They are supplying goods. For goods, what should be the place of supply? Ending point. What is the ending point? Delhi. Upper nature of supply will be intra-state. So what is the TDS? So 500 towards CGST and 500 towards SGST. 500 towards CGST and 500 towards SGST. Next, interior decoration of Andhra Bhavan located in Delhi. Service contract is entered with the government of Andhra Pradesh. Register only in Andhra Pradesh. What is the value? Contract value? 12,39,000 into 100 by 118. So whether it exceeds 2,50,000 or does not exceed 2,50,000? Exceed 2,50,000. So TDS is applicable. Wait. Contract value ennamo 2,50,000 it exceeded. Ana or disqualification irukku. Ennadu? Supplier enga? Delhi. Place of supply enna? Delhi. How? Any service in relation to immovable property, place of supply is location of immovable property. For all immovable property service, place of supply is location of immovable property. What is the location of immovable property? Delhi. So it is intrastate. But recipient is government of Andhra Pradesh. So can they deduct TDS? So there is no TDS. But we need to write the note why TDS is not there. So this many points they will give us, sir? No. Any 5 points? 5. Okay, I just added one more extra, but 5 only because it's a 5 marks question. Next, supply of printed books and printed postcards to West Delhi Post Office out of the total contract value of 9,72,000. Contract value for supply of books exempt from GST is 7 lakh, and for supply of printed postcard taxable under GST is 2,72,000. Exempted supplies TDS is not applicable, correct? So leave that 7 lakhs. What is the taxable value? 2,72,000. In the 2,72,000, you take out the GST and see 2,30,000 something, which means it does not exceed 2,50,000. So TDS is not applicable. So you should see not the contract value of exempted supplies. You should see the contract value of taxable supplies. Then 6th point, maintenance of street lights in municipal area of East Delhi. The maintenance contract entered into with Municipal Corporation of Delhi also involves replacement of defunct lights and other spares. However, the value of supply of goods is not more than 25% of the value of composite supply. And this activity is an activity in relation to function entrusted to municipality under Article 243W of the Constitution. Do we have any exemption like this? Yes. Services provided to government. If it is pure service in relation to function entrusted to government under Article 243G or W of the Constitution, or composite supply of goods and service where the value of goods does not exceed 25% of total. Please check that in government services, services provided to government. Page number, exemptions chapter 52, page number 52. Page number 52, you can see there services to government. First point, correct, pure service in relation to Article 243 GRW. Second point, composite supply means what? Both goods and service where the value of goods does not exceed 25% of the total. So here value of goods exceeds 25% of the total. No sir, it does not exceed 25% of the total. So what is your answer? Exempted. It is exempted, which means there is no TDS. So we need to write accordingly. Okay, the table, second case IGST 500, third case CGST, SGST 500, remaining case no TDS, but the reason. But no need to write this table separately like this. All these table you can write inside. I mean all these notes you can write inside the table itself. For example, this note is there na. No need to write separately. You put it inside this table itself. Okay. You are required to determine the amount of tax if any. Yes, we did this. Question number 37. This question number 37 is on account of interest due to wrong availment and utilization of ITC. One question we saw interest on account of delay in filing 3B. This is interest computation only because of ITC, wrong availment and utilization of ITC. See this. Mr. Bhaskar wrongly availed 1,25,000 ITC at the time of furnishing return under section 39 of CGST Act for the month of October 2022. This ITC is not utilized against the output tax liability for the month of October 2022. Mr. Bhaskar utilized 75,000 from the above wrongly availed ITC of 1,25,000 against output liability for the month of November 2022. You understood? How much is the wrongly availed ITC? 75. Illa 1,25,000. 1,25,000 வந்து wrongly availed ITC. In that 1,25,000, how much is utilized? Which month? November. Now interest on 1,25,000 or 75? 75, not on wrongly availed ITC, on wrongly availed and utilized ITC. Interest is computed on 75,000. Mr. Bhaskar paid the amount of ITC wrongly utilized 75,000 on 10th March 2023. November they utilized. Correct? And when they paid and reversed the unutilized ITC of 75,000 on 10th March, and reverse the unutilized amount of 50,000 on 20th March. Okay. So 10th March, 20th March, they are reversing. So 1,25,000. Sir, in the line one repeat sir. They have wrongly utilized ITCs, reversed wrongly availed ITC of 1,25,000. 1,25,000 75,000 on the 10th March. Remaining amount is 50,000. That 50,000 they are reversing on 20th March. Calculate the total interest payable rounded off to nearest to 1 rupee under GST law if Bhaskar files 3B for the month of October on 18 November, 3B for the month of November on 25th December, Assume there is no extension in due date of filing 3B and no other transactions. Sorry. First, interest is computed on what? 75,000. Sir, 1,25,000 I wrongly took, sir. I reverse 1,25,000. And in the process, how much I utilized? 75. So I have to pay interest on 75,000. Clear, everyone? Now, interest on 75,000 from which date to which date? Wait, provision tell me. From the date of utilization till the date of reversal or payment. Super. What is the date of utilization? Again, provision you tell me. What is the date of utilization? Due date of 3B or actual date of 3B, whichever is earlier for the month for which ITC is utilized. What is the month in which ITC utilized? In the month utilized pannirkom. November. November oda due date of 3B enna? 20th of December. Actual date of 3B? 25th December. Whichever is earlier. Puridappa. Sir, date of utilization enna or provision irukku sir. Actual date of 3B or due date of 3B of the month in which ITC is utilized. What is the month in which ITC is utilized? November. For November, what is the due date of 3B? 20th December or actual date. What is the actual date of 3B? 25th December, whichever is earlier. Which is earlier? So 20th December is earlier. That is the date of utilization. What is the date of reversal? 10th March. Directly they gave. Not month. Month kudukla. Ide month kudutunda. Upon the month 3B whenever it is filed, that should be taken. You got it? Sir, if they have given instead of 10th March, if they have given in the month of March, so then March month 3B due date or March month 3B actual date we should take, not due date. 3B actual date. What is the 3B actual date? We don't have. If it is there, that should be taken. Got it? But here the question is not that. The question is directly they gave the reversal, date of reversal. What is the date of reversal? 10th March. Now start. 20th December lindu 10th of March. December la 11 days, January 31 days, February 28 days and March 10 days. What is the total number of days? 80. So exactly 80 days. So on 75,000 you compute 18% into 80 by 365. Check whether this number is correct. Yes. So date of utilization will be 20th December being earlier of due date of return or actual date of filing. Actual date of reversal is 10th March. So interest 2,959. So now what about 50,000? No interest. Payable as 50,000 wrongly availed has been paid back without utilization. Understood this? Okay. Then question number 38. This question is on TCS. A consolidated question, comprehensive, lot of points are included in this. Rajwada Operators Limited is registered under GST in the state of Karnataka as an e-commerce operator. It owns and operates a web portal which supplies various goods and services on behalf of various sellers or service providers to its ultimate customers. Details of supplies undertaken through ROL in the month of October are as under. Sale of goods worth 1,47,500 including GST by A Limited. ROL is e-commerce operator. A Limited is the supplier. They are selling goods through ROL. How much is the value of the goods? 1,47,500 by A Limited, registered supplier of Rajasthan to B Limited, Gujarat. Also goods worth taxable value of 1,40,000 sold by A Limited, Rajasthan to B Limited, Gujarat in the month of September were returned back in the month of October. Now October we are doing calculation. For October we are doing the calculation. What is the sales in October? 1,47,500 including GST, correct? Take out GST. Sir, why we need to take out GST? Because TCS is computed on value excluding GST. Value excluding GST. So take out the GST. What is the rate of GST given in the question? 18%. So take out. Minus sales returns. How much sales returns? 1,40,000. Sir, adu including GST, sir? No, it is taxable value, means excluding GST. Wherever you see in exam, taxable value means value is excluding GST. So 1,40,000. So negative. So TCS is applicable or not applicable? Not applicable. TCS is to be deducted. Negative, income tax negative means what? You have to pay no, like that. Okay. And here they don't have to pay any TCS, deduct any TCS, simple. Carry forward, etc. and all we don't have here. So therefore, negative value, thus TCS to be collected is nil. You understood? Next, second, value of services provided from 21st October to 30th October by way of transportation of passengers by motor vehicles by X Limited registered under GST in Karnataka to Z Limited registered under GST in Karnataka amounting to 5,50,000. It includes 1,50,000 against transportation services provided by omnibus. Carefully listen. Transportation of passengers by any motor vehicle through e-commerce operator is covered under 9(5), provided the supplier is registered or unregistered, but only one exception. What is that? If it is a company by omnibus, if there is a company which is transporting passengers by omnibus, then 9(5) is not applicable. Here, is it a company? Yes. Which company? X Limited. X Limited transporting through omnibus, how much? 1,50,000, on which 9(5) not applicable, correct? So on that TCS will be applicable. Okay, va? The remaining amount, sir, 5,50,000 minus 1,50,000, 4 lakhs, no TCS. Why no TCS? Because in that case, e-commerce operator will pay under 9(5), so TCS is not applicable. You got it? Say this. So only on 1,50,000 TCS is applicable. In that 0.25% CGST and 0.25% SGST. Got it? Third, Miss Zara of Mumbai books a room for 3 days and 2 nights in Raj Niwas Palace, Jodhpur through Maharaja Resorts Limited, also an e-commerce operator registered under GST in Karnataka. MRL is integrated with ROL who has an agreement with Raj Niwas Palace. For transaction or what parangappa? Raj Niwas Palace. Raj Niwas Palace is supplier, correct? And they provide accommodation services through ROL because ROL is having agreement with Raj Niwas Palace. So ROL is e-commerce operator 1. In turn, ROL is having agreement with MRL. MRL is another e-commerce operator 2. And MRL is providing services through Miss Zara recipient. Okay. Now tell me who is required to deduct TCS? ROL, supplier side e-commerce operator. That's what we discussed. In case of multiple e-commerce operators, ROL being supplier side e-commerce operator is liable to collect TCS. How much ROL is remitting to Raj Niwas Palace? Raj Niwas Palace raises invoice for 1,50,000 and receives 1,45,000 from ROL. But TCS is on the amount remitted, correct? So 1,45,000. Wrong answer, sir. Wrong answer. TDS only on the amount remitted. TCS is always on the value. What is the value of supply? 1,50,000. So on 1,50,000 only TCS is computed. Is it clear? Be careful. TDS is only on the amount remitted, but TDS is on amount remitted, but TCS is on value of supply. Understood? So this is about TDS TCS. I gave two questions. Both the questions are standalone questions on TDS TCS. Of late they started asking one 5 marks question on TDS or TCS, and that's why all complicated elements I have included in this. Okay. Question number 39. Mehul Enterprises registered under GST in Uttar Pradesh and a monthly return filer. So he is a monthly filing of return. He is filing returns on a monthly basis. He is engaged in making taxable supply of goods and services. It furnished the details of its outward supplies in GSTR1 for the month of January on 11th February. Filed a GSTR1 of January by due date. Correct? However, on 14th February, the accountant of Mehul Enterprises noticed that one invoice issued to Vaishali traders registered in Gujarat for supply of goods of value 1 lakh, taxable at 18%, pertaining to January, has been inadvertently missed to be declared in GSTR1 furnished by January. So for January month they filed one by 11th February. In that they missed one invoice. He approached you for the advice before furnishing 3B. So they have not yet filed 3B. They have not yet filed 3B for the said month. You are required to briefly discuss whether Mehul Enterprises can amend the details of outward supply in GSTR1 of January. What is your answer? They can. Through next month 1 illa same month 1A va? Same month 1A. You just remember two rules pa. Try to remember these two rule numbers. Rule 59, rule 60. Got it? Rule 59, answer is there. It's there in the answer. Rule 59, rule 60. 59 one the supplier perspective. Okay. So I told you na, supplier will file 1A like that. That is rule 59. Rule 59, supplier perspective. And recipient perspective will be rule 60. Got it? So you tell me from supplier point of view, from that Mehul Enterprises point of view, what is it they need to do? They can report the missed invoice in GSTR 1A filed after 11th of February, but before filing 3B of January, and such 1A missed invoice liability be added in the 3B of January, and they can discharge it by the 3B liability due date. Got it? And whether they need to pay any interest or no need to pay interest, without payment of interest. That is the first paragraph you need to write. So see the answer, read it. A registered person may, why not shall? In a 1A illama kuda next month 1 they can report na. So may, after furnishing the details of outward supply of goods or service in GSTR 1 for a tax period, but before filing the 3B of the said tax period at its own option. Sir, after furnishing the details of outward supply in GSTR 1 like that it is given, but you are telling after due date only you can file. Yes, because that is a restriction placed by the portal. In portal practically it is not possible to file 1A before due date of 1. Okay, so they are asking us to wait. So 1A itself is like it is there, but you cannot click on prepare online. Okay, that button itself will activate only after 11th. Okay, due date. So set tax period at his own option, amend or furnish additional details of outward supplies in 1A for the set tax period. Thus, Mehul Enterprise has the option to furnish the details of invoice issued to Vaishali traders in form 1A on or after 14th February, but before filing 3B for January. Why 14th February? they filed, they identified on 14th February. Adinala, got it? So 14th February, but before filing 3B for January, and the corresponding effect of the changes made through 1 year on the liability of Mehul Enterprise shall be reflected in 3B of January itself. Got it? Next question. If such amendment is permitted and details of 1A are amended, whether the details of the said invoice be available in 2B of Vaishali Traders for the month of January? No, not possible. So that is rule 60. What does rule 60 says? The 1A details are reflected in the 2B of the subsequent month. So in the present case, the 1A which is filed after 14 January, before filing 3B of January, so it will be reflected in the month of February 2B. 2B of February generated after February, that is on 14th of March. So 60, that is rule 60 provides that additional details or amendments in details of outward supply furnished by the supplier in 1A filed after the due date of furnishing of 1 for the previous tax period. So inga teliva kuduthirukanga, 1A filed after the due date of furnishing 1 shall be reflected in 2B for the current tax period. This implies that ITZ or the supplies declared or amended through 1A will be available to the recipient 2B for the next tax period. Therefore, missing invoice of Vaishali Traders will be available in 2B of which month? January month or February month? February month. Understood? So this is one question, a very good question, important question. Next, question number 40. Usually I'll tell that there are certain concepts which are possible. Yes, last attempt for May 26, I screamed, shouted, etc. and all. I said vouchers is important, like that it came. Okay. So therefore, some areas which usually ICI is not touching, they will repeat because 3 attempts. The 3 attempts, they cannot ask the repeated questions. So they will always ask some new set of questions. So that's the reason why I have given you all these areas. These are all the areas which are probable. Definitely they will be touching. Because usually when you start practicing past exam questions, these areas you will not touch. Because if past exam questions should be repeated in CA course, then everyone should clear. Everyone will clear CA exam. Because everyone will solve past exam questions only and will go for exam. Na? Question number 40. Determine whether liability to obtain registration arises or not under GST law in the following independent cases. This is related to registration part. Liability to get registered. Mr. G from Delhi is dealing in purchase and sale of securities in his own account from secondary market. He disclosed the transactions of purchase and sale of securities in trading account and treated the same as business income. Turnover from April to September is 75 lakhs. Is he liable for registration? Why? Transaction in securities is neither goods nor services. Consequently, he is not required to pay any GST. And he is not even required to get registered, because a person who is engaged in supply of goods or service only liable to get registered. He is not at all engaged in supply, that's why. And suppose if he is earning brokerage income, then he need to register if that brokerage income exceeds 20 lakhs, threshold limit. For services, the threshold limit is 20 lakhs. Next, second, KLJ Foundation from Jaipur, Rajasthan, a charitable trust registered under 12 AB of Income Tax Act, is engaged in supply of various services by charitable trust. KLJ receipts for the preceding year was 30 lakhs. Whether KLJ Foundation is required to take registration? Sir, charitable trust engaged in providing notified charitable activities is exempted. What are those notified charitable activities? Number 1, public health. Number 2, advancement of religion, spirituality, yoga. Number 3, educational programs to orphans, then prisoners, mentally, physically traumatized persons, or persons over 65 years residing in rural area. Then number 4, environmental protection. Correct, these 4 activities. And old age home also. Old age home, provided they provide boarding and lodging to people greater than or equals to 60 years, where the consideration charge does not exceed 25,000 per month per person, then it will be exempted. So here various services by charitable trust like that it is given, which means they have not given that they are engaged in making other activities. So which means what? They are exempted from registration because their outward supply is fully exempted. Section 41, examine, and you asked me some questions related to trust. Ennappa and the question? Yes. If trust is doing training in sports, the money collected by the trust is exempted. If there is an individual who is training in sports, then taxable. If that individual is working in the trust and collects the money, then exempted. Okay. So, nadula vandu trust irukum. Trust illama directa if individual is collecting fees from the students for sports, it will be taxable. On behalf of trust, if the individual is collecting fees, means definitely the money is as good as collected by the trust, therefore it will be exempted. What is that question number, sir? Some question number you showed me, no? It is in practice manual, pa. This question is in comprehensive question. 174. 174 you see. Question number 2. 174. In that 174, what is the point number? Pa? 4th point. 5th point. 5th point. That's what, last one. Acting as a coach. So therefore here, as the trust is involved, due to that reason, it will be covered under the exemption. Suppose if it is from a student directly, then taxable. Okay. So that point you keep in mind. Then one more point also you said. Okay. But trust is. Then next one, question number 41. Examine the taxability of supplies in the following independent cases. In terms of relevant provisions of CGST Act, brief reasons should form part of your answer. Services of health insurance business provided by Health and Bless Insurance Company to Mr. Krish Kinare and his family. This is an RTP question based on the latest amendment. So, when the recent there is an amendment that if there is an insurance company which is providing life insurance or health insurance to individuals, it is exempted. Not only to individuals, but group of individuals as a family, then also it will be exempted. And on the group vandu employer employee group it should not be employer employee group or non-employer employee group, like professionals. Okay, for example, ICI is taking insurance for their members, etc. No, it should not be that. Purely individuals and family of individuals, then the insurance premium will be exempted. Which and all insurance? Only life, health, not general. Okay. Appo motor vehicle insurance taxable? Yes. Because that motor vehicle insurance is general insurance but not a health insurance, because they give only life or health. Okay. Provided by Health and Bless health insurance service to Mr. Krish Kinare and his family, it is exempted. So because individual, family includes all individuals insured as a family in the contract of insurance. A1 hotels provided supply of accommodation services having value of supply equal to 20,000 per month to MBBS student Mr. Pranav for a continuous period of 180 days, exempted. What is that? Continuous period of 90 days where the consideration does not exceed less than or equal to 20,000 per month per person. So therefore it will be exempted. So is exempt from GST. Then question number 42. Examine whether GST is exempted in the following independent cases of supply of services. Apex facilities provided civil maintenance services for the upkeep of the municipal corporation of Delhi. Head office building, value of the service constitute 20% while providing such maintenance services. Listen pa. இது வந்து அந்த exemption இருக்கு. What is that? Composite supply, where the value of goods does not exceed 25% provided to government. Can we bring it under that exemption? No. Why? Does not 20%. 20% it is less than or equals to 25%. அப்ப அந்த exemption க்கு ஏன் வராது? ரெண்டு பாயிண்ட் இருக்குப்பா. ஒன்னு பியூர் சர்வீஸ், ரெண்டாவது வந்து காம்போசிட் சப்ளை. both are exempted. கரெக்ட்டா? Both are exempted. What is the page number pa? 52. Page number 52. Today you referred. Again I am asking you to refer. Page number 52. The page number 52 la pure service irukku. Second point, composite supply also there, but the value of goods should not exceed 25% of total. Yes, here the value does not exceed 25% of total, but it is not exempted. Why? Because the municipal corporation of Delhi, nowhere it is given they have to do these activities under article 243 GRW of the constitution. If municipality of Delhi or municipal corporation of Delhi should do this facility management services under article 243 GRW, and if they outsource it to some person, then only it will be exempted. But that's not given in the question. So due to that reason it will be taxable. So if the composite supply of goods and service provided to local authority in which the value of supply of goods constitute not more than 25% of the value of the said composite supply by way of any activity in relation to any function entrusted to municipality, then it would be exempt. Further, it has been clarified that civil maintenance service received for upkeep of MCD office are not in relation to any function under article 243W of the constitution, therefore it's not covered under exemption. Next. Second, Messrs. Talreja and Talreja, a firm of advocate, provide legal services to the state government for representation in High Court. Is it exempted? Yes. Remember, for advocate services and arbitrator services, we have three exemptions. Exemption number 1, if they provide services to individual, that is other than business entity, then it will be exempted. If they provide services to government, central government, state government, local authority, government authority or government entity, then it is exempted. If they provide services to a business entity whose turnover during the previous year does not exceed threshold limit, they may be registered or not. Don't check that. And the business entity when the last year register irkalam, but irrelevant. Their turnover only you check. Their turnover during previous year does not exceed threshold limit, then it will be exempted. One more point is there, but that is only for individual advocate or firm of advocate. What is that? if there is an individual advocate other than senior advocate or firm of advocate providing service to another individual advocate or firm of advocate, it is exempted. These are the exemptions we have. Now, advocate providing service to government, should we check anything else? No, fully it is exempted. Where is that exemption for advocate services? Check page number 61, 61, page number 61. இப்போ இந்த புக் என்னமோ குட்டியாக தான் இருக்கும், ஆனால் உலகமே இதுக்குள்ளே இருக்கு. Got it? So if you are thorough with this revised book, conceptually if you are strong, யாராலையும் அடிச்சுக்க முடியாது. ஸோ சூப்பராக வந்து மார்க் வரும். ஆனால் ப்ராப்ளமே எங்கே தெரியுமா, இப்போ அக்கௌண்ட்ஸ்ன்னா நான் சொல்லலாம் இது இது இந்த மாதிரி ப்ரெசென்ட் பண்ணால் வரும், இல்லை இந்த சாப்டர்ஸு மாதிரி ஒரு சப்ஜெக்ட்டுக்கும் தெர் இஸ் a uniqueness. The uniqueness for tax lies in concept clarity. So if you are knowing small points only, because that is there, small points if you know, and if you are able to be clear about it, superbly you can write. Question number 1 is also not a big question and all. It's not something non-achievable. It is actually summation of all the adjustments in one question. Separately also 5 marks they can ask. Together also they can put in one question. But you should be thorough. If you are thorough with this, enough. Got it? So is it there in the exemption? Page number 61. What is that? 3 points common to everyone. Correct? What are they? To person other than individual, to government authority, government entity, government etc., to business entity whose turnover during previous year does not exceed threshold limit. Now 1 point alone is there special for individual advocate, firm of advocate. What is that? If they provide service to another individual advocate or firm of advocate. And in the exemption is not applicable to senior advocate. For senior advocate, you should see the ultimate recipient or litigant as the recipient. And again you need to interpret based on that. For example, senior advocate providing service to another advocate or firm of advocate, don't see that firm of advocate or individual advocate as a recipient. In turn, they provide service to some other person. You see them as the recipient and interpret. Now coming back to this. Sir, what if this Talreja and Talreja is not a firm of advocate but a senior advocate? Same answer. Same answer. What if they are arbitrator? Same answer. Got it? What if they are individual advocate? Same answer. No change, because they are providing services to government. BLF Mall Noida provides services by way of vehicle parking to general public in the basement of the mall. Anywhere we have exemption for parking services? No. Therefore it will be, and whenever it is like this, what is it you write? As per section 11 read with notification 12 of 2017, certain services notified are exempted. The said activity is not covered under the exemption notification, therefore it is taxable. Got it? Then service provided by a private transport operator to Scholar Boys Higher Secondary School by way of transportation of students to and from the school. It is service provided to education institution or by education institution. To education institution, category 1, 4 services are exempted. What are they? Transportation, catering, security and housekeeping within the premises. Therefore it is exempted there. Okay. Question number 43. Harsha Textiles Private Limited, a registered company in Tamil Nadu, is engaged in manufacture of garments. The company procured the following supplies in November 2024. They gave some transactions. Identify the supplies on which Harsha Textile Private Limited is liable to pay tax under reverse charge, and also determine who shall issue tax invoice for each transaction. Also specify the due date by which invoice is to be issued. Listen pa, when there will be self invoice? If the supplier is unregistered, condition number 1. Condition number 2, the recipient is registered, and condition number 3, supply is covered under RCM. If these 3 conditions are satisfied, self invoice will be applicable. And what is the time limit within which the self invoice will be issued? Within 30 days from the date of receipt of goods or services. Now first one, legal consultancy service from Advocate V. Kumar. Is it covered under RCM? Yes. Yes. Advocate services to business entities covered under RCM. And sir, turnover limit அதான் உங்க கேட்கலையே இல்ல, that they did not ask. Did they ask about the taxability? No, they asked about what? Whether it is covered under RCM or not, we need to check. They did not ask about taxability of the transaction. For taxability of the transaction, we check what is their turnover during the previous year, etc. and all. Here all these are taxable. All these are taxable. They are asking who is liable to pay tax. So who is liable to pay tax in case of advocate service? Taxable. Sorry, advocate service taxable ஆயிருந்தா யார் pay பண்ணணும்? அது RCM தானே? That is what they are asking. Okay, so it's RCM. One condition satisfied. Supplier unregistered, satisfied. Recipient is registered, satisfied. So who will be giving invoice to whom? Recipient will give invoice to supplier. What is the time limit? What is the due date by which invoice will be issued? 30 days from 3rd November, that is 3rd December. 3rd December. Next, second, service of GTA, consignment note issued, nothing is given. Is it RCM? Yes. Author services, GTA services, by default it is RCM. By default RCM. Only if in the question they have given that they opted for FCM, it is FCM. Otherwise, always it will be RCM by default. So here it is by default, GTA service will be RCM. Is supplier unregistered? No, supplier is registered. Then who will give invoice? Supplier will give invoice, not the recipient. So self invoice is not applicable. Is it clear? Third, raw cotton purchased from a farmer. Actually this point is not there for you, it's just the application point. You know that farmer is exempted from registration. Appa farmer vanda unregistered, correct? Where is that farmer is exempted from registration? Agriculture is section 23. Farmer and agriculturist இல்லையா? அப்ப என்ன வேற என்ன? Poker games illa, you know, yes, like that they are playing. No, farmer will do agriculture only, na. So farmer is agriculturist, exempted from registration means they are not registered. Okay, and usually from farmer, if any taxable goods are purchased, the recipient has to pay GST under RCM. So this is covered under RCM. Okay, so in bracket write down RCM applicable. RCM applicable, like that. Say in question they will give, because goods under RCM you don't have in syllabus, that's why. Now one condition satisfied, that it is RCM. Supplier unregistered? Yes. Recipient registered? Yes. So therefore who will give invoice? Recipient will give. So self invoice, what is the time limit? Within 30 days from 7th November, that is 7th December. Manpower supply service received from Sam Workforce Private Limited. What is your answer? Manpower supply service received from Sam Workforce Private Limited. For manpower supply is not covered under RCM anywhere. Sir, CG, Go, Salads. Nowhere we have manpower. Idhula MA kadiyadu. Sir, CG, got salads, we don't have. But if it is security agency, that's covered. Last point, security agency. Sir, manpower security agency dane sir. No, manpower can supply housekeeping personnel also, contract labor also, farm labor also, any people they can supply. But only security agency is covered under RCM. So therefore it will be FCM, and supplier is unregistered. So who will give invoice? No one will give invoice. First of all, there is no GST. Got it? Sir, FCM sir, and a supplier unregistered sir. No GST. Got it? Next, purchase of steel shells from a local unregistered trader for office infrastructure. Is it covered under RCM anywhere? Purchases from unregistered is covered in RCM. Which case? 9(4). Another builder. Builder. Is the builder? So therefore not covered under RCM. Appa FCM. And a supplier one unregistered. So there is no GST. Got it? Understood? Then next one. Sponsorship service availed from Chennai Sports Club, a registered entity. In case of sponsorship, what is the condition for RCM? Supplier should be other than body corporate. Sir, supplier yaar sir inga? Chennai Sports Club. Other than body corporate. Recipient should be body corporate. Yes. Yes. Body corporate or firm? Yes. And is it covered under RCM? Yes. And supplier unregistered or registered? Registered. Supplier only. So self invoice is not applicable. Invoice by supplier and self invoice is not applicable. Okay va? So this based on self invoice if they want to ask a question. இதே இன்னும் கொஞ்சம் காம்ப்ளிகேட் பண்ணலாம். எப்படின்னா time of supply கேட்பாங்க. They will ask time of supply also. Now what will be the time of supply? இங்க பாருங்க, listen. எங்கெல்லாம் supplier if giving invoice, first services covered under RCM. Service covered under RCM. We have two provisions. If supplier is giving invoice, date of payment to supplier or 61st day from the date of invoice to supplier, whichever is earlier. If the invoice is given by recipient, date of payment to supplier or date of invoice to supplier, whichever is earlier. Date of self invoice to supplier, whichever is earlier. Be careful. Okay. So that point also can be connected. We have one question. We discussed one question also in the above. Okay. Then question number 44. Rameshwar Industries is engaged in manufacturing semiconductors in the state of Assam. It makes only intrastate outward supplies. Following details have been made available by Rameshwar Industries. Where are they doing business? Assam. For Assam, do we have any lesser threshold limit? Yes. How much? 10 lakhs. Awesome. Lovely. Brilliant. Mind blowing. Fantabulous. Kumatengala. MMTN U stamp la yenga Assam irukku. That A is Arunachal Pradesh, not Assam. Got it? A irundale Assam. Too much obsessed with Assam or what? So in MMTN, where A is there, appa 10 lakhs varadu. Then U stamp A is Arunachal Pradesh. So 20 lakhs also will not come. Then it is other states. Other states, are they exclusively engaged in supply of goods? Yes. Ulunga question padingappa. Manufacturing semiconductor. Semiconductor on the service illappa. Goods. So goods means what is the limit? 40 lakhs. So don't see when they crossed 10 lakhs. Don't see when they cross 20 lakhs. See when they cross 40 lakhs. Now they will give everything in the question. Now because you should get confused. Okay, if you take 20 lakhs or 10 lakhs or 40 lakhs, just like how you said now, you will do in exam also. Madane 20 lakhs. A means Assam. So therefore 20 lakhs. It crossed on April 15, but they made application on May 15. So not within 30 days, within 30 days. Appa super. Therefore, revised tax invoice can be issued from so and so date, like that you will write and you will say, Shabash, I did. 5 marks I will get. Now 0 you would have got. Okay. Because the base itself is wrong. If the base is wrong, don't expect step marks. Step marks they will give. You know when? Somewhere in the midway or somewhere at the end you make a mistake. Ana or question ஒரு base ஒன்னு இருக்கும். ஒரு ஆதாரம் இல்ல மூலம் அந்த மாதிரி. அந்த பேஸே தப்பா இருந்தா gone. 0. Don't expect any marks there. Got it? So what is the base for this question? What is the threshold limit for registration? What is the threshold limit? 40 lakhs. When are they crossing the threshold limit 40 lakhs? April 28. And when are they making application for registration? May 15. Is it within 30 days? Yes, within 30 days. So we have one point of revised tax invoice. What is it, revised tax invoice? For the supply between the date they are liable to get registered till the date they got certificate of registration, they cannot give a normal invoice. Because when are they getting certificate of registration? May 29. Until that point of time they cannot give normal invoice now. So they will make a supply, but for these supplies between which date to which date? 28 April to May 29, they will give a revised tax invoice. When they will give revised tax invoice? 1 month. 1 month. 30 days illa, 1 month. Sir, sir, illa. It will change. 30 days means you have to count days. Month means you have to just increase the month. Within 1 month from the date you got the certificate of registration. What is the date on which you got certificate of registration? May 29. So 1 month will be June 29. If you add 30 days, you will not get June 29. Okay, because May has 31 days. Sir, appo 30 days or point irke. That is to check whether you made application for registration within 30 days. If you have made application for registration within 30 days, then revised tax invoice should be issued within 1 month from the date you got certificate of registration. Based on the above, you are required to determine the following by briefly stating effective date of registration. You tell me, what is the effective date of registration? April 28. Why? There is one provision. If the application is made within 30 days from the date they are liable to get registered, then the date on which they are liable to register is the effective date of registration. Sorry, application not made within 30 days, then date on which they got the certificate of registration. So in this case, April 28th. April 28th. Period for which revised tax invoice can be issued. From when to when? April 28 to May 29. From the effective date of registration till the certificate of registration. Time limit within which such revised tax invoice has to be issued. 1 month from the certificate of registration, that is 1 month from the date of certificate of registration, June 29. June 29. Change it to June 29. May 29, just increase 1 month, that is June 29. See, when it is given in days, you have to add days. When it is given in month, you have to add months. Sorry sir, January 30th sir, 1 month na? February 28th. February 28th. This leap year na February 29. Sir, not 1 month, no sir, no, month. 1 month means that 1 month from there. You got it? Suppose March 30, 1 month na? April 30. April 30, 1 month means May 30. May 30, that's it. Got it? Next, question number 45. ABC Buildtech Limited, a registered manufacturer of prefabricated steel structures in Karnataka, undertakes the following supplies during March 2026. The company dispatches 3 separate consignments, each worth 48,000, including 12% GST from its Bengaluru plant to different customers in Tamil Nadu, loading them all in one truck for delivery. And the company they have given 3 consignments. What is the value of each consignment? Including GST, excluding GST. What if it is excluding GST? You will add GST and check. But it is including GST 48. Whether it exceeds 50 or does not exceed 50. Means the company will not prepare e-way bill. Correct? But all these 3 consignments are carried in a single lorry. Now, what is the cumulative value of these 3 consignments in single lorry? More than 50,000. Correct? So, in this case, the transporter should generate e-way bill for each individual consignment plus a consolidated e-way bill may be generated. That is shall illa may. On individual e-way bills vandu shall, must. Okay. And here what is the case? That is each e-way bill they have to generate, and e-way bill 1, that is e-way bill 1. E-way bill 1 is single consignment. E-way bill 1 is the form for individual e-way bills. Consolidated e-way bill is EWB 2. Okay. So say this, although each consignment is below 50, all three are loaded in a single truck. So therefore the transporter is required to generate a consolidated e-way bill since total consignment value in one conveyance exceeds 50,000. But will they generate individual e-way bills also? Yes. Individual e-way bills shall be generated by transporter. Individual e-way bill shall be generated by transporter for each consignment. So adu kandipa pananum, and they can put a consolidated e-way bill also. So suppose idu two different lorries la irunda, I mean three different lorries, not in the same lorry, then not applicable. Transporter also is not required, because each movement does not exceed 50,000. Three separate lorries means each lorry is one movement. It does not exceed 50. So neither supplier nor recipient nor transporter, no one is required to generate e-way bill. Got it? Single lorry means then we need to check more than 50, transporter. Suppose if transporter fails, either supplier or recipient, by enrolling as citizen of India, they should generate the e-way bill. Okay. But usually transporter is having the primary liability in this case. You write about transporter. Practically what happens, you don't have to bother. For exam purpose, what you should write, transporter you should generate. Then second point, it sends semi-finished steel trusses worth 15,000 excluding GST to an unregistered job worker in Karnataka. Where is ABC Buildtech located? Karnataka. And where are they sending? To a job worker in Karnataka for further fabrication. After job work, the job worker directly dispatches the finished goods to XYZ Constructions Limited, a registered customer located in Andhra Pradesh, on the instruction of ABC Buildtech. Tell me. First case, value does not exceed 50,000. That is intrastate or interstate movement? Intrastate movement. So e-way bill is not required. Second, after the job work, job worker directly dispatches the finished goods to ABC, that is XYZ. Even that also does not require e-way bill because the value does not exceed 50,000. That is not goods covered under job work. Now, principal in the job worker pogumbodhu adu goods covered under job work. Job worker edathilinde customer pogumbodhu that is not goods covered under job work. Are you understanding this? There are two movements here. First, between principal and the job worker, that is goods sent on job work. Now you need to see interstate or intrastate. This interstate irunda value pakadinga. E-way bill is required. If it is intrastate, check the value. If the value does not exceed 50,000, e-way bill is not required. Okay. Then from job worker place, it is going to our customer's place. Now this movement, what will be the scenario? Simple, it is not goods covered under job work. Whether it is interstate or intrastate, always e-way bill required if the value exceeds 50,000. Okay. Now first movement you see between ABC Buildtech and job worker, unregistered job worker in Karnataka, intrastate, correct? Intrastate means value you should see. How much? 15,000 plus 12% if you add also, it will not be beyond 50,000. So e-way bill required or not required? not required, not required. Okay, clearly study material they gave one question also, one example also they gave, that for interstate job work only compulsorily e-way bill is required, for interstate job work, not for intrastate job work. So we have to make the case here. Semi finished goods 15,000 are sent to unregistered job worker within the state, and CBS circular e-way bill is mandatory for job work movement irrespective of the value and must be generated by principal. One second, not required pa. Unregistered job worker within the state, as per rule, read with CBI circular, e-way bill is mandatory for job work. Which job work? Right there, interstate job work is mandatory for interstate job work. Irrespective of the value and must be generated by principal. However, in the present case, e-way bill required or not required? E-way bill not required. Please make the correction. E-way bill not required because it is intrastate movement. However, in the present case, e-way bill not required. Next, further job worker dispatches the processed goods directly to XYZ in Andhra Pradesh on the instruction of principal. Since this is an interstate movement, correct? But is it covered under job work or not covered under job work? Not covered under job work. Not under job work. ABC Build Tech, being the principal, is not required to generate e-way bill as the value less than or equals to 50,000. Please make the corrections. I am writing this separately, somewhere you make note of this. From principal to job worker, and from job worker to customer or to principal. Possible? Job worker either it can go to customer or it can go to principal, it can come back to principal, correct? So principal is sending the goods to job worker. Job worker may send the goods to customer, or job worker can return it back to principal. Suppose if principal is sending it to the job worker, then we need to first check what? Inter or intra, correct? Next, value greater than 50,000, value less than or equals to 50,000. If the value is greater than 50,000, what is your answer? Inter. Sir, always e-way bill is required, sir, because this is goods sent on job work. Intra, value greater than 50,000 e-way bill required, otherwise e-way bill is not required. Okay, va? This is applicability of e-way bill. Next, job worker place to customer place. Now again, value greater than 50,000 or value less than or equals to 50,000. Inter or intra. If it is inter, required, no, yes, no. Sorry, job worker to principal, is it covered under job work? Yes, yes, still it is covered under job work. So now value greater than 50,000, value less than 50,000. Inter, intra. Tell me. Inter exceeding 50, intra exceeding 50, definitely required. Less than 50,000, yes, yes and no. Why yes, sir? Sir, job worker to principal is covered under job work. That is movement covered under job work. But job worker to customer, that movement is not covered under job work. Is it clear? Next. Finished? Then another one, third, dispatched sandbags and earth filling material exempt under GST. No need to check further. Exempted goods, e-way bill required or not required? Not required. Whatever may be the value of the goods, but it should accompany a bill of supply or delivery challan, as the case may be. And our friend asked me one question, sir. Supplier enamo unregistered, sir. Recipient is registered under composition scheme, sir. And the supply is covered under RCM, sir. I am supplier, you are my recipient, you are covered under composition scheme. And you are registered. Composition scheme means you have to register. I am unregistered, but my supply is covered under RCM. Are you required to pay GST? Yes. Normal rates are rates under composition scheme. Normal rates, not under composition scheme. See, you have to pay GST on composition scheme only on your turnover, not on your purchases. Is it clear? On your purchases, you need to pay GST at the normal rates. Now, as I am supplier unregistered, whether the self invoice is applicable? Yes, always self invoice applicable if three conditions are satisfied. What are the three conditions? Supplier should be unregistered, recipient should be registered, and the supply is covered under RCM. So you have to give me invoice. What invoice? Self invoice, not bill of supply. For your outward supplies you will give bill of supply, but for your inward supplies you have to give self invoice within 30 days from the date of receipt of goods or services. Understood? Next, we have question number 46. This question onwards, 46 to 50, it is the 10-mark question type. Okay, say this. In all these questions, what is it we need to do first? Okay, other outward supply, sorry, what you should do for every transaction. First you need to check, is it supply or not? That's what, outward or inward. Then you need to know whether it is supply or not. Then you need to check the taxability or exemption. Then you need to see FCM or RCM. So you will know who will pay GST. Then you need to check place of supply to know whether it is intra or inter. Okay, first transaction. So read the paragraph. AB all in one, a partnership concern and a registered supplier under GST is engaged in providing various services under one roof. The concern provides the following information pertaining to supply made or input service availed by it during the month of March. First transaction, inward or outward? Provided direct selling, direct agent services. So outward. Sorry. Supplier, not a supplier. Direct selling agent. No exclusion from supply. Correct. And it is for a consideration 4 lakhs. So covered under supply. Second. Direct selling agent க்கு ஏதாவது exemptions இருக்கா? No. எங்க இருக்கு exemption? அது rural, அது business facilitator or business correspondent or agent of business facilitator correspondent, not for a direct selling agent. So therefore taxable. First you check the supply, then taxable, then is it FCM or RCM? RCM. Direct selling agent to bank is RCM. If the supplier is other than body, corporate or firm, and inga vandu firm, so therefore it will be FCM. Yes, direct selling agent is RCM, ana condition irukku. Enna the condition? Supplier should be other than body, corporate or firm, but here supplier is firm, so it is FCM. Who will pay? All in one will pay. Okay, va? Up to this. First we checked supply, then we checked taxability, then we check FCM or RCM. Okay, now you know who is liable to pay. Then intra or inter. For that we need to know location of supplier, etc. and all. Go to the last point. All the supplies are intra unless specifically applicable. Appi the intra dane. So what is the tax? CGST 9%, SGST 9%. So 4 lakhs in the statement. First statement. Outward. First statement la you will write the transaction. In brief you will write. What is it in brief? Direct selling agent service is taxable under FCM because the supplier is firm. Enough. Amount vandu 4 lakhs. Value column 4 lakhs. CGST, SGST, IGST. CGST, SGST la 4 lakhs into 9%, 9%, 36,000, 36,000. Okay, va? Check the answer. Clear? Now second transaction. Provided security services to ABC Private Limited, a registered person under GST. First, security services. So do we have any exemption for security? Yes, if it is to a educational institution. It is not to educational institution, so therefore it is taxable. And a supply dane? Yes, consideration is there. So supply, first outward. Supply, no exemption, so taxable. Is it covered under RCM? Security agency service covered under RCM when? Supplier is ana inga supplier vandu body corporate? No, other than body, corporate, firm. And recipient is registered. Check whether recipient is registered. Yes, therefore it will be RCM. So in which statement it will come? First statement only. Second statement la vandu your inward supply under RCM. This is your outward. That's why I asked you to first check whether it is outward or inward. Pa ungaloda outward supply taxable under RCM na idu ungaloda liability la add aguma? Will it be added to your liability? No, it will be added to the liability of the recipient. then don't take in the liability of supplier. So see the statement, you have to just write the note that it is taxable under RCM, but you don't have to take any amount. Clear? Next. See, but this is the place where you go wrong. You don't know what to apply. This flow you will not apply. You will see RCM, security, ABC, RCM. So RCM let you take. Okay, put it in the RCM liability. Over. Okay, now I leave it. No, next attempt. You got it. So be careful in analyzing. If you analyze it properly, no, you will not make mistake. Got it? Next, third, provided, again outward. Recovery agent service to Zen Limited financially motor vehicles is outward. And supply, because it is not excluded from supply and it is for a consideration, so supply. Taxable, yes. For recovery agent service, we don't have any exemption, therefore it is taxable. But recovery agent service, we have RCM. When? To a bank or NBFC. Here to whom? Motor vehicle dealer, that's not covered under RCM, therefore FCM. So who will pay? All-in-one will pay. When it is FCM, then check intra-inter. Your outward RCM, why you check intra-inter? CGST column analu dash na, IGST column also dash. Why to interpret intra-inter? Leave it. So when you are paying, you have to check whether it is intra-inter. So it is FCM. Now check the fifth point. Intra-inter, nothing is given, means intra. So 1 lakh into 9%, 9,000. Understood? Next, 4. Provided renting of motor vehicle, again outward. Provided renting of motor vehicle to Amaze Tours and supply value included cost of fuel. First outward. Supplier, yes. Activity for a consideration, it's not excluded. Number 3, is it exempted? Renting of motor vehicles, we have exemption. Enna the exemption? Idella flash aganum. Got it? Purida. The Pentium processor mari irukudadu. So Intel Ultra processor mari irukunu mind. Got it? So what are the exemptions? State road transport undertaking or point irukku. Idada. Electric motor vehicle to local authority illa. And GTA, no. To school, no. Therefore it is taxable. Okay, taxable. Who will pay GST? FCM or RCM? First. Motor, renting of motor vehicles, we have RCM. 3 conditions are there. Supplier should be other than body corporate. Yes. Recipient should be body corporate. Yes. Amaze Tours Limited, body corporate. And the rate of GST should be 5%. Go to below and see the note whether it is given renting of motor vehicle 5%. Yes, except renting of vehicle for which GST at 2.5 is applicable. All the 3 conditions satisfied. So, yaar pay panuvanga sir? Amaze Tours. So, don't add it in the liability of all-in-one. Got it? But write a note. See the answer. Clear? Next. Paid sponsorship. Paid anale inward. Paid sponsorship to Preeti and Co CFM for event organized by them to create GST awareness. Sir, is it supply? Yes. First inward, supply. So adukku nam interpret pannuva sir. Idu constant. Okay. So inward or outward, these 5 things you need to check. What are the 5 things? Inward or outward, supply or not, taxable or not, FCM or RCM, intra or inter. Okay. So is it supply? Yes. Any exemption for sponsorship? Recognized sports body. Is the recognized sports body? GST awareness, not recognized sports body. So taxable. Sponsorship RCM unda. What is that? Supplier should be other than body corporate. Who is supplier here? Preeti and Co, CFM, other than body corporate. Recipient should be body corporate or firm. Yes, all-in-one is a partnership firm, so it is covered under RCM. So it is taxable in the hands of all-in-one. Taxable in the hands of all-in-one. Which statement? Second statement, because it is inward under RCM. So therefore, we need to check intra or inter. Nothing is given. So intra 40,000 into 9% and 9%. You can see second statement received sponsorship service 3,600. Okay. Next one. Availed representation services. Availed means inward. We have taken inward. Availed representation service from PB and Company, a law firm, towards a consumer court case. First, law firm. So supply. We don't have any exclusion from supply because it is for a consideration. First one is inward. Second, supply. Taxable or exempted? Advocate services. Okay, to a business entity, we have one exemption. What is it? If the business entity turnover during the previous year does not exceed threshold limit. You tell me, is it taxable or exempted in this case? எங்கோ ஒரு டிக்கில கொடுத்துருக்காங்க ஒரு பாயிண்ட். It commenced its business from February 2022. Means we are computing it for March 22. So this is the first year in which they did the business. Then previous year turnover is 0. Means turnover during the previous year does not exceed threshold limit. Therefore this service itself is exempted. You understood? So when we started interpreting in the flow, we are not making mistake. Otherwise you know what would have happened. Advocate service, RCM like that your mind will tell. Wait. So RCM will come when? If it is taxable, but it is exempted here. Got it? Next. Imported cloud storage service from Google Incorporation for storing the data. Inward. Supplier, yes. Import of service for a consideration whether or not in the course or furtherance of business. Supply. Taxable, yes. For import of service everything is taxable. And if is it FCM or RCM? RCM. Second point. Yes, I for import of service. RCM. So who will pay? All in one will pay under RCM. So it should be added to the second statement. So in the second statement for advocate service nil, and for import of service, ingor twist. Import of service cannot be intra, deemed inter. Some services are deemed inter. What are they? Import of goods, import of services, export of goods, export of services, supplier in India, place of supply outside India, then supply to SEZ, supply by SEZ. Next, supply beyond territorial waters and up to 200 nautical miles, because India is up to 200 nautical miles. And next, place of supply determined under section 13 and that is in India for services. Next, security lending services. Security lending under SEBI, because lender don't know who is the borrower. Then PSLC, priority sector lending certificate. Next, you received the advance, but you don't know intra or inter, that is deemed inter. Then supply to a tourist. So these are all the 10 transactions which are treated as deemed inter. Import of service is deemed inter. Appo enga varum? IGST. So 10,800. That's it. Determine the GST liability. They did not ask net GST liability. They asked, be clear. If they are asking only, we need to do ITC computation. Here you don't have to do. So net GST liability they did not ask. Determine the GST liability by giving necessary explanations. That's it. You understood, pa? It is like a 10 marks question. But please try to interpret properly so you will get the answers. Okay. Then question number 47. Messrs. Consult Ease Services Private Limited, Consult Ease Services Private Limited A company registered under GST in Mumbai, Maharashtra offers business consultancy, digital marketing and project management services across India. The company recorded the following transactions in October. Consultancy service for market analysis. We did this question? No? Okay. Provided consultancy services for market analysis to XYZ Limited, a registered client in Chennai, Tamil Nadu, interstate for 4,50,000. Additionally, the company paid an amount of 4,500 as professional tax applicable in the state of Maharashtra as per the requirement of local state legislation. The amount of professional tax was recovered separately from XYZ Limited. Transaction value is how much? 4,50,000. This professional tax section 15(2)(a), any taxes, duties and cess by whatever name called other than GST, if recovered from recipient, should be included in the value. Accordingly, this 4,500, is it tax other than GST? Yes. Is it charged to recipient? Yes. Therefore, it should be included. So, the value will be 4,54,500. This is the value for first transaction. And what is it they are asking? For all these transactions, they are asking determine the total value of supply, what is the output tax payable and net GST payable in cash. So, first we will do value. Okay. Second, digital marketing services for launch event, conducted digital marketing for an upcoming product launch for Mr. A based in Rajasthan, who is an unregistered person under GST. The agreed fee for the said service is 3 lakhs. But transaction value on the 3 lakhs. Out of the agreed fee, an amount of 25,000 is incurred by Mr. A. Okay. The company was liable to pay the same in relation to the supply, and the net payment received by company was 2,75,000. Means transaction value is 2,75,000, but this is 15(2)(b). What is that 15(2)(b)? Any amount that the supplier is liable to pay. Actually, it is a liability of the supplier, but who incurred? Recipient on behalf of supplier, so that should be added. So, the value will be 3 lakhs. Next, traveling payment for the team, the employees, carefully listen, little bit interesting point. The employees incurred an amount of 50,000 on travel to Kolkata for client project. So, and the supplier. My employees went to client's place. So, they spent 50,000 rupees. What they will do? They will recover it from me. Correct? So, and claimed a reimbursement of the same from the company. Now, company paid. That between me and my employee, just reimbursement, that will not be subject to any GST. Okay. Now, what I will do? That 50,000, charge it to my client. As a policy, company charged such expenses from the client on actual basis. Now, is it expenditure incurred by supplier and charged to recipient? Yes. See, incurred by supplier does not mean the supplier only should do. So, even my employees incurring is also incurred by supplier. Correct? And it should be included in the value under 15(2)(c). Incidental expenses or other expenses incurred by supplier and charged to recipient. Therefore, here we need to take that 50,000 plus 50,000. Sir, want that pure agent will come? No. Pure agent will not come. Pure agent, when it will come? On behalf of my recipient, if I incur the expenditure and recover, then it will be pure agent. You understood? That's what municipal tax, property tax visa. In that question, housing society, one question we did na, one MCQ. There, so there, what happened? Municipal tax of the member I paid and recovered, so that will not be included, because that who should pay? The flat owner should pay. But who paid? Association paid or society paid, that will not be included. Next, discount passed on to the customer. Post supply discount was offered to customer, and what is it? Post supply discount amounting to 50,000 against a supply for which invoice was issued in September. The customer has not reversed the ITC. Sir, post supply discount, if the recipient has not reversed ITC, will it be allowed as deduction? No, just ignore it. Section 15 subsection 3. Recovery of late payment charges. The company received an amount of 1 lakh as late payment charges for delay in payment for consideration from a client whose service contract was completed in June. See, for late fee, usually there is a confusion. Whether late fee we need to add in the value or not. If we received the late fee, add, okay. Otherwise, whenever it is received, at that time only it should be included in the value. Is it clear? Here, because we have to give a debit note, not invoice. Suppose if the question is, compute the value of supply, compute the value of supply, total value of supply, full stop, over. இப்போ வந்து add பண்ணு. Suppose if they ask, compute the value of supply as per invoice. Okay, இந்த மாதிரி கொடுத்திருந்தா, check whether they received it or not. If they received it, in whichever month they have received, they need to raise a debit note. ஆனா அது வந்து invoice ல add பண்ணக்கூடாது. Got it? Sir, again I am repeating, sir. இப்போ compute the value of supply and கொடுத்திருந்தா, interest, if you have received it, or interest if it is there, you just add it to the value. Got it? Don't check anything else. Add to the regular value and arrive at the final number. If the question is about compute the value of supply. Suppose if they ask, compute the value of supply for May, or compute the value of supply for the invoice issued in May, like that something they are asking, month they are giving, month கொடுத்திருக்காங்க இல்லனா invoice of that month, and like that if they have given, இப்போ வந்து don't add the interest. Separate ஒரு நோட்ல you have to mention that this interest is taxable on receipt basis. So whichever month the interest is received, in that month a debit note is issued and it will be included in the value of the debit note, not in this month. இங்க வந்து they have not asked anything, they just mention compute the value of supply. இப்போ என்ன பண்ணனும் இங்க? Just add 1 lakh. இதே compute the value of supply with respect to invoice. Okay, with respect to invoice, like that if they have given, or with respect to June month, like that they have given. But June month la eppadi interest varum? Correct? June month la veru invoice mattum dhaan irukum. So therefore don't add this 1 lakh for June. Okay, yes pa. இவ்வளோன்னு சொல்லப்பா சேஜஸ் வந்து interest on account of delay in payment of consideration, interest on account of delay in receipt of consideration. Okay va, there is interest on account of delay in receipt of consideration. இப்போ வந்து if the question is about regarding what? Value of supply. What you should do? If the question is regarding value of supply, add to value of supply. சரியா? அவ்வளவுதான். We'll leave it. If the question is regarding value of supply of an invoice, question is regarding value of supply of an invoice or for a month question is regarding value of supply of an invoice or value of supply for a month, like that if it is given. Value of supply of an invoice or for a month. But divide into 2. Interest received in that month. Interest received in that month. சரியா? இப்போ question என்ன? Value of supply of an invoice இல்ல for a month. Interest received in that month. எப்போ invoice raise பண்றோமோ அப்பவே interest வந்துடுச்சு. இல்ல அந்த monthலியே interest வந்துடுச்சு. So what we should do? Add to value of supply. Interest not received in that month. Interest not received in that month. அப்ப some other month வந்திருக்கும் இல்லையா? Don't add it to value of invoice. Don't add to value of invoice. But show a note that it is included in debit note. But show a note that it is included in debit note. Okay va? எப்போ debit note? Whichever month we are receiving, that month we will raise a debit note. ஆனா value of supply ல add பண்ணாதீங்க. Just show it as a separate point. Okay va? மூணே மூணு தான் நான் திருப்பி சொல்லிட்டு இருக்கேன். Okay? Nothing else. In this question, are they asking us to compute the value? Yes. You are required to compute the following for the month of October. என்ன சொல்லிருக்காங்க? Value of supply for the month of October. கரெக்டா? இப்போ இந்த அக்டோபர் அனே கொடுக்காம compute the value of supply. இப்போ இந்த லைன் இல்லப்பா. அப்ப என்ன பண்ணுவோம்? Add. Suppose for the month of October ன்னு கொடுத்திருந்தா ரெண்டாவது பிரான்ச். அந்த ரெண்டாவது பிரான்ச்ல இந்த மந்த்ல ரிசீவ் பண்ணிருக்கோமா? Yes, received. So then also you need to add. Okay. Suppose if they say that it is received in November, then இப்ப இந்த மந்த்ல வேல்யூல ஆட் பண்ண மாட்டோம். We just write a note that interest is taxable on receipt basis based on the debit note. So in the month of November, debit note is issued and there we need to add that 1 lakh, like that we will mention. Okay. Next, purchase of car. Sir, so far it is outward supply, sir. Now it is inward. Ida, sir. Okay, say this. So this we will see later. Purchase, no. Insurance service, the company paid, again purchase. Idu procurement. The company sponsored a sports event where it paid. These are all purchase transaction. Now for sale transaction, you tell me what is the value. 4,54,500 plus 3 lakhs plus 50,000 plus 1 lakh, that is 9,04,500. So see the answer, 9,04,500. And on this there is GST. What is the rate of GST? So here all transactions are interstate unless otherwise specified, which means that 18%. So 9,04,500 into 18%, 1,62,810. So we got first statement, second statement, output tax. Now net GST. For net GST we need input tax credit. Now analyze the purchase transaction. First transaction purchase of car. A car was purchased in the name of the company for use by the director. The total cost of the car was 10,50,000 inclusive of IGST amounting to 1,50,000. Can they take ITC? Why? Car is a motor vehicle, capacity does not exceed 13 and it's not covered under 3 exception: further supply or use in the business of transportation of passenger or imparting driving skills. First is the inward supply, taxable under FCM, but we cannot take ITC. Why we cannot take ITC? Because it is blocked credit. Understood? Then next, insurance service. The company paid for insurance of the above new car amounting to 25,000. Again, it is supply, inward supply, taxable FCM, but ITC cannot be taken. Why ITC cannot be taken? As the car purchased is not eligible for ITC, insurance service in relation to car is also not eligible for ITC. The company received interstate supply of service used for business purpose on which GST paid was 45,000. Said credit was not restricted under any provisions. Can they take ITC? Yes, directly GST given 45,000 ana adu vandu IGST. Yes, here everything is IGST only. The company sponsored a sports event where it paid amount of 2 lakh to the event organizers. Exempted sir, only recognized sports body is exempted, sir. But here the company sponsored a sports event where it paid 2 lakhs to the event organizers. We don't know about the supplier. Means supplier is other than body corporate. Recipient is body corporate or firm. So it will be inward supply, taxable under RCM. So say this, sponsorship services 36,000. And can we take ITC? Yes. Sir, RCM also we can take ITC 81,000. This 81,000 we can adjust against 1,62,810. Okay. Clear? And what is their liability? 1,62,810 minus 81,000 plus 36,000. Yeah, 36,000 RCM. So that will be the net GST payable 1,17,810. Got it? RCM la pay பண்ணது credit எடுத்துக்கலாம். ஆனா அத வந்து FCM liability la set off பண்ணும். Now RCM தனியா we have to pay by cash. Okay? Yes sir. First taxable. ஏனா இது வந்து recognized sports body ன்னு கொடுக்கல. ரெண்டு condition. Supplier should be other than body corporate or firm. Supplier கொடுத்திருக்காங்களா? இல்ல. அப்ப other than தானே. Body corporate or firm கொடுத்திருக்கணும். கொடுக்கலனா other than body corporate or firm. Condition satisfied. Recipient should be body corporate or firm. Recipient is Consultees Private Limited body corporate. So it is RC. Clear? Yes. Then, so can you try these three questions? 48, 49, 50. Yes. Can we conclude for today? Okay. And you have, like we completed almost all the concepts. These are the important concepts to be covered.